Good morning, everyone. Generally, many times now, I will be asking myself, why will CA final students fail? Lot of students, they are putting hard work and they will, everyone is putting the same amount of hard work, why will they fail? So, I used to get this doubt. Everyone will prepare, everyone will get up in the morning, everyone is reading, why will they fail? Then I got the answer from my students itself. So in the classroom, it is like they will pay money to attend the classes, but they will not turn up. You understood? They will pay money for attending the classes. Same, just 4 days before itself, you would have seen, place was not there to sit. And today, lot of place is there to sit. I said houseful board and all you keep like that. Just 4 days. Tables have turned. That shows the dedication. So, who will stand till end, the one who is dedicated and the one who is having that patience. Basically, you guys don't have patience. Now, how success will come? Success will not come. Definitely, it should not come. Okay, it should not come. Even, YouTube live also I am seeing, initially there will be lot of excitement, hype. They tortured me from February. Sir, when you will take, sir, when you will take, sir. I am waiting, sir. We are waiting, sir, like that. And I started. But, YouTube live, first day I attended. Next day onwards, okay. Automatically they will, okay, we will see later. Anyhow, he is going to keep it there only. No. This procrastination. This is something which is actually killing your career. And I can also be like that. Every teacher also can be like that. But we are not like that. That's why we are successful. I am not telling about teacher. Every teacher is successful. They are growing. You know why? Because they are dedicated, they are disciplined, and they really wanted to do it for the students. But it is the students who really not ready to take. There are many teachers who are putting everything in the YouTube. They are taking it freely also. And we are giving it, sir, whatever 500 you pay, that is over in the AC itself, sir. We are not getting anything. But even then, if they are not paying, it's okay. I would have thought maybe they are not serious, etc. But just see the classroom, now you will understand. So this is what shows the dedication, and of course, till the end you are consistent, you will get success here. You will get. If you are not getting, ask me. I will reply to that. Dedication and consistency are the two elements which you all should have. Till the moment you are writing exam. After writing exam, who will ask you? Be happy. Enjoy your life. I requested 4 bloody days. That 4 bloody days also people are not able to sit, means you can understand to what extent they are showing their dedication towards their life. You understood? I don't have any problem. I am doing my job and I am going happy. I will be very happy. After this batch, some other batch will come. Thereafter, yet another batch will come. If nothing is also not there, I will do some work. If no work is possible, I will work as a security and I will live my life happily. I don't have any problem. I will be happy because I know my path. So because I am a hard-working guy here, and that is a confidence I have. So therefore, some work I will do and I will survive. But I am feeling pity on my students only. What you will become, I really doubt. Okay, fine. So therefore, coming back to our regular discussion. See, some students are telling, had you told us before, we would have come for face to face. But it's okay. I collected a fees, so I have to reserve the seat for them. So, fine. So, we are left with few chapters. So, morning itself too much motivation, no? So, coming back to this. And coming back to our discussion, we are left with few more chapters to be completed. Look into one very, very important chapter. Voice is breaking. What should we do? Completely my throat also gone. Continuous 3 days. That's why. And look into section 11. Exemptions under GST. In this exemptions under GST, always whenever you are writing about the exemption, you ensure that you are giving the reference of section 11. Section 11 of CGST Act read with notification number 12 of 2017, and you need to give proper justification also whenever you are writing the exemption, not just it is exempted. So few points about that also you should be writing. So say this, section 11, government on the recommendations of the GST Council can notify goods or services exempted from GST. And there is one more section, section 11A of CGST Act. Section 11A of CGST Act says that government on the recommendations of the GST Council may not recover GST, short levied or not levied, as a past general practice. Past general practice means usually say or maybe some years before also there may not be any tax on that particular transaction, and people were accustomed in not making payment of GST on that particular transaction. But suddenly government is bringing that in the Finance Act that you need to pay GST on this transaction like that. But so far people were not paying. Now what people will do, definitely they will make a protest. So when they make a protest, immediately government will tell, okay, so we can do that, but we can't do it because we have to take the parliament approval. Whenever the parliament proceeding is happening, at that time we will place a request in the parliament, because this will come through a Finance Act amendment. So Finance Act amendment means again anything out of that they need to go to the parliament only. For that reason, so far this provision was not there, and they added wherein no need to go for parliament approval. So on the recommendations of council, government itself can waive off or can reduce the rate. That is this. Government on the recommendations of GST Council may not recover GST short levied or not levied as a past general practice. As a past general practice. Then next we have some exemptions, and these exemptions, so I have given like sector wise exemptions. Look into the first one, agriculture related services. So any service in relation to agriculture or agricultural produce is exempted. So that is, I am providing service in relation to agriculture, or I am providing service in relation to agricultural produce, and I receive some money towards that. Whatever money that I am receiving, that will be exempted. And so here agriculture is not exempted, because agriculturist is not at all required to pay any GST, because they are exempted from registration. There is one agriculturist and they are carrying out agriculture, or there is some agricultural produce. I am providing the service in relation to agriculture or agricultural produce. What is the meaning of agriculture? Agriculture means the carrying out cultivation or rearing of life forms of animals. For what purpose rearing of life forms of animals? For food, fiber, fuel, raw material, or any other similar products. So sericulture, silkworm farming will come because it is for fiber, sheep farming will come because that is for fiber, and then poultry farms, fisheries and all will come because it is for food, like that. Cattle rearing for the purpose of fuel, so or honeybee farming for the sake of raw material. So all these, even though not cultivation of plants, rearing of all life forms of animals. Rearing means taking care of for reproduction, and all forms of animals except horses. Why horses is excluded? Why only horses is excluded? Horses is no way connected to agriculture. That's why horse is excluded. Why only horses? Because only horses are allowed for rearing, and all other animals which are there like wild animals and all not allowed for rearing, or some endangered species of animals also not allowed for rearing. That's why it is not given. Whichever animals which is allowed for rearing, in that, so horses is no way connected for food, fiber, fuel, raw material or other similar products. That's why it will not come under agriculture. Whereas agricultural produce means the primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential characteristics but makes it marketable for primary market. So that is the meaning of agricultural produce. For example, tender coconut is agricultural produce and which no processing is done, and that tender coconut we keep for some more days and we peel off the layer and we get the coconut. So that coconut will also come under agricultural produce, because that process is usually done by the cultivator, which does not alter its essential characteristics. And paddy is agricultural produce, but rice is not an agricultural produce, because paddy to rice is not usually done by cultivator, it is done by the rice mills. Here they use the word usually done by cultivator. So paddy is an agricultural produce, but rice is not an agricultural produce. Then in case of rice, only loading, unloading, packing, storage or warehousing is exempted, but other activities will not be exempted, even though rice is not an agricultural produce, but they have given this. What about these activities for agricultural produce, which is already covered in the first point? Because any service in relation to agriculture or agricultural produce is covered. So loading, unloading, packing, storage of agricultural produce is already covered under the first point itself. So therefore, rice only separately we have these 4 activities: loading, unloading, packing, warehousing. Also one more, warehousing of minor forest produce and warehousing of cereals, pulses is also exempted. Is cereals and pulses agricultural produce? No, because these are processed like dals, etc. Whereas minor forest produce is also not agricultural produce, because minor forest produce is something which is available in the forest. No one is going there for cultivation of that. So even though these 3, rice, cereals and pulses, minor forest produce is not agricultural produce, but its warehousing is exempted. Then artificial insemination of livestock. So through injections they give the reproduction. So that particular injections, so other than horses, artificial insemination other than horses, because horses is anyhow excluded from agriculture for that reason. So these are the 5 exemptions that we have in relation to agriculture services. In that you can see the note, warehousing of fruits and vegetables and other agricultural produce is covered in the first point itself, that is service in relation to agriculture or agricultural produce. Then next one you can see number 2, insurance services. Insurance services, point number 1, so there is NPS trust, National Pension System Trust, which will be collecting some premium for the providing insurance, for the purpose of providing insurance, as well as they will also provide pension services. So whatever money that is collected by them, that is premium collected, is exempted fully. Then group life insurance, so people will form an insurance fund, group of people, and they will contribute monthly towards that particular fund. And this group insurance funds are famous between many professions also, even CAs also, but not all group insurance funds is exempted. Only Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces, towards that group insurance fund the contribution made will be exempted. Then service of general insurance business. So general insurance business provide under government notified schemes. So first of all it should be a government notified scheme, and the general insurance can be provided by any insurance company, whether it be a private insurance company or a government insurance company, but the scheme should be notified by government. And definitely this scheme will be targeted for agriculture and farmers, below poverty line, women and unemployed. For example, failed well insurance, agriculture and farmers, and hut insurance, below poverty line. Like that they will be giving the scheme. By reading the scheme itself you will know that it is notified by government. Therefore the premium collected under that scheme will be exempted. Then life insurance under various government schemes. So there is a life insurance company which is providing life insurance service. Again that scheme is notified by government. How do we know that it is notified by government? That scheme will end with the word Yojana, Pradhana Mantri Bima Yojana, Aam Aadmi Bima Yojana, like that. So definitely it is a government notified scheme. The premium collected will be exempted. Apart from that extra, we have to remember one more point, that is micro life insurance. Micro life insurance means, like small premiums will be collected, where the sum assured is 2 lakhs, does not exceed 2 lakhs, means the maximum sum assured will be 2 lakhs. So the premium collected will be exempted. Then insurance services provided to government is exempted, but insurance services to government means government also will take insurance on the property or insurance on the life of the people. So that premium paid by them will be exempted. And next, F, reinsurance of any exempted insurance is also exempted. So whatever the 5 points that we have seen above, in these 5 cases, if the main insurance is exempted, its reinsurance is also exempted. For example, I am insurance company A, I am providing insurance to government in relation to their property, and the outlay, that is sum assured, is 100 crores. I have huge risk. For that reason I'll take reinsurance with another insurance company B for 40 crores, and whatever premium I receive, some premium I will share with them. So my premium is exempted, so the premium which I shared with them is also exempted. So therefore, as the main insurance is exempted, its reinsurance is also exempted. And in relation to that, they have given one clarification. That clarification says that retrocession is also exempted. What is retrocession? That is reinsurance of a reinsurance. So reinsurance of a reinsurance, further reinsurance is known as retrocession, that is also exempted if the main reinsurance is exempted or the main insurance is exempted. Again I am repeating, so I provided government services to government, insurance service to government, which is exempted. Now I paid money to another reinsurance company, that is also exempted. That reinsurance company in turn paid money to another reinsurance company, that is also exempted. So last point you can see, reinsurance includes retrocession, that is reinsurer further transferring risk to another insurer. Therefore, if reinsurance is exempted, retrocession is also exempted. Then next you can see G point, service provided by business facilitator or business correspondent. Business facilitators and business correspondents will be appointed by insurance company for the purpose of expanding their business operations, and these people receive commission, and if they are working in rural area, the commission earned by them will be exempted. Service provided by business facilitator or business correspondent to insurance company in rural area is exempted. The same point we have even for banking services also. Then look into banking and other financial services. Point number 1, transaction in money. So transaction in money, if it is not for consideration, then it is neither goods nor services. For example, I am having $100 and you are giving me $1 equals to 85. So that is a market rate. $1 equals to 85, $100 I am giving you 8,500 you have given. It's a pure transaction in money without any consideration. What if you are collecting some currency conversion fee or currency markup fee? Then that is an extra consideration that will become supply of service. Purely transaction in money is neither goods nor services. But in the transaction in money, if there is some extra consideration, that consideration will be treated as supply of service. If that consideration is represented by way of interest or discount on loans, advances, deposits, then it will be exempted. What if that is other consideration, like say for example NEFT charges, RTGS charges, credit card charges, debit card charges, DD commission, etc. all those will be taxable, and even credit card interest is also taxable. Generally interest is exempted, but credit card interest will be taxable. And remember, only discount is exempted, but discounting charges is not exempted. Discounting charges will be taxable. For example, you are taking a bill of exchange and you are discounting that bill of exchange with the bank, for which the bank will be charging some discount, means nothing but interest they will deduct upfront, and then in that case no issue. But if they say discounting charges, for doing this discounting they will collect some charges, that charges will be taxable. So for a separate consideration, and it is treated as supply of service, and if the consideration is interest or discount, it is exempted. Any other consideration including interest in case of credit card, that will be taxable under FCM. Suppose if it is without consideration, such transaction is neither goods nor services. Next, services provided by banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. Under PMJDY scheme, some people were given the nil balance accounts. To those savings account holders, if the bank provide any services for which the consideration collected by them will be exempted, that is this. Then foreign exchange transactions. Foreign exchange transactions between whom? Between banks and forex dealers. Banks and forex dealers will be exempted. Only between banks or forex dealers and the customer, that will only be taxable. Then next one, fourth point, services by an acquiring bank to any person in relation to settlement of an amount up to 2,000 in a single transaction. That is, whenever you are using your debit card, credit card, charge card or any other card, so when you swipe the card, so in that case there will be some processing fees. Always there will be processing fees, but on that processing fees GST will be exempted if the swipe amount or the transaction amount is up to 2,000 rupees. For example, if the transaction amount, means whatever is the swipe amount is up to 2,000, even then processing fees will be there. Processing fees is not exempted, but the GST on processing fees will be exempted. That is this. So GST on processing charges for a transaction up to 2,000 is exempted. Then there is a intermediary. That intermediary is located in multi-service SEZ. So multi-service SEZ in Gift City, and that is only multi-service SEZ. So in that multi-service SEZ, there is a intermediary who is having IFSC status, and they are providing services to their customers outside India. For that they will be getting some consideration. Then in that case that consideration will be exempted, but they should not be dealing with Indian rupees, they should be dealing with foreign currency. Won't it become export of service? No, it won't become export of service, because in case of intermediary services under section 13, that is supplier in India, recipient outside India, the place of supply under section 13 will be location of supplier. As a supplier is in India, it will never become export of service. In order to become export of service, the place of supply should be outside India. So service by an intermediary of financial service located in a multi-service SEZ with IFSC status to a customer located outside India for international financial service in currencies other than Indian rupees. Such intermediary can receive consideration either in Indian rupees or in foreign currency for their services, and their services will not fall under export of service. Why? Because place of supply will be location of supplier. Then next, here one more point which is actually coming in service under RCM, but you can write here itself for connection point. So point number 6 you can write services provided by business facilitator or business correspondent, services provided by business facilitator or business correspondent or agent of business facilitator or agent of business correspondent. So in rural area is exempted. Okay. So this point we will come across in list of service under RCM. There we have exemption related to this. You can connect it here. Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent earning commission from rural area will be exempted. Okay. So they are not required to pay any GST. But here if you see insurance, there is no agent of business facilitator, agent of business correspondent, just the business facilitator, business correspondent. But in banking service, if you see business facilitator, business correspondent, extra what we have is agent of business facilitator and business correspondent. Then we are moving on to health services. In health services, there are two exemptions. Exemption number 1, healthcare service provided by a clinical establishment or an authorized medical practitioner or paramedics, including ambulance service, will be exempted. What is a healthcare services? Healthcare services means pre-treatment, before treatment, that is diagnosis, then treatment, then care. Care means post-treatment. For what? For any disease, illness, injury, pregnancy. In what? In any recognized system of medicine. So that can be any recognized system of medicine like Siddha, Unani, Ayurvedic, etc., homeopathy. So that will be exempted, including transportation in ambulance. So transportation in ambulance may be as a part of healthcare service or separately also ambulance is given. So whether the transportation of patient in ambulance is a part of healthcare service or separately, whatever it may be, means the hospital is not providing any healthcare services. They just provide the ambulance service. There are a lot of private ambulance operators who provide only ambulance services. That is also exempted. Till the time it is transportation of patient, it is exempted. If it is transportation of dead body in the ambulance, it is not a supply. Suppose if it is transportation of a passenger in ambulance, then it will be taxable, because there is one question like that in ICAI. No, they have given one MCQ, that is if an ambulance is transporting the patient, drop the patient in the hospital, while returning they will be boarding in passengers and collect 500 rupees from each passenger, whether it will be taxable or not. It will be taxable. Only transportation of patient in ambulance is exempted. What about renting of ambulance? For renting of ambulance, we don't have any exemption. Renting of ambulance will be definitely be taxable. We don't have exemption in that regard. Only transportation of patient in ambulance is exempted, whether it is part of healthcare service or not part of healthcare services. Then coming back to this. So first, healthcare service means what? Treatment, before treatment, that is diagnosis, after treatment, that is care. For what? Any illness, injury, deformity, abnormality, including pregnancy, in any recognized system of medicine. It includes what? Ambulance services. And one more point you can see, it excludes cosmetic surgery, plastic surgery and hair transplantation. However, it includes, that is the healthcare service includes these three, that is cosmetic surgery, hair transplantation and plastic surgery. If these are to these are carried out to restore the anatomy of body parts affected due to congenital defects, like is by birth or developmental abnormalities during the growth or any injury or trauma. For example, fire accident, for that they have carried out the plastic surgery. Definitely it is treated as healthcare service and it is exempted. That is the meaning of healthcare service. You need to remember. You need to remember so far agriculture definition, agricultural produce definition, and this healthcare definition also you need to remember. Because in exam when they give the question, you need to write some justification. For that you need to connect to the definition and you need to write. So healthcare services by clinical establishment. What is a clinical establishment? Any place where healthcare service is provided is known as clinical establishment. Authorized medical practitioner. Who is an authorized medical practitioner? The one who is having minimum MBBS degree and is registered with the medical council is known as an authorized medical practitioner. Or paramedics. Paramedics is the person who assists the authorized medical practitioner, like nurse, lab technician, physiotherapist, compounders. Those people will come under paramedics. Even their service is also exempted. And whether all the healthcare services and other service also which is part of healthcare service is exempted. Yes, everything is exempted. Even food supplied to inpatients. Inpatients means those who are admitted in the hospital is exempted. Even medicine sold to inpatients is also exempted. Even room provided to them is also exempted. But in case of room, the charges should not exceed 5,000 rupees per day. If it exceeds 5,000 rupees per day, entirely it will be taxable. In everywhere in exemptions, you remember wherever the monetary limits comes, if you are crossing that monetary limit, entirely it will be taxable. Only exception is incubating services. But in all other place, if you cross that limit, entirely it will be taxable. Suppose if it is ICU, CCU, ICCU or NICU, suppose if it is ICU charges, it will be always exempted, that 5,000 point will not be applicable. If it is other room charges, the charges does not exceed 5,000 rupees per day, exempted. The charges exceeds 5,000 rupees per day, then entirely it will be taxable. Then you can see, so another exemption, healthcare service in relation to animals or birds. So far whatever we have seen is healthcare service in relation to human beings, healthcare service in relation to animals or birds is also exempted. Then there are 3 circulars. Number 1, renting of room to inpatients in hospital and food supply to inpatients is part of healthcare service and it is exempted. But renting of room to inpatient is exempted to what extent? Only to the extent of 5,000 rupees per day, not indefinitely. Then service provided by consulting doctors to hospitals is exempted. There is a consulting doctor who will not directly provide the services to the patient, will be providing service to the hospital, and the hospital will provide service to the patient, means patient will pay 500 rupees. Out of that 500 rupees, say 300 rupees will be shared by hospital with the doctor. 500 rupees received by hospital is also exempted. That 300 rupees received by the doctor from the hospital is also exempted. Then services provided by way of ART or IVF. ART, that is assisted reproductive technology or in vitro fertilization, that is mainly to treat infertility. So this is covered under healthcare services and therefore it is exempted. Then next one, so exemption with respect to rehab services. So these rehab professionals are not doctors, they are psychology experts. They will be working in medical establishments, they will be working in education institutions, they will be working in rehab centers for the purpose of providing the care or counseling, so to cure the mental diseases, and whatever money that they are collecting will be exempted. If they are working in healthcare like establishment, medical establishments, so it can be public or private or trust owned, whatever it may be, it is exempted. Education institutions also, let it be government or private or trust owned, it is exempted. But rehab centers, only it should be government or trust owned rehab center, then only their service will be exempted. If they are working in private rehab center, then it will be taxable. Service provided by rehabilitation professionals in private rehab center will be taxable. Then next you can see entry tickets. So following are the entry tickets which are exempted. Irrespective of ticket price, some entry tickets are exempted. If the ticket price does not exceed 500 rupees, some tickets are exempted. First, irrespective of the ticket price, only 6 entry tickets you have, you need to remember. 3 related to animals: zoo, wildlife sanctuary, tiger reserve, these 3. And then 3 places: museum, national park, and then we have protected monuments. So these 6 places, entry ticket is exempted, whatever may be the ticket price. But remaining, we have 9 entry tickets which are exempted if the ticket price does not exceed 500 rupees per person. What if the ticket price exceeds 500 rupees per person? Entirely it will be taxable. So what are they? 4 performance related: musical performance, theatrical performance, then concert and dance performance. Okay, concert, musical performance is connected only, and therefore 4 performances. What are they? Musical performance, then concert, theatrical performance and dance. Then 4 events. First 4 performance, then 4 events. 4 events, that is circus, award function, pageant and sporting event. Then we have planetarium, 1 place. These are the 9 entry tickets. Ticket price is exempted. Then if the ticket price does not exceed 500, then you have pension services. In this pension services, there are only 2 pension schemes which are exempted. One is central government pension scheme, that is Atal Pension Yojana. Another one is state government notified pension or operated pension, that is exempted. There is something called as unified pension scheme, like that, newly launched. Whether that unified pension scheme is given in the list? No. Suppose in exam if they give unified pension scheme, don't conclude that it is a notified pension scheme, therefore it is exempted. No, it will be taxable. Okay, only Atal Pension Yojana and state government operated pension fund is exempted. Then services by specified organizations. So these are the specified organizations, that is services provided by Employee State Insurance Corporation, Employee Provident Fund Organization, NCCCD and CMPFO, that is Coal Mine Provident Fund. NCCCD is National Center for Coal Chain Development. So all these organizations, if they collect any amount, that will be exempted, including Foreign Diplomatic Mission in India. Who is Foreign Diplomatic Mission in India? UN or international organizations or embassies or consulates. they are also exempted. So whatever money that they are collecting, they are not required to pay GST, they are exempted from payment of GST. That's where they are called as UIN holders. So their outward supply will be exempted, but on their inward supply, whatever GST paid, they can get it as a refund. Then next, charitable and religious services. In this charitable and religious services, there is a entity which is registered under section 12AA of Income Tax Act. That particular entity, charitable trust, either 12AA or 12AB, wherever 12AA comes, the 12AB will be coming there. So service by an entity registered under 12AA or 12AB of Income Tax Act by way of specified charitable activities. Only specified charitable activities will be exempted. What are specified charitable activities? Number 1, public health. Number 2, that is advancement of religion, spirituality and yoga. Then all Baba Swamijis will come in this aspect. Public health means like it can be even awareness. So health awareness also will be coming under public health. Then educational programs. Educational programs to whom? Orphans, physically, mentally traumatized persons and prisoners and persons over 65 years residing in rural area. What if persons over 65 years residing in urban area? Then it will be taxable, rural area. Then environmental preservation, that includes wildlife protection, etc. Then point number 2, services by an old age home. Who is running that old age home? Either central government or state government or a charitable trust. How much they are collecting per month per person? So that is up maximum 25,000, up to 25,000 rupees per month per person. So all inclusive. Then it will be exempted. But here you need to remember, age is 60 years or more. So say this in the second point, they use the word greater than or equals to 60 years. Whereas in the first point, they use the word greater than 65 years. Greater than 65 years. So in the first place, that persons over 65 years residing in rural area, that is greater than 65 years. Whereas here, old age home point, it is greater than or equals to 60 years. Don't get confused between these two. Then service by any person by way of conduct of religious ceremony. So purohit or priest, etc., they conduct religious ceremony, the money earned by them will be exempted. Services by specified organization for religious pilgrimage. What are considered as religious pilgrimage? Kailash, Manas Sarovar and Hajj Yatra will be considered as religious pilgrimage. Then incubator and incubatee services. So there is an incubator who is owning the incubate. Incubate is a place where research is carried out. Incubator is the owner of that particular incubate. Incubatee is the one who is providing services inside the incubator, and that is inside the incubate. Incubatee services will always be exempted if it is up to 50 lakhs. Services provided by incubatee is exempt up to 50 lakhs. What if it crosses 50 lakhs? Here alone, the excess is only taxable. In all other places, if it crosses a limit, entirely it is taxable, but here only the excess will be taxable. And there are two conditions. Condition number 1, previous year they should not cross 50 lakhs, and this exemption is applicable for a period of 3 years from the agreement date. Then services provided by incubator will always be exempted if they are approved by Government of India. So mostly there are two approved incubators, Technology Business Incubator and Science and Technology Entrepreneurship Park. These are the two approved incubators, and services provided by them to any person, fully it is exempted. So you can see the illustration here. So first year gross receipts by incubatee 60 lakhs. By default first year they will get the exemption because previous year it is 0, and 50 lakhs will be exempted. So only the remaining 10 lakhs will be taxable. Whereas second year they will not get exemption. Why? Because second year we need to see the first year. First year it does not exceed 50 or exceeds 50, exceed 50. That's why second year you will not get any exemption, and therefore 40 minus 0, 40 lakhs will be taken as the taxable value. Third year gross receipts of incubatee will be 70 lakhs, and whether they will get exemption? Yes. Previous year it does not exceed 50 lakhs. So therefore third year they will get exemption, 70 minus 50. So 20 lakhs will be taken as the taxable value. Then next one, education services. You can see in education services, point number 1, services provided by an education institution. To whom they are providing the services? To students, faculty and staff. That will be exempted. What is the meaning of an education institution? Category 1 educational institution up to 12th standard or equivalent. Starting can be anywhere. It can be nursery, daycare, or LKG, pre-KG, etc. anywhere. But the ending point should be 12th standard or equivalent. And category 2, education for obtaining a qualification. That qualification should be recognized by law. For example, there is a ACCA center. The institution is in India. And if you pay registration fees to ACCA, will it be taxable or exempted? Taxable. Why it will be taxable? Because that is not a qualification recognized by law. Then category 3, approved occasional education. So what is the meaning of approved occasional education? You can see in the next page I have given. Approved occasional education means a course run by ITA or ITC, Industrial Training Institute or Industrial Training Center, which is affiliated to NCVT. NCVT refers to National Council for Vocational Training. SCVT refers to State Council for Vocational Training. Like how in school there is State Board CBSE, like that NCVT, SCVT, offering courses in designated trades under Apprentices Act or modular employable skill course under Ministry of Skill Development and Entrepreneurship. So they are basically approved occasional education, and these 3 education institutions, if they are providing services to students, faculty and staff, is exempted. If they provide service to any other person, for example, there is a college which is providing services to the corporates by way of allowing the corporates to do the placement, so that is recruitment, etc. For that, whether it is taxable, of course it is taxable, because the recipient is other than student, faculty and staff. So therefore it is taxable. If it is to students, faculty and staff, any service including transportation, catering services to them, or any other fees that is collected from them, everything will be exempted. Then what about the application fee or entrance fee collected, or fee collected for issuing eligibility certificate? Basically these fees are collected from the persons who are going to apply for the institution. So but they are not at the students, even then it is exempted, yes, because they are coming under prospective students. So application fee or eligibility fee or prospectus fee, all these are also will be exempted because they are going to join in the college, so or join in the school, so that will be exempted. Same way, migration certificate or a transfer certificate, so they are leaving the school. As they are leaving the school, they are paying this. So even though they are not students of the school, at that time when they pay transfer certificate fees, etc., but they are ex-students, so due to that reason it will be exempted. But ex-student should be like only for this purpose. So suppose if 2 kids have grown up and they are getting married in the school, and if they take school premise on rent, the rent and all will not be exempted, because they are big ex-students. Got it? So X means like small x only, very near. Got it? So that is this. Then service provided to an education institution. First one is services provided by an education institution. Next one is services provided to an education institution. In this service provided to an education institution, transportation, catering, security and housekeeping, these 4 services only to category 1 institution it will be exempted. So security and housekeeping should be within the premises. And then admission to within the premises means, for example, a school is conducting like in an auditorium one function, annual day function. For that annual day function, if they receive housekeeping or security service, can they take it, whether it will be exempted under this, even though category 1, school is a category 1 institution, but it is not within the premises. Due to that reason it will be taxable. Whereas catering and transportation, that will be exempted even to the student event also. Suppose if they receive catering service for the student event somewhere in an auditorium, whether it is exempted? Yes, because catering need not be within the premises, transportation need not be within the premises, so therefore security and housekeeping only should be within the premises. What if these 4 services took other category institutions? It will be taxable. It is not exempted. Then admission to or conduct of examination, all 3 category institutions it will be exempted. Online periodicals and journals, only category 2, because online periodicals and journals are required only for category 2. Category 1 and category 3 it is not required. Then next one we have exemption provided to services supplied to an education institution, including Anganwadi schools. Anganwadi schools will be providing daycare services to the children, so kids, and they will also be providing food facility to the kids, so that they will be receiving catering services. So they will come under category 1 institution. So category 1 institution, catering service provided to them is exempted, but they may not pay the money. The money may be paid out of government grants or corporate donations, whatever it may be, but the service is provided to them only now, so therefore it is exempted. That is this circular. Then IIMs. IIMs are also treated as education institutions, so any services provided by them to its students, faculty, staff is exempted. However, if the IIMs are providing courses wherein a degree or a diploma is given, then only it is exempted. Means long term courses greater than 1 year, it is exempted, so where the diploma or degree will be given. What if it is a short term courses less than or equals to 1 year, which will be taxable, where there is only participation certificate. So you see the timing. So greater than 1 year exempted, less than or equals to 1 year it will be taxable. Then service provided by an education institution by way of conduct of entrance examination. Generally, some education institution will conduct entrance examination for the purpose of giving admission there. But those people who write the entrance exam are not yet the students. Even then, the entrance exam fee collected from them will be exempted, but it should be by an education institution. What if there is an examination body whose job is only to conduct the entrance exam and give the score? Based on that, they will be joining in the colleges. Whether those examination bodies also will come under education institutions? Yes, because for the limited purpose of conducting the entrance exam, so without writing the entrance exam, they will not become a student, they will not get a qualification. So it is part of curriculum for obtaining a qualification. So those examination boards like National Board of Examination or National Testing Agency will also be treated as education institution, and the fees collected by them, entrance exam fee collected by them, is exempted. Then next one, point number 5, amount paid to training providers under DDUGKY scheme, Deen Dayal Upadhyaya Gramina Kausalya Yojana scheme. So there will be some volunteers who will go to the rural area and will be providing training, for which they receive some honorarium or some charges from the government, that is exempted. Next one, any service provided by National Skill Development Corporation, NSDC, and below NSDC there are a lot of sector skill councils, and in each and every sector skill council there will be 3 types of bodies. One is training body, which will conduct the coaching, and next is assessment body or assessment agency, which will conduct the exams, and awarding body, which will be giving the certifications. So these 3 people providing the skill courses will be exempted: awarding body, assessment agency, training body. Previously we did not have, they were calling it as, like the assessment partner or training partner, like that they were calling. So but they have just brought in awarding body, assessment agency, training body. And in relation to any scheme implemented by NSDC or any vocational skill development course under national skill certification or any national skill qualification approved by NCVT, that is National Council for Vocational Education and Training. So these 3 people are exempted. That's the latest amendment. Then services by assessment bodies under skill development initiative. Under skill development initiative, some people will be brought into the assessment body and they will do the review of curriculum and they will suggest the changes that will be imparted to the students. So these assessment body people will receive some money from government, that is exempted. That is this services by assessment bodies under skill development initiative scheme. Then point number 8, affiliation services provided by Central State Education Board to a school established or owned by government. Very, very important. So affiliation fees, usually CBSE and state board. Okay, so CBSE as well as state education board, they will be collecting affiliation fees from all the schools, private schools as well as government schools. But which fees is exempted? Only collected from school which is established, owned or controlled by whom? Central government, state government, local authority. GA means government authority, GE means government entity. So government authority, government entity, so means what? Government authority, government entity, both are body or authority or board established under an act of parliament or state legislature, and or in which the government has invested greater than or equals to 90%. But the difference between these two is that government authority will carry out the functions under constitution, whereas government entity will be established for the purpose of promotion of trade and commerce. So that is the difference between these two. But whatever it may be, so if the affiliation service is provided by government board, central or state education board, to the schools, then it is exempted. What if they are providing to private schools and all? That will be taxable. So write down there, affiliation fees collected from private schools. Affiliation fees collected from private schools, is exempted. Affiliation fees collected from private schools is taxable. Affiliation fees collected from private schools is taxable. Only from the schools which are owned, established or controlled by these people, it is exempted. Then this is the latest amendment. You can see one point in this regard. These are the special points. Fee collected by ICA or ICMA is exempted as their education institution. However, fees collected by coaching centers or individual faculties will not be exempted and it will be taxable. Up to 12th standard, it can be in any board, either CBSE, state board, matriculation or ICSE. Private tuitions and home tuitions will always be taxable. Then next we are looking into services provided by government. Services provided by government. So now there is some change in the chart. So because only municipality or gram panchayat is covered under exclusion from supply. Sovereign functions of government means only municipality functions or gram panchayat functions. So services provided by government, either central government, state government or local authority, divided into two. So there are two activities which are excluded from supply. What are they? Panchayat or municipality as per constitution. So what is that as per constitution? Article 243G or 243W of the constitution or 11th and 12th schedule of the constitution. They have listed out some activities. By doing that activities, if they are getting some money, who is getting the money? Municipality or gram panchayat. That money collected by them will be exempted. Then another point is exempted or excluded from supply. Excluded from supply. Then liquor license granted by state government. So state government will be granting license to sell the liquor. That license fee collected by state government is also excluded from supply. Apart from these two, all other activities of government will be covered under supply. In those activities which are covered under supply, we have Department of Post. Services provided by Department of Post. In services provided by Department of Post, we have 3 exemptions. Only 3 exemptions. Rest of the cases it will be taxable. What are they? Inland letter, postcard, registered post or book post of envelope less than 10 grams. So this is no change. Previously also the same, now also the same. Other activities will be taxable. What are other activities of Department of Post? Speed post, express parcel post, life insurance, etc. that will be taxable. Then next one, services by Indian Railways. Services by Indian Railways, we have following are exempted. Services to individuals by way of sale of platform tickets or facility of waiting rooms, clock rooms, battery operated cars. So they will be providing platform tickets. So previously platform tickets was taxable, now it is exempted. And platform tickets, then next waiting hall charges, and number 3 clock room charges to keep the luggage, then battery operated car services. These 4 services, what are the 4? Platform tickets, clock room charges, waiting room charges, battery operated car services to the individuals is exempted when it comes to services by Indian Railways. Then second exemption, services by one zone or division to another zone or division. Generally railways are divided based on zones like southern zone, south central zone, like that they will be dividing the railway zones, and based on the division, again below that, like based on the zone there will be lot of divisions. We call it as junction, na? So like one junction will be one division, and one division to another division, one division to one zone or zone to division. So between them if there is any services, that is exempted. So services by one zone or division to another zone or division is exempted. Then maintenance services to SPVs. So we need to understand about this special purpose vehicles little bit. So what is this special purpose vehicles is about? Listen, generally there are lot of railway stations wherein some infrastructure will be built by special purpose vehicles. This infrastructure will not be built by Indian Railways, but this infrastructure will be built by special purpose vehicles. So special purpose vehicles. So what these special purpose vehicles will do? Will create the infrastructure, okay? Will create the infrastructure. So they will create infrastructure. For example, you keep in your mind, so lifts and escalators inside the railway station is created by a special purpose vehicle. Why can't railways do that? Railways don't have money. So therefore the special purpose vehicle who is having money, they will create that, okay? So create infrastructure, and what they will do? This special purpose vehicles will give the infrastructure for use to Indian Railways. So to Indian Railways, they will be allowing Indian Railways to use the infrastructure. So they will be giving infrastructure for use. So right to use infrastructure, right to use infra created, right to use infra created. Who created infra? The special purpose vehicles, and that will be given to Indian Railways, for which Indian Railways is required to pay some consideration, and this consideration will be payable for a period of time. That period is known as concession period. concession period. Concession period means they work on a BOT model, build, operate, transfer model. First they will build and they will be allowing Indian Railways to use it, and for a period of time, say 5 years or 10 years, for which Indian Railways will be paying money. So this is like recovery of money for the special purpose vehicles, and thereafter the entire infrastructure will be given to Indian Railways. During the concession period, the consideration will be received. What is the treatment of this particular consideration? This consideration is exempted. This consideration is exempted. They are not required to pay GST with respect to this. Okay. Now, this is one exemption. Is it service provided by government or service provided to government? It is services provided to government. So, this point is there under services provided to government. In third point I have given below, services provided by special purpose vehicle to Ministry of Railways by allowing them to use the infrastructure built and owned by SPVs during the concession period against consideration. That is this, special purpose vehicles gives the infra to Indian Railways for which they pay consideration, that is exempted for the concession period. Now what will happen is that, so this infrastructure is owned by whom? This infrastructure is owned by whom so far up to concession period? Special purpose vehicles, not Indian Railways, means they only should do the maintenance of it. But what happens, it is difficult for special purpose vehicles to do the maintenance, because every time when the lift is repaired, you cannot call them to come and do the repair. But Indian Railways will have lot of people with them who knows how to do the repair, etc., because they have a number of engineers with them. So therefore, what Indian Railways will do, will provide the maintenance services. Indian Railways will provide maintenance services to special purpose vehicles. Okay. So maintenance services they will provide, maintenance services to such infrastructure, maintenance services to such infrastructure. Okay. So Indian Railways will be providing maintenance services to such infrastructure for which the special purpose vehicles are required to pay maintenance charges. Why they need to pay maintenance charges? See, that infrastructure maintenance is the liability of the special purpose vehicle, but they are not doing it. So Indian Railways is doing, so for which they need to pay maintenance charges. What is the treatment of these maintenance charges? That maintenance charges is also exempted. So that is also exempted. So therefore, we have two transactions which are exempted. One is, so services provided by SPVs to Indian Railways for which they get a concession, consideration during concession period, that is exempted. During the same concession period, Indian Railways will provide the maintenance services to the infrastructure which is owned by SPVs for which they will be, like getting maintenance charges, that is also exempted. This is only services provided by government. You can see there maintenance services. Maintenance services to whom? SPVs, special purpose vehicles, in relation to infrastructure built and owned by SPVs. When? During the concession period. Then next, we have transportation of goods or passengers. For that we need to refer the transportation chart, and accordingly we will determine whether it is taxable or exempted. Then we have one more thing, airport or port services provided by government. You just write down here because it is not exempted, that's why I have not given. Airport or port services, airport or port services provided by government is always taxable. Airport or port services provided by government is always taxable. We don't have any exemption with respect to airport or port services, because airport is owned by Airport Authority of India, port owned by Port Trust of India, government. So but that is taxable fully, we don't have any exemption. Then apart from that, other services. So what are the four services we discussed? First, Department of Post. First classification, services provided by government, so is divided into two. Panchayat, excluded from supply, covered under supply. Panchayat or municipality functions, liquor license, excluded from supply. Other activities, covered under supply. In that, whatever is covered under supply, Department of Post, Indian Railways, transportation and airport or port services. So remaining services, other services to business entities, other services to other than business entities. Other than business entities means individuals will be exempted. So business entity means what? any person engaged in business is known as business entity. So you just write down there. So what is the meaning of business entity? Business entity means any person engaged in business. Any person engaged in business is known as business entity. Okay, and related to business entities, services provided by government to business entities, we have certain exemptions which is given in segment 3 under RCM. So please take that page. If you want to give the reference, you give the reference to that particular page. You can see that. You give the page number reference, refer page number 26. Refer page number 26. Services provided by government to business entities. So you need to understand as to which place we are right now in. First, Department of Post we covered, then railways we covered, transportation we covered, airport or port we covered, all other services to business entities. What if it is to individuals? It will be exempted. So services provided by government to business entities, RTI charges. There are 14 specific exemptions. In case of these 14 specific exemptions, entirely it is exempted. And thereafter we have 2 general exemptions. So look into 14 specific exemptions, RTI charges, that is RTI, you pay na. So to get your answer sheet, etc., that charges collected by government will be exempted. From you it is exempted. What if it is collected from business entities? That is also exempted. RTI charges is exempted. Interdepartmental services. So one department of central government or state government to another department of central government, state government. Just remember, income tax department receiving services from police department will be coming under exemption. Then right to use telecom spectrum. So right to use telecom spectrum allocated when? Before 1/4/2016. What is exempted? Both one-time charges and annual royalty. Then number 4, right to use natural resources. When it is allocated before 1/4/2016. What is exempted? Only one-time charges is exempted. That's the difference between third point and fourth point. In third point, telecom spectrum. In fourth point, natural resources. Third point, both one-time charges and annual royalty. Fourth point, only one-time charges. Fifth point, right to use natural resources to individual farmer assigned anytime. Both one-time charges and annual royalty. The difference between fourth and fifth is that fourth one is natural resources to any person, but here natural resources to individual. Fourth point, before 1/4/2016, but here anytime. In fourth point, only one-time charges. In fifth point, both one-time charges and annual royalty. Then point number 6, merchant overtime charges under customs, MOT charges. So customs department which will work after office hours or during holidays, they will collect some extra charges, that is MOT charges, which is exempted. Safety certificate charges collected by the safety officer for issuance of safety certificate. Consideration for tolerating an act. So government enters into contract and they are tolerating your breach for which they are collecting some money, that is exempted. Then share of profit petroleum. So profit petroleum refers to the concept of entering into agreement or right to extract petroleum crude or natural gas given by the government to a leaseholder. So first government will be giving to the leaseholder right to extract petroleum crude or natural gas, for which the leaseholder is required to pay 2 types of consideration. One is a share of profit, another is annual royalty. Annual royalty will be taxable because annual royalty is not exempted. So if you see assignment of right to use natural resources, only one-time charge is exempted, but annual royalty will always be taxable. So when annual royalty is taxable, what about the share of profit? Share of profit received by them will be exempted. That is this share of profit petroleum. So what is profit petroleum? Revenue from operations. So this leaseholder will extract the crude oil or natural gas and will sell that. That is called as revenue from operations minus cost petroleum. What is cost petroleum? Recovery of expenses by the leaseholder is known as cost petroleum. Whether that recovery of expense is also exempted? Yes. Cost petroleum is recovery of expenses by leaseholder, which is also exempted. Then next one. So the remainder revenue from operations minus cost petroleum minus royalty is known as profit petroleum. Out of that profit petroleum, a share will go to government. That share received by them will be exempted. And this is for what purpose they are getting? For assigning right to extract petroleum crude or natural gas. Government receives share in profit on extraction in addition to royalty. Then next one, point number 10, registration charges under any law for the time being in force. So that is like sub-registrar collecting registration charges for vehicles, or properties, etc., that registration, RTO collecting registration charges, then ROC collecting registration charges for incorporation of a company, all those things. Then fee for certain certificates, birth certificate, death certificate, driving license, visa and passport. So these are the 5 certificates which is given by government to the business entities. If it is given to individuals, anyhow it is exempted. If it is given to business entities on behalf of their employees, so that is also exempted. What are the 5 certificates? Birth certificate, death certificate, driving license, visa or passport. Then guarantee commission for guaranteeing the loans taken by PSUs. Public sector undertakings will be taking the loans. Those loans will be guaranteed by the government. For doing this guarantee, so this PSUs will be paying the guarantee commission. That guarantee commission received by them will be exempted. Then ERCC, excess royalty collection contractor. That excess royalty collection contractor is appointed by the government to do the swapping. That is, they will be receiving fixed royalty or variable royalty, but they will be paying the fixed royalty. So you can see here, so there is government, so government or state government, so then there will be a leaseholder, Now what state government will do? First it will assign right to extract natural resources, assignment of right to extract natural resources, for say rupees 10,000 per ton as royalty. So what is the type of royalty that is received by state government? Definitely they will be receiving a variable royalty in the sense depending upon the number of tons that is extracted. But government don't want variable royalty, they want fixed royalty. So due to that reason, they will appoint one swapping agent called as ERCC. What ERCC will do? ERCC will be receiving variable royalty, and what they will do is that they will pay fixed royalty to government. And say the variable royalty is 75 lakhs and the fixed royalty is somewhere like 60 lakhs. Now what will happen in this case? In this case, to government, that is central government, the leaseholder will anyhow pay GST under RCM. So GST on 75 lakhs. Who will pay? The leaseholder will pay anyhow GST on 75 lakhs, because in case of services provided by government to business entity, it is covered under RCM. So liability to pay GST is on recipient. So therefore GST on rupees 75 lakhs will be payable by leaseholder. So anyhow on 75 lakhs they are paying. So ERCC is not required to pay any GST. Why not required to pay? Because on 75 lakhs, what is the revenue to the government, state government? Only 60 lakhs. But leaseholder already paid GST on 75 lakhs. Excess only they have paid. So therefore ERCC is not required to pay any GST. Suppose if variable royalty is not 75 lakhs, if the variable royalty is somewhere like 50 lakhs, and already leaseholder will pay GST on 50 lakhs. Now fixed royalty is 60 lakhs. So ERCC will pay GST on what? ERCC will pay GST on 10 lakhs. So that is this. So ERCC is exempted to what extent? To the extent of variable royalty. So on the deficiency, what is the deficiency here? The fixed royalty is more than the variable royalty. On the difference, ERCC is required to pay GST. That is with respect to this. So you can see here, excess royalty collection contractor to the extent of variable royalty is exempted. Then fee for granting national permit to goods carriage. Generally permit charges will be collected for the purpose of traveling, that is yellow board vehicles to travel to other states. Those permit charges including national permit charges is also exempted. These are the 14 specific exemptions. Apart from these 14 specific exemptions, we have 2 general exemptions. Any service provided by government to business entity other than renting of immovable property, if that business entity turnover during the previous year does not exceed threshold limit, then it is exempted. Example, advertisement services provided by government to business entity. Advertisement services, nowhere it is in 14 points. So and that business entity is an ad agency and they started ad agency only this year. So previous year it is 0, means does not exceed threshold limit. Therefore this advertisement services provided by government to business entity will be exempted. Suppose if it is renting of immovable property, we should not check this first general exemption. Second general exemption we need to see, if the value of supply does not exceed 5,000 rupees per invoice, that is applicable even in case of renting of immovable property, and in case of continuous supply of services, it should be 5,000 rupees in a financial year. For example, government owns a shop. That shop is given on rent to a business entity, and whether it is coming under anywhere in the 14 specific exemptions, no. First general exemption also not applicable to renting of immovable property. Second general exemption is applicable for renting of immovable property, but in this case, what is the rent for the shop we need to see. Say the rent for the shop is 500 rupees only per month. Then in that case, is it taxable or exempted? Taxable. Why it is taxable? In case of continuous supply of services. What is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations is a continuous supply of service. For continuous supply of services, we need to see in a year 500 rupees per month means in a year it will be 6,000, which is more than 5,000. So therefore it will be taxable. Okay. So it is not exempted. And what if the rent is only 300 rupees per month? 300 rupees per month means 12 into 3, 3,600. It does not exceed 5,000 rupees. Therefore, it will be coming under exemption. So that is this value of supply does not exceed 5,000 rupees per invoice. In case of continuous supply of service, 5,000 rupees in a financial year. So these are the two general exemptions. Apart from this, two general exemptions and 14 specific exemptions, any other services provided by government to business entity will be taxable, and wherever it is taxable, it will be covered under RCM. But remember, there are few services provided by government which will not be covered under RCM. What are they? 5 services. In that 5 services, if you remember the chart, in that chart, Department of Post first we discussed, it will never come under RCM, it will be always FCM. Second we discussed railways, it will always be FCM. Transportation will be always FCM, and airport or port service will always be FCM. And in that remaining, so what we discussed, services provided like renting of immobile property services provided by government to whom? Unregistered business entity. So that is coming under FCM. So generally these 4 services provided by government to business entities RCM, but in these 5 places RCM will not be applicable. In case of renting of immobile property to unregistered business entity and supply of goods or service by railways, Department of Post, transportation of goods or passengers, services by airport or port. Okay. So that is about this. But anyhow in RCM we need to see that. So we were discussing into the exemptions. Exemptions with respect to services provided by government. So this chart we have completed. Now you can look into various definitions related to government. So government means central government, state government, local authority. And government authority, already I told you, board or body or authority established an act of parliament or state legislature, board or body or authority in which government has invested greater than or equals to 90% to carry out the functions under constitution. Example, ICI is a government authority, CMDA, Chennai Metro Development Authority is a government authority, CMWSSB, Chennai Metro Water, Sewage and Supply Board. So that is also coming under government authority. And government entity is same as government authority except that it is established to promote trade or commerce. Example, PSUs, those will be ONGC, SAL, that will be coming under government entity. Government agency, like that one word is there. Government agency means the one who is providing services to government. Government is required to do certain activities. They will outsource. For example, it is a job of the government to lay down the road, but they will be giving it to contractors to lay down the road. It is a job of the government to do the solid waste management, cleaning the garbage, etc. But they will outsource it to some private companies. So that will be coming under government agency. Person providing services to government in relation to functions entrusted to government as per constitution. Example, Arbitration, contract, etc. Arbitration is a company which is in Chennai, which is engaged in cleaning of garbage, etc. and all. Then contractors who lay down the roads will come under government agencies. Then services provided to government. In services provided to government, so we have the first point, so government authority. But before that, there is one more point here. Services provided by government authority to any person will be exempted. So who is a government authority? Just now we discussed. If they provide services to any person, that will be exempted. Example, RERA, Real Estate Regulatory Authority. Is it a government authority? Yes. RERA is a government authority. So if they collect any fees for the purpose of regulating the real estate, whether it will be exempted? Yes. Like that, any government authority collecting any amount will be exempted. So government authority providing services will be exempted to any person. Then any person providing services, any person providing services to government authority. Okay. any person providing services to government authority, whether that will also be coming under the exemption. Okay, so services provided by any person to government authority is also exempted with respect to certain activities. What are they? Water supply, sanitation conservancy, solid waste management, public health, and slum improvement and upgradation. Okay, so these activities. So what are these activities? Easily remember. So when you visualize a slum, okay, in a slum what will happen? So there will be lot of drainage issue. So drainage issue means open drainages will be there, no proper sanitation, and there won't be proper water facility available to them, and because of the sanitation not properly there, so lot of mosquitoes will come and bite them and their health gets deteriorated, and thereafter so even this garbage and all also will be open here and there. Got it? So now we need to clean this entire thing. So first, water supply, public health, sanitation conservancy, solid waste management, and slum improvement and upgradation. Clear here? So water supply, sanitation conservancy, solid waste management, public health, slum improvement and upgradation. So this will be exempted. Other activities will be taxable under FCM. Then next one, this is services provided to government authority, but service provided by government authority will always be exempted. Then next point you can see, any person providing services to government, and in that services provided to government, so we have few exemptions. Pure services with respect to article 243 GRW of the Constitution. So what is that? That is, generally government is required to do certain activities as per the Constitution, which they do, that is excluded from supply, and if they outsource it to one person, that person is called as government agency, and if they provide pure services, then it is exempted. Just now we saw solid waste management. Solid waste management is an activity of government, but they outsource it to one private company, and that company will do the solid waste management, for which they get a money. That is a pure service and it is exempted. Then what if it is a composite supply that involves both goods and services? If the value of goods does not exceed 25% of total, then that particular activity will also be exempted. So pure services in relation to article 243 GRW, composite supply with respect to article 243 GRW where the value of goods does not exceed 25% of total. Then fair price shops. Fair price shops means ration shops. So ration shop agents will get commission for doing this ration distribution, for which they also get some commission, that is exempted. Then training program, where the expenditure borne by government will be greater than or equals to 75% of total. Say there is a coaching center which is providing NEET coaching and the fees is 1 lakh, 80,000 rupees fees. 80,000 rupees fees is borne by government. Whether the training program is exempted? Yes, because greater than or equals to 75% of total. Suppose if 70,000 fees is borne by government, then what is your answer? Then the training program is not exempted. Why? See the condition. Training program expenditure borne by government greater than or equals to 75% of total. Then next one, import of services. So import of services by government other than OIDR services. For what purpose? For other than business or commerce. So these are the services provided to government, it will be exempted. All other activities will be taxable. And what about these services, water supply, sanitation, conservancy and solid waste management, that is coming under the first point. See, if this is provided to government, also government authority also exempted. If it is provided to government also, it is covered under the first point. You can see all above services like water supply, solid waste management, etc. provided to government falls under pure service and it is exempted. Third point already we discussed. Now government entity. For government entity we have only one exemption. There is a government entity which is providing services to government or any person specified by government, for which they get a grant. That grant will be exempted. Then government authority, all services provided by government authority is exempted. So even RERA is a governmental authority and statutory collections made by RERA is covered under exemption. But government entity is not same as government authority, except that there is a change. Government authority means to carry out functions under constitution, but government entity is not established to carry out functions under constitution. So whether this services by government authority exemption is applicable to government entity? No. So the above exemption is not applicable to government entity. Then we have So there is, some accommodation services provided by Air Force mess or similar mess to its personnel or in relation to other than business entities, and it will be exempted. So what is this? Generally Air Force mess is there, that Air Force mess will be providing services to its personnel. Okay, Air Force mess or similar mess will be providing services to its personnel, and this particular Air Force mess, when they are providing service to its personnel, is it covered anywhere in the list for our discussion? First, is it covered under exclusion from supply? No, it is not covered under exclusion from supply, and it is not covered under Department of Post, it is not covered under airport or port, it is not covered under Indian Railways, it is not covered under other services to business entities, because personnel are not business entities, means it will be others, so therefore it will be exempted. So that is this. Accommodation services provided by Air Force mess or similar mess to its personnel or in relation to other than business entities, and it will be exempted. Then next point, supply of wheat flour after fortification to government for public distribution in fair price shops is taxable. Okay, so generally what will happen is that this wheat flour will be procured by the government and they will be distributing it in the ration shops. For the purpose of procurement of that wheat flour, what they will do, so they will be paying the money, and in that amount, so that is paid for both, that is wheat as well as fortification, that is conversion into powder. So but the value of goods, definitely the conversion into wheat into powder, the grinding is just a service element, which is small element only, because the major element is goods. The value of goods exceeds 25% of the total, so the exemption is not available. Supply of wheat flour after fortification to government for public distribution in fair price shops is taxable, as the value of goods exceeds 25% of total. Then next one, sanitation services provided to Indian Army is not with respect to Article 243W, and therefore it is not covered under exemption. So generally we provide any services, pure services to government is exempted, correct? Pure services to government is exempted. Now Indian Army is also government, so if at all any person providing sanitation services to Indian Army, that's the services provided to government, it's a pure service. Does it mean it is exempted? No, because first of all it should be an activity under Article 243 GRW. In relation to that, if they provide, then only it is exempted. Whether Indian Army is required to come under 243 GRW? No. So due to that reason, this exemption is not applicable. Sanitation services provided to Indian Army is not with respect to Article 243W, and therefore it is not covered under exemption. Okay, clear? Next, you can see here renting, including licensing, leasing, etc. following are exempted. So one second here. Next, say this, renting, look into this renting, including leasing, licensing, etc. following are exempted. So renting is divided into two, movable property and immovable property. Renting of movable property, we have 4 exemptions for that. Number 1, I have a motor vehicle which can carry more than 12 passengers. I am giving on rent to a state road transport undertaking, that renting is exempted. Number 2, hiring of a means of transport to GTA. So I have a vehicle that can carry goods, I am giving it on rent to a GTA, goods transport agency, the money collected by them will be exempted. Hiring of electric vehicle that can carry more than 12 passengers. So this is a normal vehicle, but it is an electrical vehicle. Here also greater than 12 passengers, here also greater than 12 passengers. Here it is to a state road transport corporation, it is to a local authority. Then number 4, hiring of bus to a person, providing transportation service to education institution up to 12th standard or equivalent. Okay, so I have a bus that I am giving on rent to a person, that is that person is providing transportation service to education institution up to 12th standard. So the rent collected by me is exempted. That person providing transportation service is also exempted, and the school providing transportation service also exempted. School providing transportation service is exempted under service provided by education institution to its students, faculty and staff. And the person providing transportation service to school is also exempted under services provided to education institution, category 1 education institution, and I am giving my bus on rent to that person is also exempted. What if that person is providing transportation service to a college? Then I am giving the bus on rent to him. Is it exempted? No, it will be taxable. So these are the 4 exemptions we have in relation to movable property. All these 4 are related to motor vehicles. Then in relation to renting of immovable property, you look into building. So in that first point, I have a residential property. How do we know that it is a residential property? So it will be given as house or residential property like that clearly in the exam. But reality, residential property means at the time of construction we would have got the approval. So in that we will mention whether it is a residential property or commercial property. So it's a residential property. For what purpose we have given this residential property? For residential purpose. To whom? To an unregistered person, that is exempted. What if we are giving residential property on rent for residential purpose to a registered individual? So registered person is not covered under first point, exemption. So for registered person also, if they are registered individual and which is taken it for their family stay, then it is exempted. For example, I am a registered individual, I am taking a house on rent for my family stay, then the rent paid will be exempted even though I am a registered person. So 2 exemptions are there. Exemption number 1, residential property for residential purpose to an unregistered person, residential property for residential purpose to a registered individual for their family stay. Then third point, this newly added, that is accommodation services. Accommodation services for a continuous period of minimum 90 days. So there should be minimum of 90 days consecutive period the accommodation should be given, and what should be the maximum rent where the value of supply does not exceed 20,000 rupees per person per month. So mostly these homestays or hostels or PG accommodations or working men's hostels like that. So all those people will be coming into this category, and even hotels also can be brought into this category. Simple. For how many days continuously they should be giving their accommodation, their premises? So it should be for a continuous period of 90 days. Whether they give residential accommodation like that, no. So it can be a commercial accommodation, that is commercial property, or a residential property. But accommodation, for accommodation it should be given for what period? Consecutive 90 days or more, minimum period of 90 days. And what should be the maximum amount per month? Less than or equals to 20,000 per month per person. Why they use the word per person? Because there will be sharing. In a hostel there could be 3 sharing or 4 sharing. So that room, if you see, total amount may be more than 20,000, but per person you need to see. For example, 4 people are there and each person is paying somewhere like 6,000 rupees per month. So 4 into 6, that is 24,000, means that room wise if you see, it is more than. So therefore here, accommodation service for a continuous period of minimum 90 days where the value of supply is less than or equals to 20,000 per person per month. Okay, so just 1 second. So fully spam is coming here, that's why. 1 second. Can I turn off the comments for some time? Online students, sorry. Yes. Fine. Sorry. So there was some spam which was coming in the YouTube comments. That's why we turned off the comments. Coming back to this, immovable property. So building residential property for residential purpose to an unregistered person, residential property for residential purpose to a registered individual for family stay, and accommodation service for a continuous period of 90 days where the value of supply less than or equals to 20,000 per person per month. Okay, that is about this building exemption. Then for land also we have some exemption. You can see here these two exemptions are there. First exemption for land is with respect to government, okay, giving land on lease to government authority or government entity. Government giving on land on lease to government authority or government entity, and what type of lease they did not specify. So it can be long term lease or short term lease, etc. So and both upfront charges as well as annual lease rentals, okay, will be exempted. Not only just upfront charges. Then they have not given what type of land, let it be agricultural land or industrial land, whatever the land may be. Whereas in the second point, if you see, upfront charges including preferential location charges with respect to long term lease. What is a long term lease? Lease for greater than or equals to 30 years. If you see this exemption, first exemption, any type of land, but here only industrial plots or plots for development of infrastructure for finance business, and here the supplier should be government. Here the supplier should be SIDCO, State Government Industrial Development Corporation, and here recipient can be any person. And what is exempted? Only upfront charges is exempted. So we need to understand these differences. So exemption number 1, exemption number 2 for the land. And first exemption, who is the supplier? Who is the supplier for the first exemption? Government. Second exemption, SIDCO, State Government Industrial Development Corporation. Then next point, recipient. For the first exemption, who is the recipient? Government authority or government entity. Whereas in the next place, any industrial unit, any person. And next, third point, what is the type of land? In case of first exemption, any land. But in the second exemption, it will be plots, industrial plots or plots for development of infra for finance business. Then fourth point, so what is the type of lease? First exemption, either long term lease or short term lease. Whereas in the second exemption, it should be a long term lease greater than or equals to 30 years. And then what is exempted? In the first exemption, both upfront charges as well as annual royalty. But here only upfront charges, including preferential location charges. Preferential location charges means in order to get a land at a particular area, okay, for that we will be paying some charges, that is known as preferential location charges, like near to a highway or near to an airport, etc. That is preferential location charges. So upfront charges including preferential location charges. Then next you can see renting of the precincts of religious place meant for general public. There is a religious place, that religious place is meant for general public, and that place is given on rent, okay, so for the purpose of either accommodation or hall or shops, and moreover it should be registered as a trust. If it is for accommodation less than 1000 rupees per day, it will be exempted. So that is 999. You remember it like 999, okay. So you don't remember it as less than 1000, because 1000 means you will get confused. Remember 999 per day, it will be exempted. For hall it will be 9999 per day, it will be exempted. For shops it will be 9999 per month, then it will be exempted. Beyond that it will be taxable or equal to 1000 or equal to 10,000, that will be taxable. Got it? So that is about this renting of precincts of a religious place meant for general public. Next, look into sports related services. In this sports related services, we have first point, that is there is a recognized sports body which is collecting sponsorship money from any person, it will be exempted. So sponsorship services provided by a recognized sports body. What is a recognized sports body? You can see here National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. These are the 6 recognized sports bodies. If they collect any sponsorship money, that sponsorship money collected by them will be exempted. That sponsorship money can be collected from any body corporate or it can be from an individual, but that sponsorship service will be exempted. Class konju governing sir, please. Exam. This is revision batch, please. So therefore these are the 6 recognized sports bodies: National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services, Cultural and Sports Board, and Panchayat Sports Board. These are the recognized sports bodies. If they collect any sponsorship money, that sponsorship money will be exempted. It can be by body corporate or firm, or it can be by a sole proprietor. But apart from this, any other person providing sponsorship services will be taxable. So IPL will not come under recognized sports body. So therefore the sponsorship money collected by them will be taxable. Suppose if it is collected from body corporate or firm, it will come under RCM. If it is from other than body corporate or firm, it will be FCM. But what we need to remember is only exemption, that is sponsorship services provided by recognized sports body is exempted. Then second point, services provided by individual as a player, referee, umpire, coach or team manager, to whom they are providing services to a recognized sports body, then whatever money that is collected will be exempted. Okay. What about others like commentators, pitch curators, selectors, etc.? That will be taxable. Then third point you need to remember, services provided by one recognized sports body to another recognized sports body. For example, if Indian Olympic Association receiving services from National Sports Federation, or Indian University Sports Board receiving services from National Sports Federation, between them if there is any services, that is exempted. These are the 3 exemptions with respect to services provided, sports related services. Suppose if Virat Kohli getting money for playing for IPL franchise, whether the money will be taxable or exempted? Taxable. Suppose if he is getting money for BCCA matches, that will be exempted. Okay, because player, referee, umpire, coach and team manager. Then look into the next area, services by unincorporated association to its members. There is an unincorporated body or unincorporated association which will be providing services to its members, and that particular unincorporated association, if it is a trade union, industrial labor union or agricultural labor union, then it will be exempted. Okay, so trade union means association of traders, industrial labor union means all industrial labor, they will form a association, that then agricultural labor union, so they will be collecting some membership fees, that will be exempted. Then suppose if the service itself is exempted, for example healthcare service is exempted, there is an association which is providing the healthcare services to the flat members. Anyhow healthcare service is exempted, even if it is provided by association to its members, it is also exempted. Then membership fees or maintenance charges collected by a resident welfare association, if it is up to 7,500 per month per member, then it will be exempted. What if it crosses 7,500 per month per member? Entirely taxable. And this is applicable only for resident welfare association, means apartment owners association, not for commercial complexes. For commercial complexes, whatever may be the maintenance charges, it will be taxable. Then apart from this, any other association, so includes commercial association also, commercial complex also it will come. Any other association can be commercial complex also, or any body, club, etc. So what should be the charges per annum? Per annum it should be less than or equals to 1000, then only it is exempted. If it exceeds 1000 rupees per annum, then entirely it will be taxable. Now in this regard you can see, electricity supplied by malls or airport operators or real estate owners or real estate developers or resident welfare association. So basically what happens there, it's they will be paying the electricity charges where the bill is in the name of the members. For example, there is a resident welfare association and the bill is in the name of a flat owner, but the association has paid the electricity bill and recovered from the flat owner. Will it be included in the value? First of all, in maintenance charges calculation, it will not be included. Why it will not be included? Because this is coming under expenditure incurred as a pure agent. It is a liability of the recipient which is incurred by the supplier. So it will not be included in the value for payment of GST. So while counting that 7,500 maintenance charges, don't include these electricity charges. So pure agent, it shall not form part of value. Second point, suppose if it is common area electricity charges, that common area electricity charges bill is in the name of association. Association will make the payment and in turn it will be recovered from the members. On what basis they are recovering? Actual basis or ad hoc basis? It is being recovered on a actual basis. Actual basis means 2 months once the electricity bill will come. How much ever is the electricity bill? Say for example 4,000 rupees means 4,000 divided by how many flats are there? Say 10 flats are there. from each flat they are collecting only 400 rupees. Then on actual basis, then also that 400 don't include in the maintenance charges because they are deemed to be pure agent even though bill is in the name of the association. Generally when bill is in the name of the association, they are not pure agent, but in the circular they are telling even though bill is in the name of the association, they are deemed to be pure agent. So therefore it will not be included in the value. Is that clear? The next one, suppose if they are collecting on ad hoc basis, 2 months once the bill will come, but what they are doing is that monthly 500 rupees they are collecting along with the maintenance charges. Thereafter whenever the bill will come, so they will be paying out of that, some excess amount may be there, some shortfall may be there, etc. and all. Then in that case what we need to do, whatever ad hoc amount that is being collected will form part of maintenance charges, and if that maintenance charges exceed 7,500 per month, then it will be entirely taxable. So it shall form part of value entirely. Okay, so collects charges from members on ad hoc basis. So here you underline ad hoc basis, ad hoc basis. Here you underline actual basis, which sometimes exceeds the actual electricity charges of electricity board. Then suppose if Resident Welfare Association collects an amount exceeding 7,500 per month per member, then entire amount is taxable even though there are some contrary judgments in this regard. Then look into the next area, transportation of passengers. In case of transportation of passengers, following are exempted. Railways, in case of railways, other than first class or AC, so everything is exempted. So sleeper class is exempted, general ticket will be exempted, and second class sitting etc. will be exempted. Only first class is taxable, and any AC is taxable. Any AC can be first class, second class, 3-tier etc. everything, and will be taxable. Other than this is only exempted. Then metro, mono and tramway is exempted. Of course that is AC only, but metro, monorail and tramway always exempted. This already we saw in the context of Indian Railways, that is platform tickets, and then cloakroom charges, waiting room charges or battery operated car services. Then when it comes to airways, for airways, if the starting point or ending point of the passenger is in northeastern states or Bagdogra in West Bengal, then it will be exempted. What are those northeastern states? Already we discussed yesterday, that is MMT and ASAM. And next, consideration for viability gap funding. So there are some regional connectivity airport scheme wherein, so these airports, like in those airports, if any airline is operating, they will receive some consideration from the government. That amount received from the government is exempted for a period of 3 years. That is known as consideration as viability gap funding. So 2 exemptions, you remember, this is anyhow remember under government services. 2 exemptions you need to remember for railways, other than first class are AC, metro, mono, tramway. Airways also 2 exemptions, starting point, ending point in economy class in northeastern states or Bagdogra and West Bengal. Consideration as viability gap funding for a period of 3 years. Then when it comes to waterways, in waterways we have 2 exemptions again. Inland waterways, inland waterways means rivers or backwaters etc. that will be exempted, whereas coastal waters means the moment we say coastal, we are touching sea waters between places in India, but for what purpose? Other than tourism purpose, means for public transportation. Coastal waters within India for other than tourism purpose, and whether that is operated by government or private, means whether the ship is a cruise ship which is operated by a private cruise ship or it is a government cruise ship. If they are engaged in transportation of the passengers, say for example from Chennai to Andaman, so there is a cruise ship which is transporting the passengers not for tourism purpose, that is like a public transportation, so it will be exempted. Then when it comes to roadways, we have 3 exemptions. Non-AC stage carriage. Non-AC stage carriage means stage carriage basically is which stops at every stage of its journey. So this share autos will come under stage carriage, local bus also will come under stage carriage. So non-AC stage carriage will be exempted. And what if it is a AC stage carriage? Taxable. Contract carriage means point to point travel. It starts at a particular point, it ends at another point. That's called as point to point travel. Non-AC contract carriage is also exempted provided it is other than hire or tourism. Suppose if there is a non-AC bus which is offering a package tour, and whether it will be taxable? Yes, it will be taxable. Some non-AC contract carriage which we take on rent for marriage and all, so like a government bus, not like CTC bus or some other government bus, non-AC bus, will take it on rent for marriage functions, whether that will also be taxable? Yes, other than for hire or tourism is only exempted. Then what if it is a AC contract carriage? Always taxable. Then metered cab or auto rickshaw. Now, wherever we see in case of roadways as exemption, what are the three exemption? Non-AC contract carriage, non-AC contract carriage other than tourism or hire, non-AC stage carriage and metered cab or auto rickshaw. If it is through e-commerce operator, generally auto will be exempted. If it is a Ola auto, Uber auto, then it will become taxable. Exemption not available if service is provided through e-commerce operator. Then you can see transportation of passengers other than above is taxable. That is ropeway, cable car, horse cart, rickshaw, chartered flights, helicopter, all these are taxable. But only thing, if they are crossing the threshold limit of 20 lakhs, they will register and they will pay GST, otherwise they will not pay GST. Then renting of motor vehicle is different from transportation of passengers. Basically, in case of renting a motor vehicle for a period of time, the vehicle will be at the disposal of the recipient. In case of renting a motor vehicle, the vehicle is at the disposal of the recipient for a period of time, which is absent in case of transportation of passengers. In case of transportation of passengers, just they will pick and drop and leave. So that will be coming under transportation of passengers. So because in case of renting, you need to refer to the renting chart. In case of transportation only, we need to refer to this chart. Then next, transportation of goods. In case of transportation of goods, for railways, only specified goods. So railways, specified goods, even waterways, coastal waters also specified goods, and in case of GT also we have specified goods. This specified goods points comes in three places. One in railways, another coastal waters between places in India, then GTA. What are those specified goods? Total 6 specified goods. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, and defense and military equipment. These are the 6 goods. If transported by railways, if transported by waterways, coastal waters within India or GTA. Okay. Then when it comes to airways, for railways other than this we don't have any exemption. For airways only one exemption, that is transportation of goods from where to where? Outside India to India, that is exempted. India to outside India is not exempted. When it comes to waterways, inland waters is exempted. So that is inland waters means national waterways. So that is goods also exempted, passengers also, inland waters is exempted. Coastal waters within India only specified goods. Then roadways. In case of roadways, other than GTR courier agency, everything else is exempted. So normal lorries which are transporting the goods will be coming under exemption. Only if it is a goods transport agency or a courier agency, it is taxable. And what is a goods transport agency? Goods transport agency is basically a person engaged in transportation of goods by road. You can see below, GTA is a person engaged in transportation of goods by road and issues a consignment note by whatever name called. What if they are not issuing consignment note? Because this point already tested in November 24 exam in MCQs also. That is, what if they are not issuing consignment note? They are not a GTA. When they are not a GTA, other than GTR courier agency, normal transportation will be exempted. So see this, if they are not issuing consignment note, they are not GTA, and consequently transportation of goods by roadways will be exempted. Are you understanding this? So what will be there in consignment note? In consignment note there will be details related to, like consignor, consignee, etc. Consignment note issued by transporter contain details of consignor, consignee, goods transported, vehicle details, then what is the place of origin, place of destination, etc. and all will be there. Then next, transportation of goods by waterways. Waterways from India to outside India or outside India to India, we don't have any exemption. Everything will be taxable. Previously we had, now everything will be taxable. Then next, GTA services. For goods transport agency services, already we have one exemption, that is specified goods. Apart from the 2 more exemption you need to remember. That is, if the recipient is central government, state government, union territory or local authority, and they are registered only for the purpose of deducting TDS under section 51, that is GST. Then third point, if the recipient is individual, HUF, AJP or trust. Individual, HUF, AJP or trust, all are unregistered and not having factory. So these are the 3 cases GTA service exempted, remaining case it will be taxable. Wherever GTA service is taxable, remember GTA is having 2 options. Option 1, they can pay GST under FCM. under FCM itself they have again two rates, that is 12% with ITC, 5% without ITC. Means they cannot take ITC on their inward supplies if it is 5%, they can take ITC on their inward supplies if it is 12%. Whereas GTA has another option, that is RCM, where the recipient will pay, but when they need to exercise this option for every financial year, and by when they need to exercise this option in the previous year last quarter, so between January 1st to March 31st of the previous year. You can see that GTA has option to choose either FCM, that is GST at the rate of 12 or 5%. So but wherever it is 5%, it is without ITC, or RCM will be 5% during a financial year. However, such option should be selected between which date to which date, 1st January to 31st March of the previous year, and the option 1 selected remains till the subsequent selection is made. And if they are not issuing a consignment note, they are not called as GTA. Already I told you this point. Then there is one CBSE circular related to transportation. See this, that is, there is a owner of a vehicle who is giving vehicle, non-AC vehicle to a person, and how it is given. So if it is operated in a predetermined route on a predetermined schedule, means what will happen, they will be picking up the passengers at particular routes and particular points, and they will be again dropping back the passengers in some places. Then it will be coming under operated on a predetermined route on a predetermined schedule. So in that case, it is not called as contract carriage for hire, it is other than hire, therefore it will be exempted. What if it is a AC vehicle? Definitely it will be taxable. If it is non-AC only, so operated in a predetermined route on a predetermined schedule, contract carriage other than tourism or hire, and it will be exempted. What if the vehicle is at the disposal of the recipient, means the vehicle is with the recipient? Is it for a particular trip or voyage, or for a particular period of time? If it is for a particular trip, for example, a company is taking employees on a vacation, so to Ooty or Goa, etc. For the trip only, the vehicle will be at the disposal of the company. Then in this case, it will come under contract carriage for hire, not renting, contract carriage for hire or tourism. Therefore, it will be taxable. Whereas, if it is for a period of time, then it will be called as renting of motor vehicle, and renting of motor vehicle also taxable. But what is the difference? If it is contract carriage, always FCM. If it is renting, it will come under RCM. Three conditions are there for RCM. What are they? Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. Then it is RCM, otherwise it will be FCM. Then look into two more circulars. Point number 1. Stage carriage means what? Stage carriage means a vehicle which transports passengers where they can board at any stage during the journey. On the other hand, contract carriage is a point-to-point journey. And there is one circular, transportation of minerals within the mining area. So within the mining area, so there will be one vehicle which will be transporting the minerals and deployed with a driver for a specific duration. Specific duration means period of time. Is it transportation of goods service or renting of motor vehicle? Definitely renting of motor vehicle, because a vehicle is at the disposal for a specific duration. So therefore it will come under renting of motor vehicle but not transportation of goods. Then you can see import of services. In case of import of services is divided into two, OIDR services and other than OIDR services. OIDR services will always be taxable. If it is imported by non-taxable online recipient, then it will be covered under FCM. If it is other than non-taxable online recipient, then it will be RCM. If it is other than OIDR services imported by non-taxable recipient, then it will be exempted. By other than non-taxable recipient, then it will be taxable. But here we have an amendment. But before that, what is OIDR service? Any service which is mediated over internet is known as OIDR service. It's an online service. In the absence of internet, it cannot be provided. That is called as a OIDR services. So online classes will come under OIDR services. OTT platforms will come under OIDR services. They gave a definition. Online information database access retrieval service means service whose delivery is mediated by information technology over internet. And electronic network, and the nature of which renders their supply impossible to ensure in the absence of information technology. Then it will be called as OIDR services. And what are they? Advertising on internet, example Instagram and YouTube, providing cloud services, QuickBook, and providing e-books, movie, example Kindle, Spotify, providing data or information retrievable or otherwise, Udemy, Canva, online supplies like digital content, so Amazon Prime, Netflix, then digital data storage, cloud storage, that is Google Drive, then OneDrive, iCloud. Online gaming, not online money gaming, because online money gaming will come under specified actionable claims. Online gaming will come under OIDR service, means you spend money to play the game, like GTA or Minecraft. These are all examples of online gaming. So this is about OIDR services. And so like suppose for example some meetings we will attend online. Just because we attend online, will it become OIDR services? No. For example, there is one advocate who will be consulting in online. So can we call it as OIDR service? No, not like that. So it is like which is impossible to ensure in the absence of internet is only OIDR services. And OIDR service always taxable. Import of OIDR service, who will pay? If it is imported by NTOR, then it will be payable under FCM. Who is a non-taxable online recipient? Any unregistered person receiving online information database access retrieval services. Where is that person located? Located in the taxable territory, okay, including a registered person. So who is a non-taxable online recipient? Unregistered person, or a registered person who is registered only for deducting TDS. So they can be individual, they can be firm, they can be company, any person. For any purpose they might be importing, but they are unregistered. If they are registered, they are registered only for deducting TDS. Then they are NTOR. Who will pay GST? Supplier only will pay GST. If it is other than NTOR, then it will be RCM. And NTR also we have. So if it is, what is the difference between NTOR and NTR? O is the difference. So only when OIDR comes, we need to use NTOR. In other place, we need to use NTR. Who is non-taxable recipient? Generally individuals, trust home, individuals, trust government. So therefore individual, trust, government will come under non-taxable recipient. Individual, trust, government. So who is what kind of individual? Unregistered individual. And who is importing for what purpose? Personal purpose. Trust. Trust is a charitable trust, either registered or unregistered under GST, but importing for what purpose? Charitable activities. Then government, whether registered or unregistered, importing for what purpose? Other than business or commerce. Then it will be exempted, that is non-taxable recipient. By other than non-taxable recipient, so there they have brought in one exemption, that is there is a Indian establishment of a foreign airline company. There is a Indian establishment of a foreign airline company, say Singapore Airlines. Singapore Airlines is having a Indian establishment. That Indian establishment is importing services from their head office without consideration. That is important. They are importing services from their head office without consideration. So Singapore Airlines is having a branch in India, is importing services from their head office without consideration, and even though it is supply under 7(1)(c), because import of service from a related person or other establishment located outside India, even though it is supply under 7(1)(c), but it will be exempted, provided Ministry of Civil Aviation certifies that there is a foreign establishment of a Indian airline company. Say our Indigo Airlines is having an establishment in Singapore, and the Singapore government has given the reciprocal exemption to them. So then only here it is exempted. Okay. So provided Ministry of Civil Aviation certifies that there is a reciprocal agreement between India and the foreign country, and very important, it should be without consideration. So this is a newly added amendment, then it is exempted. In other cases, it will be taxable under RCM. Okay. Then next one. So you can see here NT or NTR, all those things, and whenever GST is payable under RCM, are they compulsorily required to get registered? Yes. Every person who is liable to pay GST under RCM is compulsorily required to get registered, irrespective of the threshold limit. And also the supplier means OIDR services, the supplier will register, will pay na, that supplier is also compulsorily required to get registered irrespective of the threshold limit. You can see the next 2 points. Is there a remote? So these 2 points are related to the compulsory registration. The IGST paid is available as credit to the recipient if such recipient is engaged in making any taxable supplies. So this is about import of service. You understood now? Then there are 2 points related to this. Concentrate. Let me give you the background of these two. First one is about there is a bank. There is a bank. which is earning interest on loans, advances, deposits, it is exempted, correct? And if there is not a bank, there are any other person also earning interest on loans, advances, deposits is exempted, yes. For example, you are my related company and I am your holding company, you are my subsidiary company, and I am giving you a loan for which you are giving me interest. Is this interest taxable or exempted? Exempted, because any person earning interest on loans, advances, deposits will be exempted. Now, for a change, I am outside India, I am your holding company outside India, you are my subsidiary company in India. So now in that case, I will be giving you loan, you will be paying me interest. Whether this interest is taxable or exempted, now the character of the service will not become banking, it will become import of services. When it become import of services, is it OIDR other than OIDR? Other than OIDR. Imported by non-taxable recipient or other than non-taxable recipient? Other than non-taxable recipient. It is not Indian establishment of foreign airline, so therefore it will be taxable under RCM. But literally the same transaction, if it is in India, it is getting exempted. If it is because import of service, it changes, for which many companies have requested the finance minister. Accordingly, this clarification they have brought in. That is, if there is an Indian subsidiary company which is taking loan from a foreign holding company, if they pay only interest as a consideration, the activity is not a supply, So whether loan taken by Indian affiliate from overseas affiliate, where both being related, constitute supply. If the consideration is only interest or discount, it is not a supply. As it is not a supply, the value under Rule 28 will not be applicable. What if the consideration is processing fees, administrative charges, in addition to interest or discount? Then in that case, it will become supply under 7(1)(b). Why not 7(1)(c)? Even though it is related, but they pay the consideration. That's why it is 7(1)(b). Supply of service where such processing fee and administrative charges is treated as consideration, and value will be determined under Rule 28, and GST payable under RCM, treating it as import of services. Understood? Next one, you can see whether GST is applicable on ESOP, ESPP, RSU provided by a company to its employees through its overseas holding company. What is this? Generally, there is a subsidiary company, same holding company outside India, subsidiary company in India, and the subsidiary company wanted to retain the employees. For retaining the employees, they need to offer some ESOPs, employee stock option plan, or employee stock unit scheme, or some restricted stock unit, some kind of stock options they need to give, so that because of these stock options, the employee feel that they are getting the equity in the company, so they will be staying. It's like 5 years you work, and thereafter you can redeem the stock options, and you can become the equity shareholder like that. So now what happens? Subsidiary company asks the holding company to allot the ESOPs to the employees of the subsidiary company, for which holding company will allot. And when the holding company is allotting, the subsidiary company need to make some payment for that ESOP. So usually ESOPs will be allotted at a rate which is less than the market price, but that amount I need to pay, no. So that amount I have paid. That is, I am a subsidiary company, there is a holding company, I made the payment. But literally, if you see, even though it's a related party transaction, first of all, what is the underlying there? Shares. So as it is underlying shares, therefore it is not a supply. If I pay only the cost towards the ESOPs, what if I pay some administrative charges, etc. and all, that will become import of services. Is it clear? So same logic. In case of cost to cost reimbursement by the domestic subsidiary to its foreign holding company, it is not treated as supply, because it is a transaction in securities, okay, and there is no GST liability. In case of additional charges collected by foreign holding company, additional amount is treated as supply of service, and GST payable under RCM by the domestic subsidiary. Is it clear? So that is about this import of services. And you can see here the next area, construction services. Construction services, first point, construction of an individual house. That individual house, irrespective of the floor area or cost. But what is an individual house? House belonging to a single family is known as individual house. That will be exempted. And mostly it should be a pure labor contract, and it should not be a works contract. Whereas second point, construction, repair, alteration, renovation of following projects. What project? Housing for all mission or Pradhan Mantri Awas Yojana. For that, whatever money that is received will be exempted. Again, it should be pure labor contract and not a works contract. What is the difference between first point and second point? In first point, it is an individual house, it is a project. And the first point, it is construction. But in second point, either construction or repairs. And then third point, 1/3 of the gross value of flat is exempted towards land or undivided share of land. So whenever you buy the flat, along with the land also you need to pay because of the undivided share of land. But land is excluded from supply. For that reason, from the gross value of the flat, 1/3 will be reduced. So you can see here. So 1/3 of the gross value of flat. For example, if you take 75 lakhs, 75 lakhs into 1/3 is what? 25 lakhs. So 25 lakhs will be excluded and remaining, that is exempted. So remaining 50 lakhs only will be taxable. What if the land value is given separately? Even if the land value is given separately, we will follow the same thing. That is, we will take land value 40 lakhs, construction cost 50 lakhs, 40 plus 50, 90. In that 90, 1/3, that is 30. 30 is only exempted. Remaining 60 lakhs will be taxable. So 1/3 is only exempted towards land or undivided share of land, where the gross value includes value of land. Then next we have TDR, FSI and long-term lease. TDR refers to transferable development rights, FSI is floor space index, and long-term lease of land. So this is given by the landowner to the promoter or builder. So landowner is giving TDR, FSI, long-term lease to the promoter or builder. On this, the promoter or builder will pay GST under RCM. However, the promoter or builder, while paying GST under RCM, there is an exemption for their inward supply. What is that exemption? Proportionate to the residential units booked before completion certificate divided by total carpet area, they will get the exemption. So what is the exemption formula? First we need to see the value of inward supply into 18% into, see the carpet area of residential units booked before completion certificate divided by total carpet area of the project, that proportionate is exempted. Example, value of inward supply of TDR and FSI for a promoter or builder is 10 lakhs excluding GST at 18%. GST payable on inward supply is 1,80,000. Floor area of residential flats booked before completion certificate is 28,000 square feet. Total floor area of the project is 50,000 square feet. So 28,000 divided by 50,000, to that extent it will be exempted. So 1,80,000 into 28,000 divided by 50,000. So 1,800,000 will be exempted. So remaining will be taxable. So 1,80,000 minus 1,800,000, 79,200 will be taxable. Is it clear or not? That is the GST payable. So transferable development rights, floor space index or long-term lease, provided the land is used for construction of residential flats. So what is the exemption? Value of inward supply into 18% into floor area of residential flats booked before completion certificate divided by total floor area. Then there is one amendment related to taxability of preferential location charges. Preferential location charges are some extra amount which will be collected by the builder in case they are allotting the flats, which is like east facing flats or somewhere like north facing flats or flats in the first floor or beach view facing flats, like that. They will be collecting some extra charges. These preferential location charges, whether it is collected at the time of sale of flat, yes, then in that case whatever is the rate applicable to the flat, that will be applicable for preferential location charges also. If it is paid along with the consideration for construction service, treated as construction service by applying composite supply and taxable based on construction service. If entire consideration is received after obtaining completion certificate, anyhow that is excluded from supply. So this preferential location charge is also not a supply. Other cases GST will be payable. At what rate? At the rate applicable to the construction. Suppose if it is paid separately, independent of the construction service, then it will be treated as a individual supply and taxable at 18%. Taxable separately as supply of service, where the GST rate is 18%. So then we have advocate and arbitrator services. So I have just made it simple. Advocate or arbitrator services. So 3 points are common for all the people. That is normal advocate or firm of advocate, senior advocate or arbitrator. So advocate is providing services to a person other than business entity. It will be exempted in all the 3 cases. Okay. If the service is provided to government or government authority or government entity, then also it will be exempted. Suppose if they are providing service to a business entity whose turnover during the previous year does not exceed threshold limit, in all these three cases it is exempted, that is normal advocate, individual advocate or senior advocate or to an arbitrator. But in the last point only there is a difference. If there is a person who is providing services to another advocate or firm of advocate, that is normal advocate or firm of advocate providing service to another advocate or firm of advocate, it will be exempted. But arbitrator will never provide service to advocate or firm of advocate because they both are not practicing in the same field. So due to that reason it is not applicable, that is hypothetical. What if senior advocate is providing service to another advocate or firm of advocate? Then in that case the recipient will not be another firm of advocate or advocate, but in turn there will be one litigant, applicant or petitioner, ultimate. That ultimate litigant, petitioner or applicant is deemed to be recipient, and if they are individual then it is exempted. If they are government then it is exempted. If they are business entity whose turnover during previous year does not exceed threshold limit, then it is exempted. Like that we need to interpret. Otherwise it will be taxable and they only will pay GST under RCM. Remember, advocates will never pay GST. Their outward supplies will be either exempted or covered under RCM. Always advocate and arbitrator service falls under RCM if taxable. Service provided by senior advocate to individual advocate or firm advocate is not exempted. In such case, the ultimate litigant, applicant or petitioner shall be deemed to be recipient. An advocate, either individual or firm, and the arbitrator are not required to get registered. Why they are not required to get registered? As they are exclusively engaged in supplies under RCM. Section 23 overrides Section 24. Then we have exemptions under IGST Act. So in this, we see the first point. If both supplier of service and recipient of service is located outside India, then there won't be any GST. First of all, place of supply cannot be determined when both supplier and recipient are outside India, so they have exempted all the services. Supplier of service outside India, recipient of service also outside India. Then number 2, services provided by an Indian tour operator. To whom they are providing services? To a foreign tourist. And where the tour is conducted? Completely outside India, then it is exempted. Example, Indian tour operator providing tour operator service to a US citizen in relation to the tour in Sri Lanka. So completely it is exempted. What if the tour is partly in India, partly outside India? Then proportionately it is exempted. To what proportionate? A, total consideration into number of days the tour is conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower is exempted and remaining will be taxable. While computing the number of days the tour is conducted outside India, so you divide the day into half, 12 hours. If it is 12 hours or more, you need to take it as 1 day. If it is less than 12 hours, you need to take it as half a day. Then next, fourth point, services provided by an intermediary, where the seller of goods outside India, that is I am a commission agent or I am a broker, I am connecting a seller outside India and a buyer outside India. For connecting these two people, I get a commission. That commission will be exempted. Won't it become export of service? Again, no. Because intermediary service, the place of supply will be location of supplier and it will not become export of services. Service provided by intermediary where location of supplier of goods and recipient of goods is outside India. And next one, we have miscellaneous exempted services. Point number 1, transfer of a going concern, like business full lock stock barrel I am selling, entire business I am selling, like a slum sale in income tax, fully it is exempted. Transfer of a going concern as a whole or independent part thereof. Supply of service associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan are landlocked countries. The goods are unloaded in India and thereafter it is going to Nepal and Bhutan. That is known as transit cargo. For the transit cargo, e-way bill not required. And if you provide any services like loading, unloading, transportation, everything will be exempted. Then even return journey also, if it is returning empty, for that we collect some charges, it will be exempted. What if it is returning by carrying some goods? For that freight collected will be taxable. If the return journey is empty, so then onward journey itself we will collect the money for return journey also, that is exempted. Both to and from covered in the exemption as per CBSE circular if the cargo container returns empty. Service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India. So there will be some independent journalists who are like freelancer journalists collecting money from news agencies which will be exempted. PTI and UNI are news dissemination agencies. So we will give news to them and they will distribute it to all others. So whatever money that they are collecting is also exempted. Then services by public libraries. There will be some public libraries which is open for all. They will be lending books and for which they collect some lending charges, that is exempted. What if it is a private library? Then it is acceptable. But it should not be an education institution, because for example ICI is a private library, but that will come under exemption with respect to services provided by an education institution to students, faculty and staff. Then service by an organizer. There is an organizer who is conducting a business exhibition where the exhibition is held outside India. Even though organizer is in India, the recipient is also in India, but as the exhibition is held outside India, it will indirectly encourage exports. That's why it is exempted. Then services by way of public conveniences, that is washroom, lavatories, toilets, etc. They collect 1 rupee, 2 rupee, 5 rupee for the purpose of giving access, that is exempted. Service by way of access to road or bridge on payment of toll charges, that is a builder will lay down the road and on the vehicles which is plying on the road they will be collecting toll charges, that is exempted. What if there are some higher toll charges for not having a fast track? That is also exempted. What if there is some overloading charges because of huge vehicles, commercial vehicles, they need to pay overloading charges, that is also exempted. What if the charges are payable by government towards annuity? Annuities means like they will not pay toll charges, yearly they will pay some amount for constructing the road, that charges will be taxable other than payment by way of annuity. Then services by a performance artist. Who is a performance artist? One who performs before the audience is known as a performance artist, and they should be performing in either classical or folk, and in what art form? Either music, dance or theatre. How much consideration they should be collecting per annum or per performance? Per performance, not per annum and all, per performance. How much? 1,50,000. If it does not exceed 1,50,000, then it is exempted. What if it exceeds 1,50,000? Entirely taxable. What if they are promoting a brand, means they are acting as a brand ambassador and earning some money, then it will be taxable. Services by a performance artist in folk or classical art form of music, dance or theatre, where the amount charged is up to 1,50,000 for a performance, excluding services provided by such artist as a brand ambassador. Then services by way of training or coaching in recreational activities relating to arts or culture by an individual. So there are some training in arts or training in culture, but that should be by an individual. What if there is a dance school which is operated by a partnership firm? That will be taxable. If the same dance school is operated by an individual, then it is exempted. What about sports? Sports should be by a charitable trust, then only it is exempted. Then point number 10, satellite launch services by any person. Previously it was given to ISRO and other entities, now to any person. Then 11, transmission and distribution of electricity. Electricity is exempted. On electricity charges there is no GST. Then what about other services in relation to electricity, like meter rent and thereafter shifting of meters from one location to another location, or increasing the load capacity charges, or testing of the meters, like that. There are many services provided by electricity department. Whether all those are also exempted? Now exempted. Previously there was no clarity related to this. Now they have brought in the exemption. Services by way of providing metering equipment on rent, testing of meters, releasing of electricity connections, and shifting of meters or service lines which are incidental or ancillary. See, all these are just the illustrative list, not that only this. All incidental and ancillary to transmission and distribution of electricity provided by electricity transmission and distribution utilities to their consumers is exempted. Got it? So transmission and distribution of electricity also exempted. These incidental and ancillary service is also exempted. Then in section 35 of Income Tax Act, there is a scientific research expenditure which is allowed as a deduction 100%. Either that entity can do the scientific research, or they can contribute it to an association or a university which is engaged in scientific research. Now that university or association which is engaged in scientific research is giving you grant for doing scientific research. You are one person who is doing scientific research. That association or university is giving you grant. Whether that grant is taxable or exempted? Exempted. Previously this point was not there. Research and development services against consideration in the form of grants. From whom? From a government entity or research association, university or college, or any other institution notified under section 35 of Income Tax Act 1961. So with this we completed exemptions. Okay, so we took around 2 hours 15 minutes time and we completed it. Now what you need to do is that this particular video you need to watch as many number of times as you can whenever you are free. So maybe you can watch in 1.5x speed. Already I took in that speed only, but you can watch even in 1.5x speed, it's okay, and thereby many times you need to revise. So this exemptions chapter you don't by heart, you listen to it as many number of times as you can, so you know what are exempted. You go to the exam, you see the transaction, immediately that will strike in your mind that it is exempted. If nothing is known, then it will be taxable, because when you read the question, if it appears to be new, which means we have not discussed it, means it will be taxable, all others will be exempted. Got it? Thank you. We'll take a break and we'll meet after 15 minutes and we will see some illustrations related to this and then move to the other topic, that is charge, RCM. Okay, we'll start. So there is one query, sir, in educational institution can category 2 be taken as colleges? Yes, category 2 is colleges only. And you please take solved workbook. In solved workbook we have got some questions related to exemptions. You can see that questions on amendments. Look into question number 1. Question number 1. Page 647, ABC Private Limited, an Indian entity, secured a loan of 1 crore from its overseas affiliate XYZ Incorporation based in the United States. The loan was provided at an interest rate of 6% per annum for a tenure of 3 years, with interest being the only consideration charged. Whether the interest on loan paid to XYZ Incorporation is treated as supply and chargeable to GST. So just now we discussed that whenever there is a holding company and a subsidiary company, holding company outside India and the subsidiary company is in India, if they pay only interest, then it is not a supply. Import of service by way of loans or advances against consideration in the form of interest or discount is not treated as supply. Accordingly, ABC Private Limited securing loan from XYZ Incorporation against interest of 6% per annum is not a supply, and consequently it is not chargeable to GST. However, if the Indian affiliate pays consideration, then it will be. So see the next part. What will be your answer if, okay, what will be your answer if in addition to the interest, XYZ Incorporation also charged a processing fee of 1,50,000 for facilitating the loan? Then that 1,50,000 will become supply under 7(1)(b), and it's an import of service other than OIDR services imported by non-taxable recipient or other than non-taxable recipient, other than non-taxable recipient. Why? Who will come under non-taxable recipient? Individual, trust, government. So here it is not individual, trust or government, it will be others. So therefore it will be covered under RCM. Okay. So therefore say this. Chargeable to GST under RCM. In the present case, ABC Private Limited shall pay GST on rupees 1,50,000 paid to XYZ Incorporation as processing fees. Then look into another question, question number 3. This is also on that circular related to ESOPs. Unilever PLC, a foreign holding company, offers an employee stock option to the employees of its Indian subsidiary Hindustan Unilever Limited as a part of their compensation package. Under this plan, Unilever PLC issues 10,000 stock options to the employees of HUL, allowing them to purchase shares at a predetermined price of 200 rupees per option. At the time of the grant, the market price per share is rupees 300 and the options have a vesting period of 3 years. After the stock options vest and are exercised by the employees, Unilever PLC charges HUL 20 lakhs as the cost of the shares. Logic simple, 10,000 stock options into 200 rupees per option, 20 lakhs is the cost of the shares, which HUL reimburses on a cost to cost basis. Additionally, Unilever PLC charges HUL an administrative fee of 2 lakhs for managing the ESOP on its behalf. Assume the applicable GST rate on service is 18%. Now, first, determine whether the 20 lakhs reimbursed by HUL to Unilever for the cost of the shares is liable to GST. No. As per CBIC circular, whenever the holding company is allotting ESOPs to the employees of the subsidiary company, for which subsidiary company just paid the cost, that is not a supply. Then calculate the GST liability on the additional 2 lakhs charged by Unilever PLC as an administrative fee and determine who is liable to pay GST. With respect to additional charges for that ESOP, it is a supply under 7(1)(b) and chargeable to GST under RCM. So GST will be payable on that. What is the administrative charges? 2 lakhs. Compute the total amount HUL need to pay to Unilever PLC. 20 lakhs plus 2 lakhs, 22 lakhs. But the GST will be payable to government. So 2 lakhs into 18%, 36,000. Can the GST on additional 2 lakh be availed as ITC? Yes. We don't have any blocked credit and it is used in the course or furtherance of business. So definitely they can take ITC. GST paid under RCM can be availed as ITC if the condition for availment of ITC is fulfilled. Then next one, look into question number 4. This question number 4 is related to the renting. So see that Mr. Rahul, an individual registered under GST, owns multiple residential and commercial properties across different cities in India. In October 2024, he rents out the properties under different situations to various individuals and entities. Compute the value of taxable supply in the hands of Mr. Rahul based on the following details of the rentals for October 2024. So, we need to just compute the value of taxable supply. First, renting of a luxury residential flat. It's a residential flat to Mr. Kapoor, a proprietor of a proprietorship concern for the personal use as his residence. What is your answer? Exempted. Whether Mr. Kapoor is registered or Kapoor is unregistered, it is exempted. If Kapoor is unregistered, also anyhow exempted. Even if he is a registered individual, also it is exempted because he is taking it for his personal residence. So this 40,000 will be exempted. Renting of student hostel in Pune to 20 students for a period of 6 months from October 2024. Period of 6 months means more than 90 days. And what is the charges? 12,000 per month, which is less than or equals to 12,000, 20,000. Therefore, it will be exempted. Then next, offers PG accommodation in Delhi for 10 working professionals for a period of 4 months. For working professionals also, all accommodation for a period of 4 months. 4 months means definitely 90 days or more, and the charges less than or equals to 20,000 per month. Therefore, it is exempted. Renting of guest house accommodation in Bengaluru to a corporate company for its employees, and accommodation is used for consecutive 90 days. Even then it is exempted, because for a corporate company also they have not given like it should be for this person only, like that. All accommodation, it is accommodation only na? Yes. So 90 days. How much is the charges? 19,000. Okay. So which is less than or equals to 20,000. Renting of hostel in Chennai for 40 days, 40 students pursuing CA final for attending exam oriented batch on IDT of Mr. THARUN'S for a consecutive period of 60 days. What is your answer? Even though the charges is less than or equals to 20,000, but the number of days should be minimum 90 days. Here it is only 60 days. Due to that reason, it will be taxable, and it will be taxable in the hands of Mr. Rahul, supplier. Okay. Then next, renting of commercial property in Bengaluru to XYZ Limited, a registered company for office space, 1,50,000, definitely taxable. But sir, in case of commercial property, we have RCM only when supplier is unregistered. Here supplier is registered. Then offers PG accommodation in Kochi for 10 students who pursue a short-term skill course for a consecutive period of 90 days. Even though it is for a consecutive period of 90 days, but the charges is not less than or equals to 20,000. So that will be taxable. So in this case, first one, this 10,000 will be taxable, 40 students. So 40 into 10,000, that will be 4 lakhs. Next one directly 1,50,000. Last one 10 students into 25,000, that is 2,50,000. So the total will be 8 lakhs. Then look into question number 5. ICICI Lombard General Insurance provides coverage for the coconut palm insurance scheme, a government sponsored scheme. The scheme is exempt from GST under serial number 35 and 36 of notification, and this is a government notified scheme, therefore that insurance is exempted. In October 2024, to manage its risk, ICICI Lombard enters into the following reinsurance arrangements. Situation 1. ICICI Lombard cedes a portion of this risk associated with the coconut palm insurance scheme to General Insurance Corporation of India, another Indian reinsurer. The reinsurance premium for this transaction amount to 4 crores. See, as the main insurance is exempted, its reinsurance is also exempted. Situation 2. GIC-RE in turn cedes a part of the reinsured risk to Munich RE, a cross-border reinsurer based in Germany. This transaction, classified as retrocession, involves a premium of 2 crore. As the reinsurance is exempted, its further reinsurance, that is retrocession, is also exempted as per CBIC circular. So that is the answer for this. Then another question you see. Question number 6. Air Europa Limited, India. The Indian establishment of Air Europa Limited, a foreign airline company incorporated in Spain, provides various services as part of its operations in India. The airline company imports certain administrative and operational services from its head office in Madrid, Spain without any consideration. This is related to that import of services, that Indian establishment of a foreign airline company point. This service includes IT support, financial management, legal advisory service and staff training. Compute the value of taxable supply on which Air Europa Limited is liable to pay GST under FCM or RCM. Last line you see, what will be your answer in the above case if Government of Spain is not giving any exemption to Indian airline company operating in Spain. So now we need to divide it into two. First, if Government of Spain is giving reciprocal exemption, if Government of Spain is not giving reciprocal exemption. Now, starting with the first point. First, their outward supply you see. Outward supply is what? Passenger transportation, cargo transportation services. So they need to pay GST on that. For that, there is no exemption. So whether we have any exemption for passenger transportation, cargo transport service of airline, no, that will be taxable. For airlines, what is exempted for transportation? Starting point, ending point in northeastern states or Bagdogra and West Bengal, or viability gap funding, that is not given. And goods also, if it is outside India to India exempted, that is not given here. So therefore, these two services will be taxable, which is their outward supply. Whether Government of Spain gives exemption or not give exemption, for the Indian establishment, GST will be payable on this at 18%. So see the answer, first two rows. So outward supply, passenger transportation, cargo transportation, 2 crores into 18, 1.5 crores into 18. So 63 lakhs is their gross GST payable under FCM on outward supplies. On outward supplies, they only should pay. Next you see, they have given inward supply. First inward supply, IT support services imported from head office in Madrid without consideration. Okay, so it is exempted, provided if the Government of Spain gives reciprocal exemption. You can see here, support services from head office in Spain exempted, as the same is imported from head office without consideration if Government of Spain gives reciprocal exemption. What if Government of Spain is not giving reciprocal exemption? Then in that case, analyze. It is import of services for consideration or without consideration? Without consideration, but from a related person. So it will be supply under 7(1)(c). Is it OIDR or other than OIDR? Other than OIDR. Other than OIDR by non-taxable recipient? No. Air Europa Limited. Limited will not come under non-taxable recipient because they are not individual or trust or government. So other than NTR, and there is no reciprocal exemption. So it will be taxable under RCM. So they need to pay GST. What is the value given here? 25 lakhs. So 25 lakhs into 18%, 4,50,000. So import of other than OIDR by other than NTR exempted only if Government of Spain gives reciprocal exemption to foreign establishment of Indian airline company. Then next one, second inward supply, legal advisory services imported from head office in Madrid for consideration. For consideration, there is no exemption. So this exemption of Indian establishment of a foreign airline company is applicable only in case of without consideration. Logic is simple. There is no consideration, means no outflow. That's the reason why they have been given this exemption. If there is a cash outflow, they are not giving this exemption. So for consideration, no exemption. In both the cases, it will be taxable. Why, sir? It is from head office for consideration, supply under 7(1)(b), and it is coming under OIDR, other than OIDR, other than OIDR by other than non-taxable recipient. Therefore, it will be taxable under RCM. So on 15 lakhs, they need to pay GST 2,70,000, 2,70,000. So sorry, 20 lakhs into 18%, 3,60,000 exemption not available, as the same is import for consideration. It is other than OIDR by other than non-taxable recipient. The next one, marketing services imported from Google Incorporation for a consideration. It's a OIDR service. It's not from head office PAP. That's why no exemption. So definitely it will be taxable. OIDR service always taxable. Who will pay? If imported by NTOR, it is FCM, otherwise RCM. Here it is Air Europa Limited. It's a company and they are registered in India. So why sir they are registered in India? See their outward supply are 2 crores, 1.5 crore. Definitely they will be registered here. So where is the question of not getting registered? Definitely they are registered. So therefore they will not come under NTOR. So they will be other than NTOR. So it will be coming under RCM. So 15 lakhs into 18%, 18%. Import of digital marketing services, OIDR services by other than NTOR. Next. So catering service received from a person in India, that is not under RCM. That's not import of service, normal services. So these are the only 3, and on this GST payable under RCM. So I told you while doing a 14 marks question, 4 statements we need to prepare. First statement is what? Outward supplies. Second statement is what? GST payable and inward supply. GST payable or inward supply under RCM. Third is what? ITC. Whatever GST you paid under RCM, you can take as ITC. On this catering service, can't we take ITC? No. Outdoor catering is a blocked credit, and 3 exceptions are there. Inward supply, outward supply, same category, not applicable. Inward supply, part of outward supply, not applicable here. And statutory obligation, not applicable. Consequently, ITC not available here on this catering service. So 6 lakh 30. Now computation of net GST payable, and you see what is there. ITC very less only compared to their liability. Their liability is 63 lakhs. ITC is just 6 lakh 30,000 only. So don't apply rule 86B. First, gross GST under FCM 63 lakhs minus ITC utilized. Here it is 6 lakh 30 and here it is 10 lakh 80 and RCM liability. So 63 lakhs and 63 lakhs will be taken as the net liability. Understood? So related to this point of exemption, they can make a question like this, connecting with other import of services, because it's high time. Import of services they have not at all tested in the last 3-4 attempts. So they can ask. Moreover, there is an amendment in that import of services. That's why I have given a possible question like this. They can coin a question. Next. So we are moving on to, so these are all the questions on amendments related to exemptions. We are moving on to charge under CGST Act. You can see here levy and collection under CGST. That is not yet discussed. That is related to this salvage value insurance company, etc. That is coming in first chapter. Okay. Next, look into this levy and collection under CGST. Oh, that question you want me to do? That already QR code is there. So already the QR code is there. That transportation sector, biscuits, floor, that question only, na? Okay. QR code is there. Scan it, you will get it. Say this. So levy and collection under CGST, section 9. We are discussing section 9. Section 9 talks about who is liable to pay GST. General rule, liability to pay GST is on supplier. Liability to pay GST to government is on supplier under FCM. But there are 3 exceptional cases, 9.3, 9.4 and 9.5. In case of 9.3, liability to pay GST is on recipient. 9.4 also liability to pay GST is on recipient. And 9.5 liability to pay GST is on e-commerce operator. So when 9.3 will be applicable? In case of notified goods or services. And what are the goods and service notified? So goods are notified under notification 4/2017, service under notification 13 of 2017. And how the supplier should be? Supplier may be either registered or unregistered. Whereas when 9.4 will be applicable, if there is a promoter or builder who is making purchases from a unregistered person, then 9.4 will be applicable. What are notified? Purchases by a promoter or builder. And who will pay GST? Recipient will pay GST. Supplier should be unregistered. Then 9.5 talks about supply of notified services through e-commerce operator. Who is liable to pay GST? E-commerce operator is liable to pay GST. What are those notified services? HATE. H for housekeeping services, A for accommodation service, T for transportation of passenger service, E for eating food from a restaurant. In case of housekeeping services, like a supplier should be unregistered. Accommodation service also supplier should be unregistered. But the next 2 services is there, na, T and E. Supplier may or may not be registered. You can see there. So in case of, that's why I gave it like HATE. First 2 cases, supplier should be unregistered, then only it will come under 9(5). Next two cases, T and E, supplier may or may not be registered, always it will come under 9(5). Then what are the goods which are covered under RCM? Notification 4 of 2017, section 9(3), read with notification 4 of 2017. You need to remember this way. First, supplier is an agriculturist and the recipient is registered. So first you remember that there are 4 goods. What are those 4 goods? Raw cashew nuts, raw cotton, tendu leaves, tobacco leaves. Raw cashew nuts, raw cotton, tendu leaves, tobacco leaves. By whom? By an agriculturist. To whom? To a registered person. Then only it will be RCM. What if to an unregistered person? It is not in RCM. Then it will be FCM. If it is FCM, who will pay? Agriculturist. But agriculturist will not pay. Why will not pay? Because he is exempted from registration as per section 23. An agriculturist is exempted from registration. Who is an agriculturist? Agriculturist means individual or HUF. Only two. Individual or HUF engaged in cultivation out of land. So companies or partnership firms will maybe engaged in cultivation of land, but they will not come under agriculturist. You can see that in the next page. Agriculturist means individual or HUF engaged in cultivation of land. Should they only cultivate? Not necessary. They can employ the labor and they can do cultivation, or they can get it done through family members also. Okay. Then so that is this, but the charge will be FCM only. See, if the recipient is unregistered, the charge is FCM, but they will not pay GST. Like that you need to write. So don't change the charge. Charge will come. First you need to answer about taxability or exempted, and then you need to answer about the charge, whether it is FCM or RCM. So even if it is FCM, but if the supplier is unregistered, they will not pay GST. So you need to write GST not payable. Okay. So supplier is an agriculturist and the recipient is registered. 4 goods: raw cashew nuts, raw cotton, tendu leaves, tobacco leaves. Then next one, there are 2 goods: essential oils other than those of citrus fruit and metal scrap. This essential oil somewhere already we have come across, that is export of goods. There are some notified goods wherein you will not get the refund. In that we have essential oils other than those of citrus fruit, and again here then metal scrap. Metal scrap is a newly added amendment, that is supplier is unregistered and the recipient is registered. What if supplier is registered? It will not come under RCM, it will be FCM only. Supplier is unregistered and the recipient is registered. What if supplier is unregistered, recipient also unregistered? First of all, there is no GST, because between 2 unregistered persons there won't be GST liability. Is that clear? Sir, compulsory registration. In the RCM itself, when they say the recipient should be registered, don't bring in compulsory registration. When the RCM point is silent, the RCM itself is applicable only when the recipient is registered, means don't invoke compulsory registration there. When the RCM says import of services by other than non-taxable recipient, like that it is given. Now what if that non-taxable recipient is unregistered? Compulsorily they need to register, like that. But if the RCM itself is applicable, if the recipient is registered, then only if they are registered it will be RCM, otherwise no RCM. Got it? So that's what here it is given. Supplier is unregistered, recipient is registered, only 2 goods, that is essential oils other than those of citrus fruit and metal scrap. Then supplier is government and recipient is registered. What are they? Lottery tickets and used vehicles or seized goods or confiscated goods. So that is supplier government, recipient is registered. Then other points: silk yarn by a silk yarn manufacturer to a registered person, and priority sector lending certificates by a registered person to another registered person. These are other cases. So these are the list of transactions which are covered under RCM. You need to remember this and revise it one day before the exam, and you need to go for exam, because definitely you will get 1 or 2 points related to this for sure. In 14 marks question you may get, or in MCQ you may get, or separately also they can create a question on this. Then next one, you see this points. Point number 1, supply of metal scrap by a registered person to registered person. So it is not covered under RCM. Metal scrap by unregistered person to registered person is only in RCM, but registered to registered is not covered under RCM. Then it will be FCM. But in that case TDS will be applicable. What is the rate of TDS? 2%. So you can see, however, the said transaction is notified for TDS under section 51. That is another amendment in TDS, where the recipient is required to deduct TDS at the rate of 2% on the payment made to supplier. Now I have converged these two into this chart. Supply of metal scrap, any metal scrap, it can be iron scrap or steel scrap or any kind of metal, So don't just get carried away, but that it should be only iron metal, iron only, iron ore, or it can be steel, or it can be tungsten, or it can be titanium, any kind of metal scrap here. Okay, so this particular metal scrap by a registered person to a registered person, FCM or RCM, definitely FCM. TDS, yes, applicable. TDS also applicable. FCM applicable, TDS applicable. By registered person to unregistered person, FCM or RCM, FCM. And whether TDS is applicable? No, TDS is not applicable because the recipient is not registered. By unregistered person to registered person, FCM or RCM? RCM, RCM. TDS not applicable because the supplier is unregistered. Both should be registered, then only TDS will be applicable. Supplier unregistered, recipient also unregistered. No GST. GST not applicable and TDS also not applicable. Is it clear? Next. So see the another point. Agriculturist means individual HUF engaged in cultivation. Then as per section 23, an agriculturist is exempt from registration provided they are engaged exclusively in supply out of cultivation of land. They should not be doing any other process. For example, there is a groundnut farmer who is engaged in getting groundnuts and selling groundnuts. They are only in agriculture, their sale of agricultural produce, so they are not required to register. But they are also doing groundnut oil. They are crushing the groundnuts and extracting groundnut oil and selling groundnut oil. Now they will lose the status as exclusively agriculturist. So therefore, in that case, we need to see their aggregate turnover. If that is crossing threshold limit, then they need to register. Till the time they are making exclusively agricultural produce, sale of agricultural produce, they are not required to get registered. Then look into some other points. The maximum rate of GST is 40%. So 20% CGST, 20% SGST. But right now the maximum effective rate is 28%. It can go up to 40%. That is the meaning. And generally GST payable to government by supplier. Therefore, if a supply is not covered under 93, 94, 95, it is always forward charge mechanism. And if a supply is covered under RCM, who is liable to pay GST to government? Recipient is liable to pay. What if the supplier has paid the GST? Whether the recipient is exonerated from payment of GST? No. Exonerated means relieved from payment of GST? No. So it is as good as recipient has not paid GST. So the recovery will be initiated on recipient, whereas the supplier has paid excess tax. So he will be getting the refund. So if a supply is covered under RCM, recipient is not exonerated from payment of GST if supplier discharges the liability. In such case, recovery of tax can be initiated by department on the recipient for non-payment of GST. GST under RCM is always payable using the electronic cash ledger. Yes, because we cannot use electronic rate ledger for payment of GST under RCM. Then you can see here notified services under notification 13 of 2017. Sir, CG got salads. This is the list of services you need to remember. First, S for what? Security lending services. I for import of services. R for renting of motor vehicles. Another R for renting of immovable property. Then CG, copyright services. And G for GTA, goods transport agency services. Then G, government services to business entities. O for overseeing committee services to RBI. T, TDR, FSI and long-term lease. Then salads. Sir, CG got salads. S for sponsorship services. A for agent services. Then L, that is legal service by individual advocate or firm of advocate. Another A for arbitrator services. Then D, yes. D for director services to company or body corporate. Last, yes, security agency services. Now, we will see for each and every service what are the exemptions and is there any condition for RCM and non-applicability of RCM. Non-applicability of RCM means exception. Generally, these are covered under RCM. Non-applicability of RCM means in exceptional cases it will be FCM. First, security lending. So, in case of security lending scheme, there is a lender of securities who is giving securities to the borrower of securities and it is a SEBI approved scheme. In that case, the borrower is required to pay the lending fees. On that lending fees, the borrower only will pay GST under RCM. We don't have any exemption and we don't have condition for RCM, non-applicability of RCM. Then import of services. Just now we completed import of services. There are two exemptions. Exemption number 1, import of other than OIDR services by non-taxable recipient is exempted, or Indian establishment of a foreign airline company importing service from its head office without consideration provided there is a reciprocal exemption. These are the two exemptions for import of service. In other cases it will be taxable. Do we have any condition for RCM? No condition for RCM. But non-applicability of RCM. Generally import of service is RCM, but one case it will not be RCM. What is that? Import of OIDR services by non-taxable online recipient. Then next step. Renting of motor vehicles. We have seen in exemption for renting of motor vehicles, we have 4 exemptions. Number 1, hiring of motor vehicle that can carry more than 12 passengers to a state road transport undertaking, hiring of electric vehicle that can carry more than 12 passengers to a local authority, and hiring of motor vehicle that can carry goods to a GTA, hiring of bus to a person who provides transportation service to education institution up to 12th standard or equivalent. These are the 4 exemptions. Other case it will be taxable. Wherever it is taxable, there are 3 conditions for RCM. What are the 3 conditions for RCM? Supplier should be other than body corporate. Recipient should be body corporate. Rate of GST should be 5%. If any one condition not satisfied, it will be FCM. And what is the meaning of body corporate? You just write down there. Body corporate means private limited company or public limited company or body under any law. Private limited company or public limited company or body under any law. Body under any law means, so ICI, ICSI, ICMA, RBI, SEBI, all these are coming under body corporates. Okay. However, so LLP is a body corporate or not a body corporate? Not a body corporate. That also you write down there. LLP is treated as a firm, clearly defined in notification. So in the notification itself it is given, so no debate in this. So clearly they have given that LLP will come under firm. So therefore LLP should not be treated as body corporate for the purpose of GST. It should be treated as firm only. Okay. So here when it will be 5%, usually the rate of 5% will be applicable in case the cost of fuel is included in the rental. So when I am giving motor vehicle on rent to you, the cost of fuel is included and I am not taking ITC on my inward supply, the rate is 5%. Otherwise we have some other rates also. So in the question only 5% is given, we need to take RCM, otherwise RCM will not be applicable. Then next one, renting of immobile property. In case of renting of immobile property, for residential property we have seen some exemptions. What is that? Residential property for residential purpose to an unregistered person, or residential property for residential purpose to a registered individual for family stay. Even that accommodation services latest amendment is applicable for residential property as well as commercial property. And what is that? Minimum stay of 90 days, that is greater than or equals to 90 days and subject to maximum of 20,000 per month per person. Then for residential property, do we have any condition for RCM? Yes, there is a condition for RCM. What is that condition for RCM? Recipient should be registered. If the recipient is registered, then it will be covered under RCM. Okay. What if recipient is unregistered? Then it will be FCM. That is, wherever it is exempted, it is exempted. In the remaining cases, if it is for commercial purpose, it will be taxable. Na. There, if the recipient is registered, then it will be RCM. If the recipient is unregistered, then it will be FCM. Then in case of commercial property, there are 2 conditions. For residential property, only 1 condition for RCM, that is the recipient should be registered. For commercial property, 2 conditions are there, that is supplier should be unregistered and the recipient should be registered. Otherwise, if the supplier is registered, definitely it will be FCM. And if the question is silent about registration of a person, you need to take the assumption that the person is unregistered person. Already in the list of assumptions I have included that when the registration of a person is not given, just they gave A Limited or Mr. Rahul, like that they have not given anything, then we need to treat them as unregistered persons only. Then next one, see for copyright services. In case of copyrights, total 4 copyrights are there. Original literary. Original literary means what? Books, novels, etc. And then dramatic works. Dramatic works means stories, screenplay, writings. And then musical works. Musical works means composing music, like background score or playback, etc. Then artistic works, drawings, designs, etc. All these 4 copyrights should be by an individual. By individual. It should be by an individual to any person. For example, there is a company, music company. That music company owns the copyright of the music, which is giving it to any other person. They get a royalty, FCM or RCM? FCM only. It will not come under RCM. A music director who is an individual giving the music to the music company, will it come under RCM? Yes, it will come under RCM. And moreover, remember, it is temporary transfer of IPR. It's not a permanent transfer of IPR. Temporary transfer means permanent transfer will come under supply of goods. And in this case, do we have any exemption? For all these 4 copyrights, we don't have any exemption. So it will be always taxable, and any condition for RCM, no condition for RCM. Any exception to RCM, only one place there is an exception to RCM. What is that? Author. Author can opt to pay GST under FCM. But when author opts to pay GST under FCM for the next 1 year from the date of exercising the option, author only will pay GST under FCM. Why will an author opt to pay GST under FCM? Because the author, if opts for RCM, when his outward supply covered under RCM, author cannot take ITC on their inward supplies. Due to that reason, they will be going for FCM. But the problem is that for the next 1 year from the date of exercising the option, they only should pay GST under FCM. Then next we have goods transport agency. For goods transport agency, just now we discussed 3 exemptions: specified goods, agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural man-made disasters, defense and military equipment. Second point is what? If the recipient is individual, HUF or a trust, are AJP and they are unregistered and not having factory, or if the recipient is government which is registered only for deducting TDS. These are the 3 exemptions. In other cases, GTA services will be taxable. Wherever it is taxable, do we have any condition for RCM? Check there, no. And is there any exception? Yes. GTA can opt to pay GST under FCM. If you observe the entire table, only 2 places this option of opting for FCM is there. That is for author and next for GTA. But the difference is that author will be opting for FCM for the next 1 year from the date of exercising the option. They will only pay GST. But in case of GTA, for every financial year they need to opt for FCM, and that option they need to select between 1st January to 31st March of the preceding financial year. Then next we have government services. In this government services we have 14 specific exemptions and 2 general exemptions, and this government services is to business entities. It will also include services provided by court or tribunal or state legislature or parliament to business entity also. But court or tribunal is excluded from supply. So what is covered here? Court or tribunal premises will be given on rental also, so that will be covered under supply. Only legal fees collected by court or tribunal is excluded from supply. So these services are covered here under government services. And do we have any condition for RCM? No condition for RCM, only the exemptions. And there are 5 situations where RCM will not be applicable. That is renting of immovable property to unregistered business entity, Department of Post, railways, transportation of goods or passengers, and airport or port services. Then next we have O for overseeing committee. There is an overseeing committee which is appointed by RBI for the purpose of restructuring the non-performing assets of the banks. For that, this overseeing committee will get a commission from RBI. That commission earned by this overseeing committee, RBI only will pay. We don't have any exemption, we don't have condition for RCM and non-applicability of RCM. Then next we have TDR, FSI and long-term lease. TDR, transferable development rates, FSI, floor space index and long-term lease. In that connection, we have one exemption. What is that? If their promoter or builder is using this for construction of residential units, to the proportion of residential units booked before completion divided by total carpet area, that is exempted. Remaining will be taxable under RCM. Do we have any condition for RCM? No. Non-applicability of RCM also no. Then we have sponsorship services. SALADS, sponsorship services. For sponsorship services, we have seen one exemption. What is that? Sponsorship provided by recognized sports body is exempted. Other sponsorship will be taxable. What is the condition for RCM? The recipient should be body, corporate or firm. What if the recipient is other than body, corporate or firm? Then it will be covered under FCM. Then next, A for agent services. Who are the agents covered there? Total 5 agents you can see. Insurance agent providing services to insurance company. Liability to pay GST is on insurance company. But do we have any exemption? Yes. If the insurance agent is a business facilitator or business correspondent working in rural area, then it is exempted. Any condition for RCM? No. Any non-applicability of RCM? Also no. Next point you see, there is a recovery agent. That recovery agent is providing service to bank, financial institution, NBFC. What if there is a recovery agent who is providing service to a car dealer or another person? That will be not covered under RCM. Only recovery agent should be providing services to bank, financial institution, NBFC. Do we have any exemption for recovery agent? No. And any condition? No. Any exception to RCM? No. Whereas next one, direct selling agent. Recovery agent basically recovers the outstanding loans, whereas direct selling agent will do the marketing of the banking products. Direct selling agent to again bank, financial institution, NBFC. Any exemption? No. But there is a condition for RCM. What is that? Supplier should be other than body corporate or firm. What if supplier is body corporate or firm? They only will pay GST under FCM. Then next one, business facilitator to a banking company. Do we have any exemption? Yes. If the business facilitator is working in a rural area, then it will be exempted. Any condition for RCM? No. Non-applicability of RCM also no. Then the next one is not business correspondent, it is agent of business correspondent. Agent of business correspondent providing services to the business correspondent. What about business correspondent service? It is FCM only. Only business facilitator service is RCM. Agent of business correspondent providing services to the business correspondent, it will be covered under RCM. There also we have one exemption, that is if the agent of business correspondent is working in rural area, the commission earned by them will be exempted. Do we have any condition for RCM? No. Non-applicability of RCM also we don't have anything there. Then legal services provided by individual advocate or firm of advocate. We have 4 exemptions. If they provide services to a person other than business entity, it will be exempted. If they provide services to another individual advocate or firm of advocate, exempted. If they provide services to government, it is exempted. Central government, state government, local authority, government authority or government entity, not government agency, then it is exempted. If they provide services to a business entity whose turnover during the previous year does not exceed threshold limit, it is exempted. However, out of these 4 exemptions, the second exemption, that is services, third point, services to another individual advocate or firm of advocate, is not applicable to senior advocate. For senior advocate, exemption number 1 and 2 and 4 will be applicable. And any condition for RCM? No. Non-applicability of RCM also we don't have anything. Then services provided by arbitrator to business entity, same like senior advocate. If they provide service to person other than business entity, exempted. If they provide services to government, it is exempted. If they provide service to business entity whose turnover during previous year does not exceed threshold limit, it is exempted. Any condition for RCM? No. Non-applicability of RCM also we don't have anything. Then last 2, director services to company or body corporate. You remember, if the director is an employee of the company, how we will know that he is an employee of the company? Definitely TDS will be deducted under section 192 of Income Tax Act, or it will be given in the question that these under contract of service, not contract for service. Then in that case, the director is an employee of the company and the salary will be excluded from supply. Otherwise, the director will be covered under supply. In that case, payment of GST is by the company under RCM. What if the director is acting in his personal capacity? For example, I am a director of a company. I participate in the board meetings for which I get the sitting fees. On the sitting fees, I will not pay GST. The company only will pay GST under RCM. However, I own a property. That property I am giving on rent to the company. Now, will it be coming under director service? No, it will come under renting of immobile property services. So, see the last point, exception to RCM, that is non-applicability of RCM. If the director is providing service in his personal capacity, that cannot be coming under RCM. We need to check based on the service. Then last, security agency services. Security agency is like a manpower supply agency which will be providing the manpower. And in the security agency service, we have one exemption we have seen. What is that? Security agency providing security personnel within the premises to an education institution providing education up to 12th standard or equivalent, that is exempted. And is there any condition for RCM? Yes, 2 conditions are there. Supplier should be other than body corporate and the recipient should be registered, not body corporate. Recipient is registered, but they should not be opting for composition scheme and they are not registered only for deducting TDS. If these 2 conditions are satisfied, RCM, otherwise it will be FCM. Done. So we completed the list of services. This table, somehow it should be injected in your brain, okay? And because whenever you read the transaction, you need to apply this and analyze whether it is exempted or taxable and where it will be coming. For sure, without touching this table, you will not be writing your exam. So 14 marks question, definitely you will come across this, okay? So that's the reason why you revise it as many number of times as you can. That is very, very important. Then next. So what we have seen so far is section 9 subsection 3, notification 4 of 2017, list of goods under RCM, notification 13 of 2017, list of services under RCM. Now we are moving on to section 9 subsection 4. 9 subsection 4 is applicable whenever there is a promoter or builder who is making purchases from an unregistered person. Now this 9 subsection 4 is a long time due. They have not at all asked any question in this. Maybe ICA feels that it is not important also, but just quickly we will try to understand what is it about. First of all, section 9 subsection 4 will come into picture whenever there is a promoter or builder who is purchasing from an unregistered person. Now the purchases of promoter or builder will be divided into capital goods, cement and other inputs and input services. First step number 1, you see capital goods. Whether capital goods is purchased from a registered person or unregistered person. Say capital goods is purchased from a registered person. Already they paid GST to that supplier. The supplier would have paid to government, so there is no loss of revenue to government, so ignore. Whereas if the capital goods are purchased by the promoter or builder from an unregistered person, then the promoter or builder is required to pay GST under RCM. At what rate? Because he purchased from unregistered person means there is no GST paid to the supplier. So he need to pay GST under RCM. The intention is very simple. They wanted to tax the real estate transactions. Moreover, why will they buy from an unregistered person? Because this particular builder is under construction of real estate projects, which is residential real estate projects. Residential real estate project, the rate of GST is 1.5%, 7.5% without ITC. So naturally they will buy from an unregistered person to save the GST there. That's why government is telling that they need to pay GST under RCM. In case of capital goods purchased from unregistered person, what is the rate at which they need to pay GST? At the rate applicable to capital goods. If the capital goods is 12%, they will pay 12%. If the capital goods is 18%, they will pay 18%. If the capital goods is 28%, then they will pay 28%. If the capital goods is exempted, no need to pay GST under RCM. Then, suppose if it is cement, so we need to see again whether cement is purchased from a registered person or unregistered person. Cement is purchased from registered person, already GST paid, so ignore. If cement is purchased from unregistered person by the promoter or builder, then they need to pay GST under RCM at the rate of 28%, because that is the rate applicable to cement, so 28% should be taken. Whereas other inputs and input services from an unregistered person divided by total inputs and input services, we have a relaxation. Up to 20% you can buy from unregistered person, because naturally there are some inward supplies like cement, manpower, etc. and all, which will be from an unregistered person only. That's why 20% relaxation is given. So you need to see other inputs and input services from unregistered person divided by total inputs and input services. While taking the total inputs and input services, don't count 5 inputs and input services. What is that? TDR, FSI, long-term lease. Why it should not be taken? Because it's already covered under 9 subsection 3. Anyhow, we need to pay GST under RCM, so don't take. Electricity, don't take, because electricity is exempted. So naturally, we will receive it from an unregistered person only. Thereafter, petrol, diesel and natural gas. These are non-taxable supplies, so we will get it from an unregistered person only, so exclude this. Why alcoholic liquor for human consumption not given? Because it's no way connected to construction. And why this aviation turbine fuel or crude oil is given? Why we will use aviation turbine fuel and crude oil in construction? We will not use. So due to that reason, it is not given there, and remaining things are given, so we need to take out. So now we need to see inward supply from unregistered person divided by total inputs and input service into 100. If it is up to 20%, it's okay, allowed. Up to 20%, leave it, it's okay, allowed. So we don't have to pay any GST and RCM. What if it is beyond 20%? So how much is allowed? 20. Beyond 20% means, say for example 24%. Then on that excess 4% is there na, you need to pay GST under RCM. At what rate? 18%. What if those goods are taxable at 12? 18%. What if those goods are exempted? 18%. You understood or not? Flat 18% you need to pay. What if it is more than 18%? Will not come, because that's already covered under cement. So cement already we are paying 28%. Okay. So GST payable under RCM on the excess over 20% at what rate? 18% under RCM. That is with respect to this. And I'll give you one small question just to have an understanding of this. So say this, there is a purchase, inward supplies, of promoter or builder, inward supplies of promoter, or builder, we have from unregistered person and from registered person. Capital goods from unregistered person 20 lakhs, and from registered person 40 lakhs. And the rate applicable to capital goods is say 18%. Then cement. Cement purchased from unregistered person 10 lakhs, from registered person 30 lakhs. Then we have other inputs and input services, other inputs and input services. From registered person 40 lakhs and from unregistered person 50 lakhs. So registered is 50, unregistered is 40. Now we need to compute GST payable under section 9 subsection 4. So what we will do in this case? First, step number 1. Step number 1 is with respect to capital goods. Capital goods, whatever is purchased from registered person, ignore. Purchased from unregistered person you take, that will be 20 lakhs. On the 20 lakhs into 18%, that will be, so 3,60,000 will be taken. Then step 2. Step 2 is cement. So you need to see cement. How much is the value of cement? From unregistered person 10 lakhs. On the 10 lakhs we need to take 28%, that is 2,80,000. Now you see step 3, that is other inputs and input services from unregistered person. Others from unregistered person. Others from unregistered person divided by total into 100. What is the others from unregistered person? Others from unregistered person is 10 lakhs and 40 lakhs. That will be 50 lakhs. 50 lakhs divided by total. What is the total? 10 plus 40 plus 30 plus 50. That will be 130 lakhs. 50 lakhs divided by 130 lakhs into 100. So that comes to 50 divided by 130 into 100, 38.46%. So just take 4 digits, 4615%, which is greater than 20%. So on that excess we need to pay GST, that is 130 lakhs into 18.4615%. On that the GST rate will be 18%. Okay, so 130 lakhs into 18.4615%. On that 18% will come to 4,31,999. So 32,000. So now total GST under RCM, total GST payable under RCM, that will be how much? So this 40 only, na? 40 only. Why you said 50? 40 by 130. You did not tell, I only said. Other input, cement already considered, na? Cement already considered. So then it is 40 only. From unregistered person 40, not 50, 40. 40 divided by 130 into 100. So 40 divided by 130 into 100, then also it will be more only 30.7692%, and therefore here we will not take 18, we will take a different number, that is 10.7692%. So you calculate that again, 130 lakhs into 10.7692% into 18%, that will come to 2,52,000. Now you do the total, 2,52,000 plus 2,80,000 plus 3,60,000, that will come to 8,92,000. This will be the total GST payable under RCM under section 9(4). Okay. So maybe if you get a question like this, you need to write the answer. That is about 9 subsection 4. Then you can see 9 subsection 5, liability to pay GST on e-commerce operator. There are 4 notified service: housekeeping services, accommodation service, transportation of passengers, and eating food from restaurant. In case of H&A, supplier should be unregistered. In case of T&E, supplier may or may not be registered. And in case of housekeeping service, what if supplier is registered? Then it will be covered under FCM. Means 9.5 is not applicable. Same way, accommodation services, what if the supplier is registered? Again 9.5 will not come, supplier only will pay GST. In case of transportation of passengers by any motor vehicle, so in that case we have one exception, that is if it is by a company through omnibus, there is a company which is transporting passengers through omnibus, it's not covered under 9.5, so FCM, so supplier only will pay GST. So what is a omnibus? Capacity greater than 6 passengers. Passengers means excluding driver seat. Capacity greater than 6. Greater than 6 means 7 plus driver seat if you add 8. So 8-seater vehicles. If it is a 8-seater vehicle, okay. So omnibus means what? 8-seater vehicle. 8 seaters. 8-seater vehicle. Then it will be called as omnibus. If the transportation is through omnibus by a company, then it will be coming under FCM only, 9.5 will not be applicable. Same way for last point also, eating food in a restaurant also we have an exception. What is that exception? If the restaurant is in this specified premises, what is the specified premises? There is a hotel. That hotel, accommodation in the hotel, that is any one room in that hotel is greater than 7,500 rupees per day. In that hotel there is a restaurant. That restaurant is selling food through Swiggy or Zomato. The restaurant only will pay GST. Swiggy, Zomato will not pay GST. If the restaurant is in the specified premises, that is in a hotel, having declared tariff greater than 7,500 per day. Okay. So then it is not covered under 9.5. So FCM, supplier only will pay. Like this, these 4 notified services, we have 4 exceptions. Now, important points. Whenever e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. Generally, e-commerce operator required to deduct TCS, but in case of 9.5 it is not applicable because they are only paying GST. So TCS under section 52 and section 9.5 GST liability by e-commerce operator is mutually exclusive. Whenever 9.5 comes, section 52 will not come. Whenever section 52 comes, 9.5 will not come. Only in case of notified services, that is this 4 notified services, GST payable by e-commerce operator. In other cases, who will pay GST? Supplier only shall pay GST, and e-commerce operator will pay GST on what? On the commission. E-commerce operator will get a commission. Now on that commission, e-commerce operator will pay GST, and every e-commerce operator who is liable to pay GST or who is liable to deduct TCS is compulsorily required to get registered. Then what about supplier of goods through e-commerce operator? In case of supply of goods through e-commerce operator, it's not notified under 9.5. Supplier only will pay GST. Are they compulsorily required to get registered? If they are making only intrastate supplies, then they are not compulsorily required to get registered. They need to register only when aggregate turnover exceeds threshold limit. Otherwise, every supplier of goods through e-commerce operator is compulsorily required to get registered. However, if such supplier is making only intrastate supplies, they should register as and when aggregate turnover exceed threshold limit for registration, and they should obtain a unique enrollment number. Then supplier of notified service or supplier of other than notified services, they need to register only when aggregate turnover exceeds threshold limit. There is no compulsory registration for service provider through e-commerce operator. Only for supplier of goods through e-commerce operator only we have compulsory registration. Then next one, if the e-commerce operator is liable to pay GST under 9.5, we need to check whether they have physical presence in India. If they have physical presence in India, they shall register and pay GST. What if they don't have physical presence? Then they should appoint a representative, and that representative shall register and pay GST. What if they don't have representative also? They shall appoint. In the absence, they shall appoint a representative, and that representative shall register and pay GST. That is about this section 9.5. And this section 9.5 is connected to TDS and TCS. TCS provisions are applicable. So kindly look into payment process chapter. There we have this TDS and TCS. You can see that, which is in page number 135, 140. Page number 140, TDS and TCS under GST. Section 51 deals with TDS and section 52 deals with TCS. And when TDS will be applicable? Whenever the supplies are made to notified recipients, then TDS will be applicable. What is the rate at which TDS will be deducted? 2%. Who are those notified recipients? So these people are called as the notified recipients. So central government, state government, local authority. First point. Second point, government, society. Third point, public sector undertaking. Fourth point, any government body or authority in which government has invested greater than or equals to 51%. Here it is 51% here. Okay. Then next, registered person receiving metal scrap from another registered person. So this metal scrap is newly notified. So I am a registered person making sale of metal scrap to another registered person. It is covered under, like TDS, 2% TDS. So these people are the notified recipients. And next you can see who is liable to deduct and at what rate. So TDS will be deducted at the rate of 2%. What is the non-applicability of TDS? And in this 2%, if it is intrastate, CGST 1%, SGST 1%. If it is interstate, IGST 2%. Non-applicability of TDS. If the supplier is unregistered, TDS cannot be deducted, because whatever TDS that is deducted will be reflected in the GSTR 2A of the supplier, and it will go to the electronic cash ledger of the supplier, and the supplier can utilize it for payment of his liability. If the supplier is unregistered, what is the use of deducting the TDS? So mainly the deduction of TDS is to find the turnover of the supplier. If the turnover of the supplier, if the supplier suppresses the turnover, there should be some kind of cross-check mechanism. That's the reason why the notified recipients will deduct 2%. If 2% is this much, then they can recalculate and compute as to how much is the turnover of the supplier. So if the supplier is unregistered, TDS not applicable. If the supplies are exempted or non-taxable, we don't have to find the supplier turnover na. So that's why TDS is not applicable. If the contract value of supply does not exceed 2,50,000, it's not invoice value, it's contract value of supplies, means total value of supplies under the contract. While computing the contract value, we should include GST or exclude GST? Exclude GST. It should not exceed 2,50,000, then TDS not applicable. If it exceeds 2,50,000, then TDS is applicable. And whenever TDS is applicable, for applicability only we check this 2,50,000. Whenever TDS is applicable, TDS will be computed on the amount remitted. How much ever amount they are remitting, on that only TDS is computed. For example, you are government, I enter into contract with you to supply the goods for 6 months. For 6 months, the value of supply under the contract is 8 lakhs. First month I delivered goods for 1 lakh. Now you are out of this 1 lakh, you are paying me 90,000. Now you need to compute TDS only on 90,000. Then supplies between notified recipients. So between notified recipients means here you can see between government to PSU or PSU to government or government body, etc. If there is any supplies between them, TDS is not applicable. However, there is an exception. However, it is other than supply of metal scrap. For example, if there is a registered person supplying metal scrap to a PSU, definitely TDS will be applicable, even though it is supplies between registered persons, notified persons. If there is a PSU which is supplying metal scrap to government, or government supplying metal scrap to PSU, even though it is between notified recipients, definitely TDS will be applicable. For metal scrap, it is an exception. That's a newly added point. You can see supplies between notified recipients other than supply of metal scrap. Then recipient liable to pay GST under RCM. The liability is on recipient, so therefore TDS is not applicable. Then last point, it is an intrastate supply, but the location of supplier and place of supply is in the same state, but the recipient is in the different state. For example, supplier in Tamil Nadu, place of supply also Tamil Nadu, but the recipient is in Andhra Pradesh. So Andhra Pradesh recipient cannot deduct TDS. So because it is an intrastate, means CGST 1% and 1% towards Tamil Nadu SGST, but the recipient is in the other state, they cannot deduct TDS. So TDS is not applicable. So when TDS is not applicable, if it is an intrastate supply but the recipient is in the another state. So location of recipient and place of supply not in the same state, that is, see the below, TDS not applicable if it is an intrastate supply and the recipient is in the another state, and TDS will be computed on amount remitted to the supplier by the recipient. Then next one, so computation and compliance. So computation and compliance you can see here. So TDS under section 51 is computed on what? Always on the value excluding GST. TDS deducted shall be payable to government. What is the time limit by which TDS should be remitted to government? 10th of the month following every month. What is the return that they will file? GSTR 7. By 10th of the month following every month. Also they need to give a certificate in GSTR 7A. And what is the late fee for delay in filing TDS return? 25 rupees per day subject to maximum 1000 rupees under each act. And are they required to file any annual return? No, they are not required to file annual return. As they are filing GSTR 7 late, definitely there will be delay in payment of TDS, for which they need to pay even interest also. interest at the rate of 18% per annum from the due date, that is 10, till the actual date of payment. So interest at 18% per annum is payable for the period of delay in payment of TDS, TCS. And there is a general penalty also which is applicable. What is a general penalty? Up to 25,000 under CGST, up to 25,000 for non-compliance, and for TDS default there is a specific penalty. TDS, TCS default, what is that? 122 subsection 1, bio discredits TFT. In the TDS, TCS is there. So that is 10,000 rupees or 100% of TDS, TCS, whichever is higher under each act. And whatever TDS, TCS deducted shall be reflected in 2A of the supplier, and that is there in the electronic cash ledger. So as it is coming in electronic cash ledger, not electronic credit ledger, it can be used for payment of any liability. It can be used for payment of tax, it can be payment for interest, like penalty or late fee, for anything we can use it. Then coming back to TCS. So for whatever we have discussed is TDS related provisions. So look into TCS. When TCS will be applicable? If the supplies are through e-commerce operator, then TCS will be applicable. So who will deduct TCS? E-commerce operator. What is the logic? 1 second, went off. Yes, have a look into the book. What is the logic behind this TCS that is deducted? Again, same reason. Whatever is the logic that is there for TDS, the same logic. Whatever e-commerce operator remitting to the supplier may suppress his turnover, for which e-commerce operator should deduct 0.5%. Now it's amended, not 1%, 0.5%. 0.5% of the value. So they need to compute TCS, so that the supplier, if he suppresses the turnover also, department will come to know. So therefore TCS, whenever supplies through e-commerce operator, and see one point below, supplier should be different from e-commerce operator, and such e-commerce operator should not be mere agent, that is a payment gateway or the logistics operators. So generally payment gateways and logistics operators cannot be called as e-commerce operator. For example, Paytm or Razorpay, etc., they will not be called as e-commerce operators, and they will not deduct any TCS. Supplier should be different from e-commerce operator means, for example, you take Max Garments or you take Agio, etc. They are selling their own garments through their own app. That is not called as supply through e-commerce operator. If they sell through Myntra, then only it will be called as supply through e-commerce operator. Who is liable to deduct and at what rate? E-commerce operator will be deducting at the rate of 0.5%. And what is the non-applicability of TCS? So first point is same. When the supplier is unregistered, there is no point in deducting the TCS. When the supplies are exempted or non-taxable, then also TCS is not applicable. And notified service under 9.5, because in case of 9.5 liability is on e-commerce operator, so TCS not applicable. This point already we discussed there. And last point, you see, payment not collected by e-commerce operator. Sometimes the supplier will directly collect the payment and the e-commerce operator just deliver the goods. So therefore TCS not applicable in that case. Payment is not collected by e-commerce operator. Then you can see next page, computation and complaints. TCS will be computed on payment towards contract value excluding GST. So we will take the payment towards contract value minus returns. So whatever is the supplies made during the period minus sales returns during the period. On the difference only TCS will be computed. And TCS deducted should be remitted by what date? Same, 10th of the month following every month. What is the return in which they need to remit? GSTR 8. That GSTR 8 to be filed by 10th of the month following every month. And whether they need to file any annual return? Yes, they need to file annual return also. Whereas TCS certificate and all is not there. And what is the late fee for delay in filing GSTR 8? Here it is 100 rupees per day, subject to maximum 5,000 under each act. If you observe there, GSTR 7 TDS is 25 rupees per day, subject to maximum 1,000. But TCS is 100 rupees per day, subject to maximum 5,000. Got it? Then whether TDS annual return is required to be filed? No. But TCS annual return to be filed in GSTR 9B by 31st December of the succeeding financial year, but it is not yet notified. Provision is there, but reality they have not yet implemented GSTR 9B, but provision is there in the act. Then for all these things, this is common. That is, for delay in filing GSTR 8, there is a delay in payment of TCS, so interest will definitely be applicable at the rate of 18% per annum for the period of delay. This general penalty, TDS, TCS, even where it will come, everything is same. And can we rectify TDS return? No, we cannot rectify TDS return, but can we rectify TCS return? Yes. What is the time limit for rectification? I told you 5 time limits are same. That is time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR1, GSTR3B and GSTR8. It is 30th November of succeeding financial year or the date on which annual return is filed, whichever is earlier. Then you can see one illustration on TCS. So here there is a supplier Xiaomi and e-commerce operator Amazon, and there is a buyer. Now what happens? First the supplier will enter into contract with Amazon to list the product and sell it in Amazon, for which Amazon will get a commission of 1000 rupees. Is it supply of notified services through e-commerce operator, HATE? No. So it is supply of goods through e-commerce operator. So who will pay GST? Supplier will pay GST on the transaction, but GST will be payable on e-commerce operator on what? Only on the commission. Whatever commission they are getting, on that only they will pay GST. So they get a commission of 1000 rupees plus 18%. That is step number 1. Step number 2. So there is a buyer who will place an order for the mobile in Amazon. Step number 3. Xiaomi supplier will deliver the mobile along with GST to e-commerce operator. Now e-commerce operator will deliver the mobile to the buyer. Now the buyer will make payment of 12,800. Now e-commerce operator collected 12,800. In that 12,800, e-commerce operator will be deducting their commission. What is the commission? 12,800 minus 1000 plus even GST on commission also they will deduct. That is 180. Okay, 1000 into 18%, 180. Plus they have to pay TCS. What is the TCS? 0.5%. 0.5% of what? 10,000. Value excluding GST. So 10,000 into 0.5% is 50 rupees. So minus 50 they will deduct. So balance 11,570 they will be remitting to the supplier. Got it? And they should pay GST to government. So what is the GST on 1000? 18%, 180 plus they will also pay TCS. What is the TCS? 0.5%, 50. Now carefully listen. Whenever they pay GST on commission, they are invoicing it to the supplier. So supplier can take ITC of this 180 rupees. So this 180 can be taken as ITC supplier plus whatever TCS they are deducting 50, that can also be taken as ITC by the supplier. And so TCS credit 50 and ITC 180. Now the supplier should pay GST on the mobile, not 2,800 rupees. While paying this 2,800 rupees, they will deduct 180 and 50. So 2,570 is the net liability. So this is how the concept of TCS operates, and the liability will be on e-commerce operator and the supplier. What if the transaction is covered under 9.5? If this transaction is covered under 9.5, this TCS discussion will not be arising, because entire GST will be payable by e-commerce operator only. Now, look into the next page. Details of TCS furnished by e-commerce operator to be made available electronically only to registered suppliers. This is the point I was referring to. Only if the supplier is registered, TCS is applicable. If the supplier is not registered, TCS is not applicable. Then, what if there are multiple e-commerce operators in a single transaction? Who will be deducting the TCS? In case of multiple e-commerce operators, the supplier side e-commerce operator only will deduct the TCS. Okay. So such e-commerce operator who finally releases the payment to the supplier is liable to deduct TCS, that is supplier side e-commerce operator. For example, there are 4 sellers A, B, C, D, and they are listed in Meesho e-commerce operator 1. Meesho in turn listed with Amazon e-commerce operator 2, and Meesho gets a commission of 25%. Out of that they retain 15% and they share 10%, or they retain 10% and they share 15% with Amazon, and Amazon will list the product and will be selling it to the buyers. Now buyer will make payment to Amazon, and Amazon will cut a commission of 15% and the GST, and they will be remitting it to e-commerce operator. Now e-commerce operator will cut a commission of 25%, but already 15 is cut, so extra 10% they will cut along with GST, and TCS also they will deduct. So Amazon will not deduct TCS, Meesho only will deduct the TCS. Payment minus TCS minus commission and GST on commission. So that's what I told you, that e-commerce operator who finally releases the payment. What if supplier and supplier side e-commerce operator is same? For example, seller is Reliance Trends and e-commerce operator 1 is Ajio, and which is listing through Myntra and then the sale is made to the buyers. Even though there are two e-commerce operators, but literally there is only one e-commerce operator, because the supplier and supplier side e-commerce operator is same person. So then in that case, only one e-commerce operator is there, that is buyer side e-commerce operator. So they will only deduct TCS. However, if the supplier and supplier side e-commerce operator is same person, then the recipient side e-commerce operator is liable to deduct TCS. Then each e-commerce operator involved is required to pay GST on the commission earned by them. Then GSTR 8 is a TCS return. Whether nil return needs to be filed? No. GSTR 8, filing of nil GSTR 8 is not mandatory if there is no transaction in a particular month. And this is one very important point. Supply is made in October month, means invoice is made. For example, I am the supplier, you are the e-commerce operator. I am making supply in October month, and you delivered the product in November month and you collected the money in November month. Now whether you need to deduct the TCS for November month or October month? October month only. If you deduct it for November month, there will be a mismatch between whatever returns that I have showed versus your TCS, because you will be remitting TCS for November, but I would have shown it in October. So therefore for my November month, the turnover will be less, because you would have shown TCS, but I would not have shown turnover, because already I showed the turnover for October month. So that's the reason why supply made in October month, that is invoice is raised, but the payment is collected in November month. TCS to be remitted for which month? October month only, because we need to see net value of taxable supplies made during a tax period. It's not based on payments that is collected. So which means you need to remit 0.5% in the October month itself. Then tax implications on e-commerce operator. We have one separate chapter called as e-commerce operator, like that one chapter is there in study material. So that chapter provisions only we are discussing. Okay, first, what are the popular e-commerce operator models, e-commerce models? There are three popular e-commerce models: online marketplace model, direct sales model, and inventory led model. In online marketplace model, example Amazon and Flipkart, what will happen? We will just list the product, and thereafter when the order is received, we will pack the product and deliver it to them, so they will deliver it to the customer. That is online marketplace model. And just listen to this, if at all you get a theory question, you write based on this. Okay, then next, direct sales model. In direct sales model, what will happen? So the person who owns the inventory, like who owns the product, will only be developing a e-commerce platform to deliver the product. That is direct sales model, Agio and Max. So they are not third party people, their own goods only they will be selling through their platform. That is direct sales model. Inventory led model means we will keep our inventory, that is the supplier will be delivering the inventory to the e-commerce operator. E-commerce operator only will maintain the inventory. Whenever the order is received by the e-commerce operator will deliver. That is Zepto and Blinkit is an example of inventory led model. Okay. Then supply of goods or services through e-commerce operator is categorized into three. Supply of goods through e-commerce operator, example Amazon, supplier of notified services through e-commerce operator. So example that HAT, housekeeping, accommodation, transportation and eating food. And examples we have now for housekeeping, we have Urban Club, and for accommodation, Oyo, Goibibo. For transportation of passengers, we have Ola, Uber, eating food, Swiggy, Zomato. Then supply of other services through e-commerce operator, example Book My Show. Book My Show case, supplier will be cinema theater, Book My Show is e-commerce operator, it is other than notified services. In case of first and last, who will pay GST on the transaction? Supplier will pay, whereas e-commerce operator will pay GST on the commission, and even TCS also will be applicable. GST on supply by supplier, e-commerce operator shall pay GST on commission and other charges. Whereas in the second case, who will pay GST on? GST will be payable by e-commerce operator. Now, what is the registration requirement in case of e-commerce transaction? Every e-commerce operator is compulsorily required to get registered, whether they are required to pay GST under 95 or they are required to deduct TCS under section 52. Whereas supplier of goods through e-commerce operator, whether they are compulsorily required to get registered, we have an exception. If they make only intrastate supplies and they are not engaged in e-commerce operator in more than one state, and they have obtained a UEN, unique enrollment number. Only in three places unique enrollment number will come into picture. Transporter or warehouse keeper, even though they are unregistered, they need to get a UEN, and this supplier of goods through e-commerce operator also should obtain UEN. And registration as and when aggregate turnover exceeds threshold limit. And other cases, compulsory registration. What about supply of services through e-commerce operator? Registration as and when aggregate turnover exceeds threshold limit. Got it? Then what are the compliances to be followed by e-commerce operator? Every e-commerce operator should ensure that if the supplier is unregistered, concentrate. What is the compliance to be followed by e-commerce operator when the supplier is unregistered? Then in that case, e-commerce operator should not permit the supplier to make supplies without obtaining unique enrollment number. E-commerce operator should not permit supplier to make interstate supplies, and e-commerce operator will not deduct TCS because supplier is unregistered, and e-commerce operator should report these details in GSTR 8 even though TCS is not applicable. So again it can be tested for a theory question. Okay. So hello, supply of goods only after allotment of unique enrollment number, should not permit supplier to make interstate supplies, not required to deduct TCS, should declare the details in GSTR 8. Then what about e-commerce operators compliance? If the supplier is under composition scheme, if a person is under composition scheme, they should not make interstate supplies, and therefore the e-commerce operator should ensure that the person who is under composition scheme making supply of goods through their platform should not make interstate supplies. Whether TCS is deducted or not, definitely TCS will be deducted because even though they are under composition scheme, but they are registered. Moreover, this TCS deducted will go to their electronic cash ledger only, so which they can adjust with their liability even though they are not eligible for ITC. So, but TCS will go to their cash ledger. So, TCS will be deductible, and these details will be reported in GSTR 8. This is the compliance to be followed by e-commerce operator. Then what are the penalty provisions on e-commerce operator? This we have discussed in offence and penalties. As per section 122 subsection 1, if TDS is not deducted or TCS is short deducted or deducted but not remitted, in that case the penalty will be under 122 subsection 1, which is 1000 rupees or 100% of TCS, whichever is higher. This is under each act. Whereas under 122(1)(b), 122(1)(b) also there are some offences. What is that? Allowing unregistered person to make supplies without unique enrollment number. This opposite of this. Allowing unregistered person to make supply through supply without obtaining UEN, or allowing an unregistered person to make interstate supplies, or allowing a person under composition scheme to make interstate supplies, or allowing a person under composition scheme to make services, not goods, because supply of services through e-commerce operator is disqualified under composition scheme. So allowing a person under composition scheme to make supply of services, or GSTR 8 not filed or filed with incorrect details, in that case the penalty will be under 120 subsection 1(b), which is 10,000 rupees or tax involved. Tax involved, not TCS involved. Tax involved. This point there also I stress. So tax involved, not TCS involved. So for 122(1) only TCS involved. Here it will be tax involved, whichever is higher. Got it? Because TCS is only 0.5% of value, but tax is not 0.5%. Tax will be 18%, 12% like that. And for delay in filing GSTR 8, what is the late fee? 100 rupees per day, subject to maximum 5,000. Also, interest will be payable at the rate of 18% from the due date till the actual date of payment. Then one more complication. Section 125 also will come into picture in this case. That is, there is a notice for discrepancy. When will there be discrepancy? Supplier reported more details in GSTR 1, but e-commerce operator deducted lesser amount. So, notice issued for discrepancy between GSTR 1 or 3B and GSTR 8. And the e-commerce operator has not submitted the information. Failure to furnish information, then penalty will be up to 25,000. And why general penalty is invoked? Because this is just the information which is to be given by e-commerce operator. So that is this. With this, we completed TDS, TCS, and there is one more area, that is payment process remaining, because only one section is left, so we will complete that section. So with that, this chapter is also over, because we completed section 50, interest on account of delay in payment, etc. So please look into page number 136. Page number 136, an overview of section 49. As per section 49, what are the three ledgers which will be maintained by GST network on behalf of every registered person? Electronic liability ledger, electronic credit ledger, and electronic cash ledger. What does electronic liability ledger contains? total 5, TIPFO, tax dues, interest, penalty, fees and others. Can the balance in electronic credit ledger be used for payment of tax dues as well as other dues? No. The balance in credit ledger can be used only for payment of tax dues. But the balance in cash ledger can be used for payment of tax dues as well as other dues. And so what will be the inflow into the credit ledger? How there will be inflow into credit ledger? So whenever you avail the ITC through GSTR 3B, or whenever you file ITC 1 for availment of ITC on closing stock, or ITC 2 for transfer of ITC on account of transfer of business, or ITC 2A, single registration is split into multiple registration. These are the inflows into credit ledger which will be used for payment of liability ledger. Then how the money will come into cash ledger? Whenever we make a deposit through PMT6 challan or TDS TCS deducted by the recipient and e-commerce operator will come into cash ledger, or any refunds also will come into cash ledger or credit ledger. Whatever money that is coming into cash ledger will be used for payment of liability ledger, that is a inflow into the liability ledger. So this electronic liability ledger will be PMT1, electronic credit ledger will be PMT2 and electronic cash ledger will be PMT5. So total 4 forms you need to remember now. PMT1 liability ledger, PMT2 credit ledger, PMT5 cash ledger and PMT6 will be deposit challan. And whatever balance that is there in credit ledger or cash ledger after payment of interest, penalty, etc., can the balance in ledger be refunded? Yes, but credit ledger balance we can get as a refund only in 2 places. What are they? Refund on account of zero rated supplies or inverted tax structure. But the balance in cash ledger anytime we can get as a refund. Moreover, for getting the refund of balance in cash ledger, the time limit is not applicable. Even refund is not subject to unjust enrichment also. Then special provisions with respect to cash ledger. How we will make deposit into the cash ledger? Through PMT6. What are the various modes of deposit? In customs also I told you this. Internet banking, debit card, credit card, NEFT, RTGS, cash deposit over the counter. But over the counter cash deposit, how much is permitted? Up to 10,000 rupees in a tax period is permitted. Then UPI and IMPS. Then when the payment is debited from the bank account but not credited in the cash ledger, then the communication will be made through payment gateway through PMT7. That is sometimes what will happen, money will debit in our bank account but there it is not reflected. So in that case the communication will be through the payment gateway through the portal, so that the portal will ensure that the money is received and it will be credited immediately. For that PMT7 is used. Then PMT9. PMT9 is for transfer of balances between various cells in cash ledger. In cash ledger there will be 4 major heads: CGST, SGST, IGST and cess. And for every major head there will be minor head, 5 minor heads, TIPFO. So there will be a 20 cell matrix. Now by mistake we deposited in one balance, one cell. So can it be shifted to another cell? Yes. For that we use PMT9. For transfer of balances between major heads and minor heads in ECL, for form PMT9 is notified. Not only this, one more purpose is also there for PMT9, that is for transfer of balance in the cash ledger from one distinct person to another distinct person also we can use PMT9. Balance available in the cash ledger can be transferred between distinct persons, that is form PMT9. However, transferor should not have any unpaid liability in the electronic liability ledger, means they should have completed payment, then only the excess balance can be shifted to another cash ledger. But while shifting the balances to another cash ledger of a distinct person, see, remember, credit ledger balance cannot be shifted, only cash ledger balance can be shifted. But while shifting the cash ledger balance, 2 important points you need to keep in mind. Point number 1, SGST balance cannot be shifted. SGST balance cannot be shifted, and CGST, IGST balance cannot be shifted to SGST head of the distinct person, because this provision they have not enabled in SGST Act due to that reason. So CGST, IGST can be shifted to CGST, IGST. SGST balance cannot be shifted and CGST, IGST balance cannot be shifted to SGST. But what we can do is that this SGST balance we can shift to CGST, IGST using PMT9. Thereafter from there it can go to CGST, IGST. Again from CGST, IGST it can be shifted back to SGST. We can do that. This plan is there. But they have given this provision that exam and all don't write that. SGST balance cannot be transferred to distinct person. CGST, IGST balance cannot be transferred to SGST head of a distinct person. Then special points with respect to credit ledger. We will get refund from the credit ledger only in two cases, that is zero rated supplies and inverted tax structure. Then refund to the original source ledger in case when the tax is wrongly paid or paid in excess, and that is sanctioned as a refund. Remember, it will come to the source ledger. Source ledger means how much amount we have paid. Say for example, we paid from credit ledger and cash ledger in 2:3 ratio. The refund also will come in 2/5 into credit ledger and 3/5 into cash ledger. Then for that refund into credit ledger, they will be using form PMT3, and there is form PMT3A. What is that? First, we have got refund of ITC, refund of unutilized ITC. Erroneously we claimed a refund of erroneously ITC, we have got as a refund. For example, in input tax credit, electronic credit ledger, the balance is 8 lakhs. We have claimed a refund of 5 lakhs. In that 5 lakhs, 2 lakhs is wrongly claimed refund, and this wrongly claimed refund they are recovering from us, or we are paying it. Now when we pay, then to the extent of 2 lakhs, the credit ledger should be credited. For that, they use PMT3A. When a registered person claims erroneous refund of ITC, upon payment of such refund amount along with interest and penalty, proper officer shall pass an order in PMT3A for recredit to electronic credit ledger. Then balance in credit ledger can be used only for payment of tax but cannot be used for others. Also, balance in credit ledger can be used only for payment of GST under FCM but not for payment of GST under RCM. Balance available in credit ledger may be restricted for utilization of proper officer. That is, already I took the credit in my credit ledger, then also that may be restricted by the proper officer. Then last, balance available in credit ledger can be used for payment of tax demanded under 73-74. So whenever I have evaded the tax, they give an order in 73-74, I am paying the arrears of tax. For payment of arrears of tax, can I use the balance in credit ledger? Yes. So that arrears of tax can be paid either using credit ledger as well as cash ledger. Then look into restriction on utilization of amount available in the credit ledger. There are two restrictions, 86A and 86B. Rule 86A says that whenever the ITC has been availed in credit ledger, even after availment in credit ledger also, it may be suspended by the proper officer for a maximum period up to 1 year if the supplier is not in existence, means your supplier is not in existence, or if your supplier is not doing business from the place where they have obtained registration, or you are not in existence. Sir, I am there only now, sir, which means they could not find you. Okay, you are not in existence, or you are not doing business from the place where you have obtained registration, or you have availed the ITC without actual receipt of goods or services, or the invoice is missing. Okay, or your supplier has not paid the tax to the government. You understood? In these 5 cases, so supplier is not in existence or not doing business from a place where they have obtained registration. So install a CCTV camera there. Then ITC availed by a recipient who is not in existence or not doing business from the place where they have obtained registration. ITC availed without receipt of goods. ITC availed against an invoice where the invoice is missing. Okay, invoice is missing, or supplier has not paid tax to government. In these 5 cases, even though you have availed, see, in these 5 cases, if it is noticeable before itself, it would have been kept under ITC not available in 2B. But suppose if it is coming in ITC available, you took it in your credit ledger, even then it can be suspended for a maximum period of 1 year. That is the intention behind this rule. Okay. GST officer has power to disallow the set-off of provisional credit against GST payable for a maximum period of 1 year if he is of the opinion that these 5 points. What will happen upon expiry of 1 year? Upon expiry of 1 year from the date of restriction. So what will happen when it is restricted? Definitely you will ask the officer, sir, why are you restricting? He will tell your supplier is not in existence or doing business from a place where different place. You will go to the supplier and ask, bloody idiot, you file your registration amendment and you file properly everything, then only I will take ITC. So then they will allow you to enjoy the ITC. Number 2, you have not updated the amendment in registration because you are doing registration in some other place, you have obtained and you are doing business in some other place. So you update it. Or you have not received the goods. So produce a e-way bill to prove that you have received the goods. Or invoice is missing. Go to the supplier and ask for duplicate invoice. Or supplier not paid tax. So you kick on his ass and make him pay the tax. You understood? so that you will be enjoying the ITC. That is this. So, which means for whose mistake who is penalized? Supplier mistake, recipient is penalized. So that they are telling, because of that reason recipient put pressure on supplier, so that supplier will complain. Then what government is doing? They are preparing provision like this. Then upon expiry of 1 year from the date of restriction, the registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against such person. Then Rule 86B. Rule 86B says that even though you have taken the credit, but we have right to disallow the credit to the extent of 1%, which means 1% of your liability you have to pay through cash ledger, even though you have sufficient balance in credit ledger. To when what is the situation where it is applicable? Whenever the taxable turnover of a person exceeds 50 lakhs. But sir, they gave turnover, that's what they gave turnover. Thereafter they are telling exclude exempt supplies, exclude zero rated supplies, and exempted includes non-taxable. Then what is left? Taxable supplies only left. Okay. Then pay 1% liability through cash ledger even if there is sufficient balance in credit ledger to pay. And to whom it is not applicable? It is not applicable to their family members. Government department, PSU, local authority and statutory body. What's the point in collecting from one pocket to another pocket? Okay. So that's why for them it is not applicable. Others only should give that 1% to them. Got it? Government department, PSU, local authority, statutory body. Even some more case also it will not be applicable. What are they? Such person or proprietor. Such person means such registered person or proprietor or karta or managing director or any of its two partners have deposited already more than 1 lakh as income tax in the last 2 years, means some cash inflow created to the government. So due to that reason no need to comply with Rule 86B. Or refund of unutilized ITC has been sanctioned greater than 1 lakh in the preceding financial year, received a refund of unutilized ITC greater than 1 lakh. So already they are giving you refund of ITC, means you have excess balance. Again if they dissolve ITC, what's the point in that? That's why Rule 86B not applicable. Or cumulatively during the current year, cumulatively from April 1st till this month, already you paid more than 1% of liability through cash ledger. So this month you don't have to comply with the provision. Read that. Paid greater than 1% of the total output tax liability through cash ledger, calculated cumulatively up to the month in the current financial year. Kindly make note of this formula. So what you need to see? First you need to check payment through cash ledger. Payment through cash ledger. Whenever you see payment through cash ledger, don't take RCM liability, because RCM anyhow you have to pay. If you add that and all, easily it will cross 1%. So when you take output tax, don't take input tax, output tax through cash ledger, payment through electronic cash ledger excluding RCM liability up to previous month in the current financial year, divided by, means up to previous month how much you already paid through cash ledger, divided by total gross liability under FCM up to current month in the current financial year into 100. Suppose if it is greater than 1%, means it exceeds 1%, means already you have paid more than 1%. So Rule 86B applicable or not applicable in the month? Not applicable in the month. Suppose if it does not exceed 1%, then for the current month pay 1% of liability through cash ledger in the current month. Okay. So this is about Rule 86B. Maybe somewhere in MCQ they will be testing this, so that it will be useful for you. And with this we completed payment process also. So today we completed morning 3 chapters, exemptions, then liability to pay GST, that is FCM, RCM, e-commerce operator, then payment process also fully we have completed. Okay. In the afternoon session we'll take a break, we'll meet at 2:45 and we will see charge under IGST Act, then place of supply and other points, okay, returns, etc. and all, registration. Okay, thank you. Okay, we'll start. So look into segment 4, levy and collection under IGST. So in this, first we need to understand what is the meaning of India. The meaning of India for the purpose of GST is up to 200 nautical miles from baseline. That is, whenever the supply takes place up to 200 nautical miles from the baseline, it is known as supply in territorial, like taxable territory, and supply beyond 200 nautical miles from baseline is known as supply beyond, like outside India, supply outside India. And if the supply takes place up to 200 nautical miles, it may be either intra or inter depending upon the situation. If the location of supplier and place of supply is in the landmass of India, then it will be called as either intra or inter determined as per section 8 or section 7. Whereas if it is up to territorial waters, that is up to 12 nautical miles from baseline, again it will become either intra or inter determined under section 9. If the supply takes place, that is if the place of supply is beyond 12 nautical miles and up to 200 nautical miles from baseline, then it is deemed interstate as per section 75C, and if it is beyond 200 nautical miles also, it will be deemed interstate. And in this, what you need to remember is that meaning of India is up to 200 nautical miles from baseline. Then we need to understand what is the meaning of intrastate supply. What is intrastate supply? If the location of supplier and place of supply is in the same state or same union territory, then it will be intrastate supply. If location of supplier and place of supply is in two different states or two different union territories, a state and a union territory, then it is interstate supply. But if you see the proviso to section 8.1 and 8.2, there are few transactions, even if location of supplier and place of supply in the same state, it will not become intrastate, that is supplied to or by SEZ. Supply to SEZ, supply by SEZ is deemed interstate. Even import of goods also deemed interstate, and supply of goods to a tourist is also deemed interstate. That's the reason why it will not come under intrastate. Then in section 7, meaning of interstate supplies. So there are some deemed interstate, that is import of goods and import of services. Then 7.5a, if the supplier is in India but the place of supply is outside India, it's a deemed interstate. Consequently, export of goods and export of service also will come under deemed interstate. Then supply to SEZ or supply by SEZ. Thereafter, supply in India but not elsewhere specified, which means supply takes place in India, that is beyond 12 nautical miles and up to 200 nautical miles is supply in India but not elsewhere specified. That's why it is deemed interstate. Next, another point, if the place of supply is determined under section 13 and it is in India, when place of supply is determined under section 13, if either supplier or the recipient in India and the other outside India, any one in India, other outside India, then place of supply is determined under section 13. The moment place of supply is determined under section 13, it will always be deemed interstate supply. You cannot call it as intrastate supply. For example, there is an architect who is in Tamil Nadu providing construction services to Mr. Elon Musk in US in relation to the property in Tamil Nadu. In this case, location of supplier is Tamil Nadu and place location of recipient US. So therefore, the place of supply is determined under section 13. As it is service in relation to immobile property, the location of immobile property will be taken. What is the location of immobile property? Tamil Nadu is taken as place of supply. Even though supplier and place of supply in Tamil Nadu, it will not become intrastate supply. It will be deemed interstate under 7.5c. That is this. Once the place of supply is determined under section 13 and that is in India, don't forget, it will always be deemed interstate and chargeable to IGST. Then next, we need to understand meaning of export of goods and export of services. Export of goods means taking goods from India to a place outside India. Whether consideration is in convertible foreign exchange, that is not a criteria to become export of goods. Consideration may be in Indian rupees or consideration may be in foreign exchange for the purpose of export. But once the export happens, thereafter if you are not realizing the foreign exchange within the time limit under FEMA, then whatever refund that we have already claimed needs to be paid along with interest. So that is this. Consideration in convertible foreign exchange is not a condition. However, if foreign exchange not realized within the time limit under FEMA, refund claim shall be recovered. Then what is the meaning of export of services? Total 5 conditions. Supplier in India, recipient outside India, place of supply outside India. Consideration should be in convertible foreign exchange. It can be in Indian rupees if permitted by RBI. Two cases it is permitted by RBI. One is services to Nepal and Bhutan. Another is consideration received in rupee escrow account, which is maintained in outside India by a bank. Then supplier and recipient are not two establishments of the same person. Suppose if there is a branch which is incorporated outside India under the law of that country. Head office is in India, but the branch office is outside India, and the branch is incorporated outside India under the law of that country, then definitely it will be treated as a different person only. Supply from a company incorporated in India to the establishment outside India, which are incorporated under the law outside India, would qualify as export of service subject to fulfillment of other conditions. Then deemed interstate supplies. There are some transactions which are regarded as deemed interstate supplies, supply to SEZ or supply by SEZ. Then import of goods, import of services, export of goods, export of services. Then supplier in India and place of supply outside India. So then we have, so supply to a tourist, but at present it is not effective. Then sixth one, supply of goods beyond territorial waters and up to 200 nautical miles from the baseline. Then supplier in India, place of supply outside India, but it is determined under section 13. So these are the transactions we saw. Apart from the two more transactions, security lending under SEBI, that is the RCM, first point. Usually in security lending, it is happening through stock exchange. So the lender of securities don't know who is the borrower of the securities. So due to that reason, it will be always deemed interstate. Also trading in priority sector lending certificate. So one bank which will be selling priority sector lending certificate to another bank which has not met the target of priority sector lending. So this sale will happen through e-Kuber portal of RBI. So the selling bank don't know the buying bank. Due to that reason, it will be treated as deemed interstate supply. Then advances received, and we don't know whether it is intrastate supply or interstate supply. Then it will be categorized as deemed interstate supply. And in case of advances, what should be the rate of GST that should be taken? 18%. If some rate is given in the question, go by that rate. If the question is silent about that, the rate should be 18%. And the nature of supply should be interstate supply, deemed interstate supply. These are the 10 transactions. Whenever you see these 10 transactions in the question, you should not check location of supplier, place of supply. Always it will be deemed interstate supply. Then supply in territorial waters, that is up to 12 nautical miles from baseline. If the location of supplier or place of supply is in territorial waters, we need to see the nearest coastal state as the location of supplier or the place of supply. For example, there is a marine engineer in Tamil Nadu who is providing services to a foreign ship which is located in the territorial waters. Now the place of supply is determined under section 13. As per section 13, we need to see location where service is actually performed. The service where it is actually performed is in the ship, because in case of ship which is used for business purpose only, we have an exception which says that location of recipient should be taken as place of supply. Otherwise, if it is not for business purpose, then we need to see location where service are actually performed. It is in territorial waters. We need to see the nearest coastal state. If the ship's nearest coastal state is Tamil Nadu, this person is also in Tamil Nadu, therefore it will become intrastate supply. If the ship's nearest coastal state is in Andhra Pradesh, then it will be coming under interstate supply, But here the moment place of supply is determined under section 13, it should be deemed interstate now. Then how can it will become intra or inter? So because just now we saw deemed inter, once the place of supply is determined under section 13, it should be deemed inter. Here also the place of supply is determined under section 13, because marine engineer is in Tamil Nadu and Mr. Musk is located outside India, then definitely it should be section 13, correct? So then in that case, what should be taken as the, like nature of supply? So that's where section 9 starts with the word notwithstanding anything to the contrary contained. So which means that it will always be treated as intra or inter. So 9 will override other sections. So even though section 13 wants to determine it is deemed interstate, but for the purpose of section 9, we need to follow section 9 only. Even if place of supply is determined under section 13, supply in territorial waters may be intra or inter, as section 9 overrides any other provisions of IGST Act. Okay, that is with respect to this. Next, zero rated supplies. What are considered as zero rated supplies? That is export of goods or services, supply of goods or services to SEZ with respect to authorized operations of SEZ. So that will be treated as zero rated supplies. But very important point in the zero rated supply itself, it is given that supply of goods or services to SEZ unit or developer with respect to authorized operations of SEZ. So if it is not in relation to authorized operations of SEZ, then it will not be coming under zero rated supplies. Okay, whether GST paid on inward supply, yes, and it can be availed as ITC. And even though my outward supply is zero rated, I can take ITC on my inward supply, but ensure that it is not a blocked credit. And option 1, pay IGST and get refund of unutilized ITC, or don't pay any GST and get refund of ITC with respect to inputs and input services. And government on the recommendations of council can specify certain categories of goods or services or notified class of suppliers for whom refund is not available. Accordingly, there are some notified goods or services like pan masala, tobacco and tobacco products, essential oils other than those of citrus fruit. Neither option 1 nor option 2, both the options are not possible. If it is export of goods upon payment of customs duty, then option 1 is only available, option 2 is not possible. Suppose if it is export of exempted goods, option 1 not possible because there is no IGST, that's why naturally option 2 only. In all other cases, we can follow either option 1 or option 2. Then you can see in the next page, if location of supplier is in India and place of supply is outside India, no doubt it is a deemed interstate. Now check other conditions also. Supplier in India, place of supply outside India. Check other conditions also. What are those other conditions? Recipient outside India, consideration is in convertible foreign exchange, supplier and recipient are not two establishments of the same person. Check other conditions also. If all other conditions are satisfied, first it is interstate and it will become export and it will be zero rated. So two options are available, either pay IGST, get refund, otherwise don't pay IGST, will get the refund of ITC, like that. Suppose if any one condition is not satisfied, first location of supplier in India, place of supply outside India, but out of these three conditions any other condition not satisfied, then it will be interstate, that's it, interstate, and we need to pay IGST unless the transaction is exempted. Then next same way, supply of goods or services between SEZ and DTA. Suppose if it is supplied to SEZ unit or SEZ developer. Now you need to check, is it for authorized operations or for other than authorized operations. If it is for authorized operations of SEZ, then it will be interstate and it will also become zero rated. So naturally two options will be available. If it is for others, not for authorized operations, it is interstate. Why interstate? Supply to SEZ is interstate, but it will not become zero rated. We need to pay IGST unless it is exempted. Then supply by SEZ unit or SEZ developer. Supply by SEZ will never become zero rated. It will be only deemed interstate and we need to pay IGST. It is deemed interstate under 7.5b. 7.5b it is deemed interstate. IGST payable unless it will be exempted. So it will never become zero rated. So this is just the connection between interstate supplies and zero rated supplies, so that if it is not zero rated, you should know what should we do. So we need to just pay the IGST. Then next you can see place of supply chapter. So place of supply segment 7. In place of supply total we have 5 sections, section 11, 12, 10, 13, 14 and one more section 14a. So they have added. Now in that first we need to see, in case of goods there are 2 sections. So if it is domestic transactions, section 10 will be applicable. If it is international transaction, import or export, section 11 will be applicable. For services only 2 sections, 12 and 13. If supplier and recipient both are in India, section 12. If any one in India, other outside India, then it will be section 13. Okay, and here what if both are outside India? Definitely place of supply cannot be determined, and because services are exempted. So if both supplier and recipient are outside India, place of supply cannot be determined for such services and they are exempted. So what should be taken as place of supply in case of goods? There are total 5 situations. Try to remember with the clause number. 10.1a, supply involves movement of goods. 10.1b, bill to ship to transaction. 10.1c, supply does not involve movement of goods. 10.1d, assembly or installation at site. 10.1e, supply of goods on board a conveyance. In case of 10.1a, supply involves movement of goods, means under a contract of supply we are moving goods from one location to another location. We need to see whether it is B2B or B2C. B2B means ending point. B2C means location of recipient in the records of supplier, otherwise location of supplier will be taken as place of supply. Then next we have supply does not involve movement of goods. 10(1)(c). There also we have B2B, B2C classification. This B2B, B2C classification for goods is in 10(1)(a) and 10(1)(c). Supply involves movement of goods. Supply does not involve movement of goods. So for B2C it is same. Location of recipient in the records of supplier, otherwise location of supplier. But for B2B, for 10(1)(a), supply involves movement of goods, ending point. Supply does not involve movement of goods, location of goods at the time of delivery. For example, I am a seller of a ship and my ship is located in Mumbai, I am located in Tamil Nadu. You are the buyer of the ship and you are located in Kerala, but the ship is in Mumbai, and I gave you the documents, I collected the money. Supply does not involve movement of goods. Suppose if it is B2B, then the location of goods at the time of delivery, so location of ship is in Mumbai, Mumbai will be taken as place of supply. Suppose if it is B2C, then location of recipient in the record, so that will be Kerala will be taken as the place of supply. So it will vary, okay. Then next we have bill to ship to transactions. In case of bill to ship to transaction, remember 10(1)(b), B for bill to ship to and B for billing address. Billing address will be taken as the place of supply. In bill to ship to transaction, there is a possibility of another supply between whom? Billing address and the shipping address. Say for example, I am raising invoice to you by deliver the goods to your shipping address. Then in that case, for me, your address will be taken as the place of supply. But you in turn will raise invoice to that shipping address. So what will be taken as the place of supply? That will be supply involves movement of goods. 10(1)(a), again B2B location of, that is ending point. B2C location of recipient in the records of supplier, otherwise location of supplier, like that. So that's how we need to determine here. Then whenever it is a bill to ship to transaction, billing address is taken as place of supply. There is one confusion because of one circular. There is one circular that has been given that what should be taken as the place of supply in case of sale of goods through e-commerce platform to an unregistered person. Whenever there is sale of goods to an unregistered person through e-commerce platform, then definitely 10(1)(b) should not be applied. That you keep in mind, even though there is a different address. For example, you are placing an order and you wanted me to deliver. I am a seller and I need to sell through Amazon. You placed an order, you are from Tamil Nadu, you wanted me to deliver to an address in Kerala, or you wanted me to deliver to an address in some other place, then in that case definitely 10(1)(b) should not be applied. Then what should be taken? There is a circular which says that in that case you determine as per 10(1)(a), supply involves movement of goods, but it is unregistered person. So B2C, location of recipient in the records of supplier. What is the location of recipient? As there are two different address. If it is the same address, no problem. As it is a different address, we need to take delivery address, not the billing address. Delivery address should be taken. And delivery address means we don't have full address. Just the state is sufficient to be called as address mentioned in the records. So usually place of supply is the location of recipient in the records of supplier. In the absence of such details, place of supply is location of supplier. If the billing and delivery address match, place of supply will be address recorded in the invoice. If the billing and delivery address does not match, place of supply will be delivery address recorded on the invoice. Okay, delivery address. Name of state on the invoice is sufficient to be considered as recording the address of the recipient. Okay. Now, in this regard, I have given one question. You can have a look into that. So this is question number 9, page 652. Reliance Digital Limited, an e-commerce company registered in Mumbai, Maharashtra, sells electronic goods across India through its online platform. On 10th October 2024, a customer, Mr. Ravi, an unregistered individual, placed an order for a television priced at 1,20,000. Mr. Ravi's billing address is in Pune, Maharashtra, but he requests delivery of the television to his vacation home located in Goa. Additional information: the GST rate applicable on the television is 18%. Reliance Digital has received several similar orders. For the order placed by Mr. Ravi, the company issued invoice on 12th October and the television was dispatched on 13th October. Now, you are required to determine the place of supply for the television in this scenario. Here, it is supplied through e-commerce platform. Whenever it is supplied through e-commerce platform, we need to take billing address or delivery address. If it is matching, no issue. If it is not matching, delivery address. What is the delivery address? Pune, Maharashtra or Goa? Goa. should be taken as the place of supply. So Goa's billing address and delivery address does not match. Second point, compute the GST payable on this transaction and specify whether CGST, SGST or IGST will be applicable. So location of supplier, Reliance Digital, Mumbai, Maharashtra, place of supply Goa, therefore it will be interstate supply chargeable to IGST, and the value will be here 1,20,000 into rate of GST 18%, so 21,600. Next, third, explain the impact on GST liability of Reliance Digital if the billing address and delivery address were same. If the billing address and delivery address is same, there won't be any confusion. So we will take the billing address only, that is in Maharashtra, and consequently it will become intrastate supply because Reliance Digital is also in Maharashtra, and the liability will be CGST and SGST. Calculate the total invoice value. Total invoice value is 1,20,000 plus 21,600, 1,41,600. That Mr. Ravi would need to pay if the place of supply is determined. And they may also ask about time of supply. What will be taken as time of supply? Is it supply involving movement of goods, or supply does not involve movement of goods? Supply involves movement of goods. So what will be taken as the due date of invoice at the time of removal? What is the time of removal? So that is 13th October. So 13th October is the due date of invoice. But what is the actual date of invoice? 12th October. Usually time of supply in case of goods is due date of invoice or actual date of invoice, whichever is earlier. Suppose if they are under composition scheme or specified actionable claims only, we need to bring in date of payment also. So therefore here 12th October or 13th October, whichever is earlier will be 12th October. Okay. So time of supply is 12th October, being actual date of invoice, as due date of invoice is 13th October. So they can connect this point to time of supply also. So that is about these three provisions that we have seen. Now 10(1)(d), goods assembled or installed at site. Location where it is assembled or installed will be taken as the place of supply. And 10(1)(e), supply of goods on board a conveyance. So during the journey when the goods are being sold, we need to take starting point of the goods, location where the goods are loaded or boarded, that should be taken. And in case of food items which are cooked outside and packed into the packed and then loaded into the conveyance, it should be treated as goods only. Even though supply of food is supply of service, but in this case when the food is cooked outside and packed and taken, it should be treated as goods. However, if the food is cooked inside the train, in the pantry car, and when it is sold, that will be treated as supply of service only, because we have two separate provisions: goods sold on board a conveyance and supply of service on board a conveyance. So there we will get a confusion. That's why we need to take this assumption. Then in case of confusion between 10(1)(d) and 10(1)(e) versus 10(1)(a)(b)(c), for example, I am located in Maharashtra, I am supplier of generator, and you are a recipient who you are also located in Maharashtra. I am selling generator, you are buying generator. You are having a branch in Tamil Nadu. So you are asking me to install the generator in the branch in Tamil Nadu. I will raise invoice to you. I will deliver the generator in Tamil Nadu and install it there. If you apply 10(1)(b), so billing address, shipping address, bill to, ship to. So billing address Maharashtra will be taken as place of supply. If you apply 10(1)(d), where am I installing? I am installing in Tamil Nadu. So then what should be taken, 10(1)(b) or 10(1)(d)? Whenever there is a confusion between A, B, C versus D and E, D and E only will prevail, because D and D are specific provisions. So in case of conflict between 10(1)(a), B, C over 10(1)(d) and E, then 10(1)(d) and E shall prevail, because specific provision shall prevail over general provisions. Then next, so here in case of services, if supplier in India and recipient is outside India, then place of supply is determined under section 13, and if it is in India, always it will be deemed to be interstate supply, as the reference of intrastate supply is only with respect to section 12. Now we are moving on to place of supply in case of services. In this, what we need to understand is that, so first we need to know the situation. Then accordingly, if it is 12, what is the place of supply? 13, what is the place of supply? When 12, both are in India. When 13, either one in India, other outside India. General provisions will be applicable. So when general provisions, in the absence of specific provision, general provision will be applicable. For the purpose of section 12, what should be taken? B to B, location of recipient. B to C, location of recipient in the records of supplier, otherwise location of supplier. Whereas section 13, there is no B to B, B to C, always B to C kind of only, that is location of recipient in the records of supplier, otherwise location of supplier. The next aspect that you need to know is that there are 3 services in 12 where B2B, B2C classification will be applicable. What are those 3 services for which B2B, B2C will be applicable? Training and performance appraisal services, organizing an event, and transportation of goods or passengers. TOT. In case of this TOT, training and performance appraisal, organizing an event, or transportation of goods or passengers only, we have B2B, B2C classification. In all other places, we have only one place of supply provision. So wherever this B2B, B2C comes, the B2B will be always location of recipient. What are the 3 places? Training and performance appraisal, organizing an event, transportation of goods or passengers. That you need to remember. And thereafter, location of supplier will be taken as place of supply under section 13 in 3 places. In 3 places under section 13, location of supplier will be taken as place of supply. What is that? That is RBI. R for renting of immovable property, correct? No, renting of motor vehicle. Renting of motor vehicle other than aircraft or vessel up to a period of 1 month. So then B for banking services and I for intermediary services. You can see here, renting of other than aircraft or vessel up to a period of 1 month, banking services only to account holders, and intermediary services. These 3 places only we have location of supplier as the place of supply. These 2 special points you need to keep in mind. So therefore in section 12 from now on we should not remember B2B, B2C classification. You remember only B2C provisions because already you know where B2B will come and what will be taken as the place of supply in case of B2B. First, suppose if it is service in relation to immovable property, use your logic. In relation to immovable property location will be taken as place of supply. For 12 also same, 13 also same, location of immovable property. But for 13 one special point is there. Suppose if the property is located outside India, then location of recipient. Like this is adjustment, that is a special point is applicable even in case of organizing an event. So go to organizing an event. In case of organizing an event related you can see organizing an event. So logically what should be taken as place of supply? Location of event. Let it be 12 also, 13 also. Location of event only taken as the place of supply. Correct or not? Of course, for organizing an event, B2B, B2C is there. That already we know. So you remember, try to remember to the logic to the extent possible. Service in relation to immovable property, location of property. 12 also property, 13 also property. But for 12 one special point is there. If the property is located outside India, location of recipient. Then you go to event related. In that event related also, admission to event, no confusion. Always admission to event, logically location of event. Organizing an event also location of event, but that adjustment we have even in case of organizing an event. In case of section 12, if the event is located outside India, then location of recipient will be taken. These are the 2 places where if the place of supply is outside India, then location of recipient will be taken. That is in case of renting service in relation to immovable property and organizing an event in the context of section 12. Then next one. So you have completed immovable property and you completed event related also. Then look into transportation sector. For transportation sector, transportation of goods, transportation of passengers. We already know B2B, B2C classification will come and B2B means location of recipient. But you need to remember only B2C. Easily remember transportation of goods, section 12, starting point of goods. Transportation of passenger, starting point of passenger. Service on board a conveyance, starting point of conveyance. These 3 points easily you can remember. Transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Service on board a conveyance, starting point of conveyance. Whereas section 13, for section 13 also ditto copy paste same except for transportation of goods, it is general provisions. Here also starting point of passenger, here also starting point of passenger, here also starting point of conveyance, here also starting point of conveyance. Only in the context of section 13 transportation of goods it will be general provisions. So first I asked you to remember general provisions, thereafter I asked you to remember these 2 special notes, and then you need to see immovable property, then you need to see event related, then you need to see transportation. So easily you can remember this, and thereafter I asked you to remember 3 more points, that is RBI. So that is hiring of means of transport other than aircraft or vessel up to 1 month. Location of supplier will be taken as place of supply up to 1 month, correct? And banking and other financial services to account holders, location of supplier. Intermediary services, location of supplier. In all other cases, general provisions, let it be section 12 or section 13. So these 3 also easily you can remember, that is RBI, RBI, location of supplier. What if it is banking service to other than account holders? General provision. What if it is hiring of aircraft or vessel? General provision. What if it is hiring of other than aircraft or vessel beyond 1 month? General provision. So in 12 we don't have any specific provision, so general provisions. So these 3 also easily you can remember, got it? And next the remaining cases we will see, got it? So first general provisions. General provisions, B2B, B2C, location of recipient in the records of supplier, otherwise location of supplier. For 12, location of recipient, if not location of recipient in the records of supplier not available, then location of supplier. So first you remember these general provisions. Then second point, B2B, B2C classification. So you can write that so that when you are quickly revising also it will be easy, because you cannot remember or this much load cannot be taken into your mind. So because of that you will make a mistake. That's why you should remember as simple as you can. First you remember this, then you go to this point. What is that? B2B, B2C classification where it is required. TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. So there we got, so B2B, B2C always it will be applicable there, and B2B will be location of recipient. In these cases what should be taken as B2B? B2B will be location of recipient. And then third point, that is what you need to remember is this 3 you need to remember in relation to immobile property and event related. These 2 has one common. So property related service, location of property will be taken. Event related service, location of event will be taken. And in this, organizing an event, if the event is located outside India, location of recipient for 12, even property located outside India, location of property will be taken as place of supply. Thereafter, you need to complete this transportation related. This transportation related will be point number 4 that you need to remember. In that what you need to see. So transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Transport like service on board a conveyance, starting point of conveyance. Whereas in case of section 13, first case it is general provision for transportation of goods. Next to copy paste, starting point of passenger and starting point of conveyance. This is the 4th step that you need to remember. Then 5th step. 5th step is this. That is section 13, location of supplier will be taken as the place of supply. RBI, that is renting of motor vehicles, which motor vehicle other than aircraft or vessel up to a period of 1 month. Banking services to account holders, intermediary services. In this case, location of supplier will be taken as place of supply, and that is location of supplier will be place of supply. All other cases it will be general provisions. Okay, for section 12 also general provisions, for section 13 also remaining cases balancing figure it will be general provisions. See, to a major extent we have simplified. And then next case what you need to see is about telecommunication service and advertisement service to government. In the context of 13 we don't have any provision, so general provision. So for 12 only you need to remember. So you need to remember this point number 6 and point number 7. Point number 6 and 7. What is common in this? So for the context of 12 only we have provision. For 13 we don't have provision. What is that? Telecommunication services. In case of telecommunication service it also includes internet, broadband, DTH services. First you need to see fixed line. Fixed line means location where it is installed. Suppose if it is mobile postpaid, billing address, mobile prepaid, then dealer address, and online recharge, it will be general provisions. Okay, fixed line, location of installation, mobile postpaid, billing address, mobile prepaid, dealer address, online recharge, it will be general provision. Then advertisement service to government, each state where the advertisement is provided will be taken as place of supply. In the context of 13 we don't have any provisions in this place. This is also over. Then finally we will remember performance based service in relation to individuals and performance based service in relation to goods. So therefore thereafter you need to read this 8 and 9. With that this table will be over. So 8, performance based service in relation to individuals. In that, with the context of section 12, only in 3 places we have performance based services specific provision. What are they? Food and beauty related, training and performance appraisal. Okay, for food, beauty, then training and performance appraisal. But for training and performance appraisal we have B2B, B2C classification, and other places it will be location of performance. That's common. All these things common only. If you see food and beverages, beauty treatment, location of performance, Training and performance appraisal also location of performance. Any other service we don't have specific provision, so general provisions. Whereas in case of section 13 you need to check whether physical presence of the recipient required or not required. If required, then location of performance, otherwise general provisions. So therefore what you need to remember is the specific provision. Balancing figure will be general provisions. How you need to remember? Performance based service in relation to individuals. In the context of section 12, 3 services: food and catering, food and beverages, beauty treatment, training and performance appraisal, location of performance. Again here section 13, physical presence of the recipient required, location of performance. All other cases it will be general provisions. Then performance based service in relation to goods. In the context of 12 we don't have any provision, so general provisions. In the context of section 13, whether physical presence of the recipient goods are required, then location of physical presence of goods are required, then location of performance. But we have 4 exceptions. In those 4 exceptions this will not be applicable. We need to go by the general provision, that is location of recipient will be taken. What are those 4 exceptions? Goods temporarily imported for carrying out repairs or any other process, and it is exported after repairs or process without being put to use. And next one, if there is a research or any services provided on pharmaceutical products or drugs which is imported, and on that also it will be location of recipient. Number 3, repairs, maintenance and overall in relation to aircrafts which is used for business purpose. Last, ships used for business purpose. These 4 exceptions. In these 4 exceptions, even though it is performance based service in relation to goods, physical presence of the goods are required, performance location will not be taken, but location of recipient will be taken as place of supply. Suppose if physical presence of the goods not required, location of goods. And in case of OIDR services, if you see, so general provisions only, and even 13 also location of recipient, which is nothing but a general provision. So there is nothing special that we need to remember in this case. And by mistake also don't write subsection in an exam, because in subsection when you are writing, so you will make a mistake. Section you write section 12, section 13, so that there won't be any problem. Because when you write the subsection, that's where the real confusions will come, and you will also break your head, etc. and all. So section you write section 12, section 13, so that the answer will be perfect. Okay. Next, here, so we completed actually. So this is the way in which you need to remember this. Quickly you can complete. Then look into intermediary services. What will be taken as the intermediary, or who will be taken as intermediary services? Intermediary means there is a main activity and one person who is just connecting the 2 people will be called as an intermediary. And intermediary service is like a one-off transaction. It is not a continuity. For example, you need to do some work which you outsource to me. I will not be called as intermediary. Means there is a supplier, there is a recipient, I am just connecting the supplier and recipient, then I will be called as an intermediary. An intermediary is someone who arranges or facilitates the supply of goods or services or securities between 2 or more persons, wherein 2 of them transact in supply of goods or services or securities, that is the main supply, and the one in arranging or facilitating the said main supply. Therefore, outsourced activities do not fall under intermediary services. So outsourcing will not come. So always remember, intermediary services should not be a continuing activity. Intermediary is just the connection between supplier and the recipient. Okay. Then we have IGST rules for determination of place of supply. Now so far whatever we have discussed is only the very important area. These IGST rules, they have not tested in exams so far. Maybe they could be tested. So you try to remember the logic in this so that you can definitely do. This is like in overhead chapter, whenever you have a common cost that needs to be segregated between production departments, you will take one basis of apportionment for the purpose of segregation. The same logic. Here also there are lot of items wherein there will be division between the states. What should be taken as the basis of apportionment for division between the states? For example, first one, rule 3, advertisement services to government. In case of advertisement services to government, the place of supply will be each state where the advertisement is provided. But what if there is a single contract price? Suppose if the advertisement is on the train, then we need to see length of track as the base of apportionment. If the advertisement is on the train tickets, then we need to see number of stations in each state as a base of apportionment. Suppose if the advertisement is on television, Now you see viewership data, who will publish? BARC, Broadcast Audience Research Council, when they will publish last quarter, last week data should be taken for the purpose of apportionment. And what if it pertains to more than one state? Then you divide it based on population census. First between the channels based on viewership, and that channel is in more than one state, population census should be taken. Then suppose if it is advertisement in internet, it is difficult to restrict. So due to that reason, if it is advertisement in internet, if the contract has not given any clarity about the state, then it is deemed to be across the country and it will be apportioned between all the states based on internet subscribers data. Suppose if the advertisement is through SMS, now you need to take telecom subscriber data last quarter, last week, and that should be divided between the states. Okay, and suppose if it is a telecom circle and that telecom circle is in more than one state, you need to take the population census. These are the 5 points. So train length of track and train ticket number of stations, TV, then internet, then SMS. Apart from this, any other expenditure we need to take, like any other case, any other mode of advertisement, like advertisement in cinema theater, advertisement in FM channel, advertisement in hoardings, like any other advertisement, we need to see the expenditure ratio. Expenditure ratio, for example, I am a newspaper agency and I will be getting money from the government to display the ad in 10 editions of my newspaper. Now these 10 editions will have different cost. For first page in one edition, there could be 10 lakhs and another edition could be 5 lakhs, yet another edition could be 4 lakhs. Depending upon the circulation, the first page will have a rate. So in that rate, I will divide the consideration. So therefore, the revenue will be recognized based on expenditure. This is what revenue recognition standard says. Got it? So my revenue I am recognizing based on my expenditure. That is about any other case, the expenditure ratio should be taken. Next, then we have Rule 4 and Rule 8. Rule 4 and Rule 8 is in the context of immobile property. So whenever we are providing service in relation to immobile property, what will be taken as a place of supply? Location of immobile property will be taken. What if immobile property is in more than one state? Then Rule 4 and Rule 8 will come. Rule 4 in the context of Section 12, Rule 8 in the context of Section 13 will come. What does it say? If it is accommodation services, see the number of nights stayed in each such property, in each such state, and based on that ratio you need to divide. For example, 3 nights in Tamil Nadu, 2 nights in Kerala and 1 night in Andhra Pradesh. In that ratio we need to divide. Suppose if it is accommodation in a houseboat, see the time that is spent in each state. So the houseboat is spent in each state, in that ratio we need to divide. Apart from this, any other service in relation to immobile property, usually what we will take as a base of apportionment, floor area or carpet area, that should be taken as the ratio of apportionment. Then next, Rule 5 and Rule 9 is in case of event, organizing an event. What should be taken as place of supply in case of organizing an event? Location of event. And what if the event is in more than one state, wide single contract? So both Section 12 as well as Section 13, the same will be applicable. We need to just take GAAP, that is expenditure ratio. So my contract revenue, I am conducting 4 events in 4 states. For these 4 states, there will be different expenses. My revenue I will recognize based on my expenditure. That is this. Then Rule 6. Rule 6 is applicable in case of telecommunication services, that is a fixed line, leased line connection. In this leased line connection, I am connecting multiple branches of your company and I am laying down a leased line, and your branches is in multiple states. Now what you need to do, you need to see the number of circuit points in each state, means number of branches in each state. So that should be taken as the base of apportionment, because in case of fixed line services, location of installation should be taken. So number of installation points in each state should be taken as the base of apportionment. Then Rule 7. Rule 7 is applicable in the context of Section 13, that is performance based service in relation to individual. Location of performance will be taken if physical presence of the recipient is required. Then in that case, what if wide a single contract, we are performing the service in multiple locations? Again, expenditure ratio. You can see there, services supplied to individuals, GAAP, that is expenditure ratio. Suppose if it is performance based service in relation to goods. Goods means we need to see location of performance, but what if it is in multiple states? Is it the same goods or different goods you see? If it is the same goods, then we need to take equal ratio. If it is different goods, invoice value ratio. For example, there is a foreign company with which I have entered into AMC contract. AMC of the computers, and the computers is in multiple branches in India, same goods. So therefore entire consideration I received, I will apportion between the states in equal ratio. For example, in one state computers, another state data centers, at another state air conditioners. Now what is the invoice value of computers? What is the invoice value of data centers? What is the invoice value of air conditioners? In that ratio I need to divide, that is this. So this is about the rules. So you need to just learn the basis of apportionment, that is sufficient. If at all you get a question, you can use this and you can apportion it between the states. Then the next area that we have is circulars on place of supply. In this circulars, the first point, so they have added some newly circulars also. So the first point is old one only, that is in case of export of services, what should be taken as the value of export of service. Let's try to understand this particular circular through an example, that is Mr. A is located in India. Mr. A is located in India, who entered into contract with Mr. X, who is in US, to provide the services. First, A has entered into contract with X, contract to provide services, and what happened? So A provided some services, but A could not provide all the services. So now A entered into contract with another person. So another person, Mr. B. Where is Mr. B located? In US. So A entered into contract with B. Okay. A entered into contract with B to receive services. Okay. A entered into contract with B to receive services. First, A entered into contract with X to provide the services. A entered into contract with B to receive services, wherein B should not provide services to A, but on behalf of A should provide services to X. On behalf of Mr. A should provide the services, B should provide the services to X. This is the contract. Okay. Now you understood that there are two contracts. Contract number 1, A should provide the services to X, and another contract where A is receiving the services from B, but B is not directly providing to A. On behalf of A is rendering services to X, but B will raise invoice to A. Now, who will raise invoice to whom? First, invoice number 1. Invoice number 1 will be raised by A to X. Invoice number 1 will be raised by A to X. Invoice 1. Invoice 1 is for say $5,000. Invoice 1 is for $5,000. Now invoice number 2. Who will be raising invoice number 2 to whom? B will be raising invoice number 2. Invoice number 2 for rupees $2,000 is raised by B to A. Now what happens? A should pay anyhow $2,000 to Mr. B. So A requested X to remit $3,000 to A and pay $2,000 to B. So what X did? He has remitted so $3,000 to A, and he remitted the $2,000 to B. $2,000 to B. Anyhow he need to pay $5,000. Thereafter that $5,000 needs to be given to B. So therefore X is directly paying $3,000. This is known as bilateral netting. So X is directly paying $3,000 to A and $2,000 to B. So thereby the unnecessary conversion from dollar to rupee is not there for $2,000. Now even though he raised an invoice for $5,000, but he received only $3,000. Now what should be taken as value of export of service? What should be taken as value of export of service? Whether it is $5,000 or $3,000, the circular says we need to take $5,000. Even though the consideration actually received is $3,000, even though BRC, bank realization certificate, and FIRC, foreign inward remittance certificate, is for $3,000, but the value of export of service should be $5,000. For that reason only they gave this circular. You can see here the value of export of service is the invoice value, but not the amount received. Invoice value, that is value of export, is the invoice value, but not the amount received. That is with respect to this. Then second point. Now B is raising invoice to A, na? So will that become import of service? Yes, of course that will become import of service. So value of import of service, How come there is import of service? B is the service provider located outside India. A is the service recipient located in India. So value of import of service is $2,000, on which Mr. A shall pay GST under RCM. Mr. A shall pay GST under RCM, even though B has not directly provided services to A, B provided the services to X, and which means B is outside India, X is outside India. Actually there is one exemption. If both supplier and recipient are located outside India, then the service should be exempted. In that context, it should become exempted now. That's why they are clarifying. Even though B and X are located outside India, first of all for B, X is not the recipient, A is only recipient, because the one who is liable to pay consideration is the recipient, not the one who already paid the consideration. Even though the consideration is paid by X, but the one who is liable to pay consideration is A, so A should be taken as a recipient in this case. Accordingly, it will become import of services. That's what it is given. It is clarified that the supplier of service located in India would be liable to pay IGST on reverse charge. Would be liable to pay IGST on reverse charge basis on the import of services on that portion of services which has been provided by supplier located outside India to the recipient located outside India. Got it? So that is about this circular. Next one, where is the place of supply in case of cargo handling services? Cargo handling services are provided by custodians. That is, as soon as the goods are unloaded, they will keep the containers, and thereafter upon payment of customs duty and bill of entry, etc. and all, once the out of customs charge order is given, they will hand over the cargo to the importer, for which they will be collecting some charges called as custodian charges for providing the cargo handling services. But this cargo handling services can be interpreted to be renting of immovable property, because they are providing service in relation to immovable property by storing the goods, but for which CBIC clarified that cargo handling service is way beyond warehousing services. They are not just doing warehousing, so they are acting as a custodian to the goods. Due to that reason, it cannot be interpreted as service in relation to immovable property, and as we don't have any other specific provision, so general provisions will be taken. Is it clear or not? Now, next one you can see third point. So for second point, in case of cargo handling services, the place of supply should be determined on the basis of general provisions and not in terms of service in relation to immovable property. So general provisions will be applicable in this case. Where is the place of supply in case of software testing on the prototypes imported? I am importing a prototype, and I am also importing the software to test on the prototype. So whether the software is properly working for this hardware or not, I am doing the testing of the software. Now the question comes, is it performance based service in relation to goods, or is it software testing? If it is performance based service in relation to goods, section 13, location of performance will be taken as a place of supply. But if it is software testing, for software testing we don't have any provision, so general provision will be applicable. So what they are telling is that what we are doing testing is on the software, not on the prototype. So due to that reason, it is a software testing which is an ancillary to software development. So for that, general provisions will be applicable. So place of supply for software design by supplier located in taxable territory to the service recipient located in non-taxable territory by using sample prototype or hardware test kits is a composite supply, wherein such testing is an ancillary supply. Where such testing is an ancillary supply is the location of service recipient as per section 13.2. What is section 13.2? General provisions. 12 subsection 2 is general provision, 13 subsection 2 is also general provisions. So general provision will be taken as a place of supply. The next one, where is the place of supply in case of cutting and polishing services on unpolished diamonds imported? So whenever we are importing some unpolished diamonds, and those unpolished diamonds we are doing polishing and cutting and we are exporting, for which we have exception number 1. Exception number 1 says, if goods are temporarily imported for carrying out repairs or any process and it is exported after repairs or process without put to use, the location of recipient should be taken as a place of supply. It is not location where services are actually performed. So in case of cutting and polishing activity on unpolished diamonds which are temporarily imported into India, are not put to any use in India and are exported, the place of supply would be determined as per the provisions of contained in section 13.2 of IGST Act, that is exception number 1. If you observe, all circulars all circulars, I'll tell you in one line you can remember. Place of supply is general provisions. Read. Every circular you read, the place of supply will be general provisions only, because whenever you see, so second one general provisions, third one general provisions, fourth one general provisions, fifth one general provisions, sixth one general provisions, all these amendments also general provisions only, which means the moment you get a question on circular, the answer is general provisions. Okay, but the reasoning you need to write. So only for writing the reasoning you will get marks, because even ICA also know that general provision is the answer. Every student will write general provision only, but why general provision, why not other provision, that only you need to write. Okay, so therefore don't underline general provision, it is of no use. So we should underline why it will not come under other services. That is what you need to give justification. So here what you need to give justification, it will not come under immovable property services, and it will not come under service in relation to, that is performance based service in relation to goods. Okay, so not fall under performance based services, performance based services in relation to goods, Okay, then what about this? This is also not coming under performance based. This is common point for both. Will not come under performance based service in relation to goods, because it comes under exception 1. So the reasoning is what you will get marks for, not for writing the answer. Then next one, where is the place of supply in case of advertisement on hoarding? Generally in case of advertisement on hoarding, there are two supplies, that is, first there is a property owner or vendor. That property owner or vendor will be allowing you to put your hoarding, your advertising company, and you will put your hoarding in that particular property. Now the property vendor will be receiving some money, that is service in relation to immovable property. So location of immovable property will be taken as the place of supply. Now you advertising company, what you will do, you will permit other person to display their ad in the hoarding which you already own. Now in this case, that advertisement services, we don't have any specific provision. Only advertisement service to government we have specific provision, but general advertisement service you don't have general specific provision, so general provision will be applicable. In some instances what will happen, the company which want to put the advertisement will directly approach the vendor, will tell, sir, your location is so beautiful for my company's product, so due to that reason I will place the hoarding and I will only take care of advertisement, etc. and all. Now there are no two supplies, only one supply is there between the vendor and the client. Now therefore it will be service in relation to immovable property. So place of supply of service with respect to advertising sector. First, between vendor and the advertising company. So service in relation to immovable property between the advertising company and the client. So first one is actually between whom and whom? Between so property owner, vendor, between vendor and advertising company. Between vendor and advertising company, that is this. Whereas this is between whom? So this is between advertising company, this is between advertising company and client. Advertising company and client. So we need to take general provisions. So location of recipient in the records of supplier, otherwise location of supplier. Then next one, where is the place of supply in case of service of co-working spaces? For co-working spaces, what will happen? Usually co-working space is just the place which will be given for the purpose for the people to use that. There will be lot of common areas like conference room will be common, toilet will be common, cafeteria will be common, and for different businesses they will be just dividing the office rooms and they will be giving it. That is what co-working space, lot of people are there into this business. That is mere renting. So in that case it is service in relation to immovable property. But there are some co-working spaces which is beyond that. What they do is that they will provide lot of IT services. IT services like like networking or server room or like even surveillance, then this firewall and even the CCTV installation, internet, all the facilities they will provide. And in that case the mere renting, actually renting is nominal there compared to these services, where renting is just a few 5,000 rupees or 6,000 compared to this service which will be 30,000, 40,000 rupees per month. Then in that case, definitely it is not renting, it will be coming under IT services, which is general provisions. You can see place of supply for renting of space for its own servers and other computing hardwares with basic infrastructure. No additional services are provided. Then service in relation to immobile property. Suppose if additional services are provided by supplier relating to hosting and IT infrastructure services like network connectivity, so that intranet, then backup facility, firewall services and monitoring surveillance services. In that case, it cannot be considered as renting of immobile property, so we need to go for general provisions. Then number 7, where is the place of supply in case of data hosting services provided by a person in India to a cloud computing service provider located outside India? For example, Netflix is there. Netflix wanted to provide services streaming to lot of customers in India. For that purpose, definitely they will not provide the server outside India. The server will be in India. And that server will be belonging to one data hosting service provider. So in that server, for example, I am a data hosting service provider. What should I do? First, I need to get a land, and that land should not be, agricultural land and all. So I need to take a permission from government, and I need to create a proper infrastructure. One land I need to take, and I need to construct one building, and I need to create lot of power backup facilities, like maybe turbines I will create, or I will keep solar panels and I will create a power backup, and I will install lot of ACs, etc. I keep that place so cool, and then what I will do, I will create a hosting service. In that hosting service, now Netflix will approach me and it will ask, sir, I need your hosting area for the purpose of hosting my content, because GBs and GBs of TBs of content they will be having, a number of movies, a number of series, etc. that I need to keep in this hosting service. And then lot of people will be coming and accessing, means that much of capacity my server should be having. Now, I am a data hosting service provider. I am providing services to Netflix outside India, supplier in India, recipient outside India, wherein the customers, that is the Netflix customers, is coming and accessing my data hosting service. This is the scenario. Now, what should be taken as the place of supply? Question number 1, will it become intermediary service? No, it is not intermediary service, because my service is not just the connection and going. My service is a continuity, which means I am not just connecting the seller and the buyer, I am providing service. It is like outsourcing. So therefore, it is not intermediary services. As the same is on principal to principal basis, it is not an intermediary service. So that is what first point you need to write. Second point, so now what happens, some of the storage will be provided by Netflix. Netflix will have lot of storage devices with them. So therefore, they will be providing me storage devices. In that storage devices, I will be just hosting it in my platform, which is like, see, even though I have a server, in that server, the pen drive, storage means you try to understand in your mind, laptop is the server, and in that laptop, pen drive I need to insert. Okay, so that pen drive only data will be there. Like that, they have given me pen drive, which I am connecting it to my hosting service. Okay, now in this case, whether it will come under performance based service in relation to goods? No, it will not come under performance based service in relation to goods, because I am not doing anything on the goods imported. Got it? So it is beyond. I have to provide lot of things. I need to ensure that the system is not turning off. So always it should be active, and lot of idiots will come and access the system. I need to put lot of safety measures in this. Are you understanding this? So that is this. Even though hardware is provided by the recipient, it is not performance based service in relation to goods. It is not performance based service in relation to goods, as the principal supply involves innumerable services like arranging premises, connectivity, security, human resources, etc. and all. Then, okay. So, as it is like a place which I am giving you to use, can we take it as service in relation to immobile property? No. So, just any place is not sufficient. Place is cheaper. Place will be available cheaper, but to create this infrastructure, many crores it will be required. So, it cannot be treated as service in relation to immobile property, as the same does not involve mere renting. So, 3 points you need to write. it is not intermediary service, it is not performance based service in relation to goods, and it is not renting of immobile property. Consequently, it is general provisions. Okay, conclusion is that only, that it is general provisions. So location of recipient will be taken as the place of supply, but the reasoning you need to write. So you can see one question related to this, how you may get a question I have just given. Tech Hub Data Services Private Limited, an Indian data hosting service provider, enters into contract with Cloudcom Solutions, a cloud computing service provider based in Singapore, for providing data hosting services. Tech Hub operates a large data center in Bengaluru, which Cloudcom uses to host its cloud computing services. The agreement stipulates that the Tech Hub will handle the infrastructure management, equipment maintenance and IT monitoring for the cloud services offered by Cloudcom. They entered into contract on April 1 with an annual service fee of 10 crores, foreign exchange converted to Indian rupees, where the payments are made on a quarterly basis. Evaluate whether the data hosting services provided by Tech Hub to Cloudcom qualify as intermediary services. No, it is not intermediary services, as the contract is on principal to principal basis. Determine the place of supply for service provided by Tech Hub to Cloudcom based on the given facts. So what will be taken? We need to apply general provisions, and location of recipient should be taken as place of supply. What is the location of recipient? So Singapore will be taken as the place of supply. Then third, analyze whether the services provided by Tech Hub Data Services qualify as export of service. So in order to become export of service, 5 conditions should be satisfied. Supplier should be in India. Yes, Tech Hub is located in India. Recipient should be outside India. Yes, that is in Singapore. Place of supply, location of recipient, that is Singapore. And they are receiving convertible foreign exchange. Supplier and recipient are not two establishments of the same person. So as all the conditions are satisfied, it is an export of service. Determine the place of supply. If Cloudcom Solutions is an entity based in India, if it is an entity based in India, there is no confusion, because always general provisions, location of recipient only will be taken as place of supply, that is in India. Next, we have 8th one, where is the place of supply in case of services by an advertising agency to a foreign client, where such advertising agency provides comprehensive advertising services including recovery of charges paid to media owners. For example, say there is one mobile company. That mobile company wanted me to do the advertising in India. So they are telling like, so you are an advertising company, you know the pulse of the audience here, so therefore you please do the promotion. So thereby we will get a good thing, and we will give the entire contract to you. You only pay the media channels like digital marketing, like everything you do, and you pay to the media houses like TV channels, etc. You pay, and whatever is the amount you recover from us, which means I am not an intermediary. Why I am not an intermediary? I am not just connecting the TV channels and the foreign company. I am also doing the advertisement design. So due to that reason, I will not be called as a intermediary, because the strategizing is very, very important. Because if you are not properly strategizing, then no one will know about it, and it may backfire also. So for that, a careful strategy and implementation is required, that is beyond just connecting the seller and the buyer or supplier and the recipient. So the advertising company is providing services to a foreign client on principal to principal basis and is not acting as an intermediary. So the place of supply will be as per general provisions, and it may qualify for export of services. So another question, XYZ Advertising Private Limited based in Mumbai provides comprehensive advertising services to Global Fashion Limited, a company headquartered in the UK. The service involves end-to-end campaign management, including media buying, content creation, strategy and design. XYZ Advertising has entered into 2 agreements, one with the foreign client, that is Global Fashion Limited, for managing the advertising campaign, and the other with an Indian media company to purchase media space for the advertisement. Okay, basically they enter into 2 contracts, one with the foreign client Global Fashion, another with the Indian media company to procure the space for advertisement. The cost structure for the project includes 20 lakhs for the media space subject to 18% IGST, and 10 lakhs for content creation and strategy services also subject to 18% GST. XYZ Advertising invoices Global Fashion Limited for rupees 30 lakhs, 20 lakhs for media space and 10 lakhs for other services and receives payment in foreign exchange. The media company issues a separate invoice to XYZ Advertising. The problem is that expenditure incurred as a pure agent will not come. Read the question carefully. In case of expenditure incurred on pure agent point to get attracted, the invoice should be in whose name? See, here XYZ Advertising Agency is the supplier and they are incurring the expenditure on behalf of the recipient, but the invoice should be in the name of the recipient, but the invoice is in the name of supplier XYZ Advertising. So the pure agent point will not be applicable in this case. Is it clear? Because in order to become pure agent, so four conditions should be satisfied. Contractual obligation, wherein through contract recipient should authorize supplier to incur the expenditure. Only the actual amount incurred should be recovered, and the title should not be in the name of the supplier, and it should not be used for the personal purpose of the supplier. Here title is in the name of the supplier, that's why pure agent will not come. Point number 1, will XYZ Advertising be considered as intermediary in this transaction? No, not considered as intermediary, because they are acting on a principal to principal basis and they are providing advertisement services. Therefore it is not just connecting the media house and the Global Fashion Limited. So it is not an intermediary service. Number 2, what is the place of supply for the service provided by XYZ Advertising? General provisions. Location of recipient should be taken. What is the location of recipient? That Global Fashion is in UK, that will be taken as place of supply. Whether service provided by XYZ Advertising fall under 0 rated, so supplier should be in India. First it is 5 conditions. Supplier should be in India, yes. Recipient should be outside India, yes. And place of supply should be outside India, yes. Consideration should be in convertible foreign exchange. So is it given that consideration is in convertible foreign exchange? Yes. Receives payment in foreign exchange. Then supplier and recipient are not two establishments of the same person. So yes, it will become export of services. 4, can XYZ Advertising avail ITC with respect to payment made to media company? So XYZ can avail ITC because the point is that invoice is in the name of XYZ Advertising. So yes, they can definitely avail ITC with respect to that. Then can XYZ consider the payment made to media company as expenditure incurred as a pure agent in terms of Rule 33? So we are connecting place of supply with value of supply. No, cannot be considered. Why? Because invoice is in the name of the supplier and conditions for pure agent is not fulfilled due to that reason. Then last circular, where is the place of supply in case of custodial services offered by banks or financial institutions to foreign portfolio investors? Foreign portfolio investors will approach lot of banks for the purpose of receiving custodial services. Custodial service means the bank will act as a custodian for the equity investment made by the foreign portfolio investors in Indian companies. So whatever meetings, participation in the meetings or dividend, collection of dividends and retention of that equity instruments, everything will be done by these banks. And whether this is coming under banking services to account holders? No, because foreign portfolio investors will not be having any account with the bank. Yes, it's a banking service, but if you see only banking services to account holders, place of supply will be location of supplier, as it is not to account holders. So general provisions, got it? Say this, as foreign portfolio investors are not account holders of bank, not account holders of banks or financial institution, place of supply is determined as per general provisions. Okay, so one more question, you say this, question number 12. ABC Bank Limited, a leading bank in India, provides custodial services to XYZ Investment Group, a foreign portfolio investor registered in USA. ABC Bank safeguards the financial assets of XYZ Investment Group, maintains records, facilitates transaction settlements and collects dividends on behalf of FPI. The details of the service provided by ABC Bank Limited are as follows. Custodial service fee, how much they are collecting? 50 lakhs for the financial year. Then location of service provider Mumbai, location of recipient New York, USA. Determine the place of supply. Definitely it is not banking services to account holders. So due to that reason it will be general provision. So USA will be taken. Then will the custodial services qualify as export of service? Yes. Supplier in India, recipient outside India, place of supply outside India, and Is the custodial fee in convertible foreign exchange? So is it given that it is in foreign exchange? So details of services, no, there is no information, so we need to take the assumption that the consideration is received in convertible foreign exchange. Then supplier and recipient are not two establishments of the same person, then it will become export of services. If nothing is given, you take in the question if, you put a if like that. If the consideration is in convertible foreign exchange, then it will become export of services. Put a if condition and give. So answer positively, don't answer negatively. Always to the extent possible answer positively, okay. Positivity helps. Then next, what will be your answer if the custodial service are provided to Indian investors? Then anyhow, we need to take general provisions only, because the confusion is only in case of section 13, because banking service to account holders we have a different provision, but when it is to banking service to Indian people, so we don't have any specific provision. By default it will be general provision. Then that is this. Next, look into the next page. So section 13(6) overrides other provisions of section 13 of IGST Act. This already they have tested, I don't think so they will be asking. In MCQ in November 24 they have tested this. That is, there are 4 services. Service in relation to immobile property, performance based service in relation to goods. In case of service in relation to immobile property, what is the place of supply? Location of immobile property. Performance based service in relation to goods, location of performance. Performance based service in relation to individual, location of performance. Organizing an event, location of event. What if it is partly in India, partly outside India? If it is partly in India, partly outside India, wide a single contract, the place of supply will be entirely in India, and thereafter we need to divide it between the states based on the rules. What if it is fully in India? No problem, India. What if fully outside India? Outside India. What if it is partly in India, partly outside India, wide a single contract? In MCQ they have asked, case scenario MCQ. So marriage, partly in India, partly outside India, what will be taken like that? So our so-called intelligent fellows have written, so for reception it is here, for marriage it is there, like that. But actually partly in India, partly outside India, it will be place of supply India, okay. Then section 14(1), liability to pay GST in case of import of OIDR services by non-taxable online recipient. Already we know import of OIDR services by NTOR. Who will pay GST? Supplier outside India. But here they have brought in one special point that supplier outside India will be difficult to determine. So there will be an intermediary outside India who will connect that supplier and the recipient in India. Let's put the burden on the intermediary. Example, there is a game developer. That game developer is outside India, and App Store or Play Store is the intermediary through which only you will download the game and you will pay money also. Now in that case, even though liability to pay GST is on the game developer outside India, but the primary liability is on the intermediary, because it is convenient to collect the tax from the intermediary rather than the supplier, for which they created this 14 subsection 1. So first there is a import of OIDR services, it by non-taxable online recipient, it is taxable under FCM. Supplier is outside India, recipient is in India, place of supply is in India, location of recipient, because for OIDR services general provisions only na, so location of recipient in India. Now it is import of services. First check whether there involves an intermediary. No, there is no intermediary, then definitely supplier only will pay GST. Yes, there is an intermediary. Where that intermediary is in India? Yes. Whether the intermediary is in India, that is outside India? No. So outside India? No. Then in India, so who will pay? Supplier only will pay. When the intermediary will pay? If the intermediary is located outside India. Whether the intermediary is outside India? Yes. Then whether the intermediary satisfies any one condition? Yes, the intermediary will pay GST. What is that one condition? Number 1, whether the invoice is given by the intermediary? Yes. Or the payment is received by the intermediary? Yes. Or whether the delivery is authorized by intermediary? Yes. Whether the terms and conditions are fixed by intermediary? Yes. Then intermediary, any one condition satisfied, intermediary will pay. No, then supplier only will pay. Example, you are downloading Netflix app. When you are downloading Netflix app, So too many Netflix example when I am giving, don't think it is a paid promotion for Netflix. 1 rupee also I will not get, okay. So therefore, because nowadays people speak too much about brand mean they will be getting money. So that's what my team also said. Sir, many brand names and all you will be telling. So can we ask for a paid promotion? Who am I here? Why will they give me here? 1 rupee also they will not give, okay. Because half of the population is not subscribing to my channel and number of subscribers also very less for me. And where from? They will come, they will watch and they will go. Once subscribe you do na, you will not do. For balloon akka, tailor akka and all you will do subscribe, okay. You will not do for me here, okay. So say this. So Netflix is supplier outside India. Now when you download the Netflix app, so this particular Netflix app when you are downloading, will you get any invoice from the Play Store, App Store? No, you will not get any invoice. And when you need to subscribe to Netflix, where are we subscribing, sir? Telegram we are watching. No, suppose if you are subscribing, I am telling, if you are subscribing, you will make payment through App Store or Play Store, or directly you will go to Netflix and pay. Directly you need to go to Netflix website, create the username, password, and you need to pay there, then only this app will work here. So therefore payment not collected by intermediary, invoice not raised by intermediary, payment not collected by intermediary, delivery authorized by intermediary. You made the payment there, but the movie is not coming here. Can we complain to Play Store, App Store? They will not respond also for this, okay. They are no way connected. And terms and conditions, say for example your username, password you have posted everywhere, so everyone can watch, but parallel viewing difficulty is there. You are also watching, other person also will be watching at that time. So this terms and conditions who will fix? App Store, Play Store? No, supplier Netflix only will fix. Means none of these conditions are satisfied by intermediary. They are not giving invoice, they are not collecting money, they are not fixing terms and conditions, and they are not authorizing delivery. So the original supplier only will pay GST. If any one condition is satisfied, the intermediary shall pay GST. Then next, section 14 subsection 2. Wherever that supplier or intermediary is liable to pay GST, they need to register mandatorily, compulsory registration. First check whether the original supplier or intermediary have physical presence in India. Yes, then they will apply for simplified registration and pay IGST. No, they don't have any physical presence. Do they have representative in India? Yes, then such representative can apply for simplified registration and pay. No, then in case of e-commerce operator also the similar discussion we have made. And in that I told you they shall appoint a representative, but here it is not shall appoint, may appoint a representative. Option 1, may appoint a representative, that representative will register and pay IGST, or they can continue their operations outside India and still they can register and pay IGST. So this is an exception to e-commerce operator. In case of e-commerce operator, if they don't have a representative, they shall appoint a representative. Then next one, section 14A, liability to pay IGST on import of online money gaming. So supply of online money gaming by a person located outside India to any person located in India is chargeable to GST under FCM. So any person, not necessarily registered person, unregistered person, on import of online money gaming, always supplier outside India, the game developer or the gaming company outside India only will pay GST. Now, do they have, means should they register and pay? Of course they need to register and pay. Do they have physical presence in India? Yes, they will apply for simplified registration and pay IGST. No. Whether they have representative in India? Yes, then that representative can apply for simplified registration. They neither have physical presence nor they have representative in India. They shall appoint a representative. That representative shall register and pay IGST. Is it clear? But shall, like e-commerce operator, not may, shall appoint a representative, register and pay. What if they are not complying with that provisions? Then that particular online money gaming platform will be blocked for access. Okay. Thereafter, we need to go to UK, US or Korea, Japan and all. So night times you go on regularly. So you need to go and visit that. If that supplier is not complying with the provisions, their information or website or application shall be liable to be blocked for access. That's it. With this we completed place of supply chapter. So we are left with few topics only. So what I will do, we'll take a break and come fresh. We will complete registration, tax invoice, debit notes and credit notes. Okay. And I think thereafter we are left with returns. First chapter, supply and all, you want me to discuss? Okay. So that already there, yeah, you would have studied lot of times. So to the extent possible, we will try to complete. Don't worry. Okay. We'll meet at 4:30. Yes. Okay, we'll start. Say this, segment 11, invoice, debit notes and credit notes. So in this tax invoice, already we know what are the due dates of tax invoice that we have seen in segment 6, time of supply. So tax invoice will be given by whom to whom? Supplier will be giving it to recipient. Generally supplier will give it to recipient. But in some cases the recipient will give tax invoice to the supplier, in which case when the supply is covered under RCM. So generally tax invoice is given by supplier to recipient. But if the supplier is unregistered and the recipient is registered, recipient shall issue in case of RCM. What is the time limit within which recipient will give tax invoice to supplier? Already I told you that this is an amendment within 30 days from the date of receipt of goods or services. And tax invoice will be given by a registered person who is making taxable goods or taxable services. And next, so this amendment is not applicable for you, so don't have to bother about it. Bill of supply. Bill of supply will be given by whom? Bill of supply will be given by a registered person who is making exempted supplies or paying tax under composition scheme. And whenever the bill of supply is given, so same time limit of tax invoice will be applicable even for bill of supply. And there is something called as invoice cum bill of supply, that is consolidated invoice cum bill of supply. And if you see here, tax invoice is shall, bill of supply is shall, but invoice cum bill of supply is may issue. And when a registered person who is making both taxable and exempted supplies to an unregistered person, registered person is supplying taxable as well as exempted goods or services or both to an unregistered person, then invoice cum bill of supply, that is not mandatory, may issue. And again, who will give? Supplier only will give. What is the time limit? Same time limit of tax invoice. And there is one special provision here. In case of low value supplies, low value supplies means what? Value of supply less than 200. Tax invoice as well as bill of supply not required if three conditions are satisfied. Condition number 1, recipient is unregistered. Condition number 2, recipient do not require tax invoice. Condition number 3, a consolidated invoice needs to be generated by the end of the day, and they don't have to issue, but they need to generate it for the records purposes. And in case of multiplex theatres, even though it is a low value supply, that is less than 200, and they are making to an unregistered person, but mandatorily they need to give invoice, and the e-ticket will be deemed to be invoice. In case of multiplex theatre, an invoice, that is e-ticket, deemed as invoice to be issued even if the value of supply is less than 200. Here remember, it is not less than or equals to 200, it is less than 200. Then debit note and credit note will be shall. Debit note is shall, but credit note is may. Okay, it is not shall. And debit note, why it is shall? Because it is going to increase the liability, that's why shall. Credit note is going to decrease the liability, so it is loss to government, that's why may. If you want to give, you give, otherwise not required, like that. And debit note, whenever it is issued, what will happen to supplier? Supplier liability will be increased, and the recipient will be able to take ITC based on the debit note. When they will give debit note? Whenever there is an increase in the invoice value, means the actual taxable value is more than the invoice value, or the actual tax is more than the tax as per invoice, then the supplier will be giving debit note to the recipient. And is there any time limit? There is no time limit. So usually on receipt basis, that is, we have seen the time of supply in case of interest, late fee or penalty for delay in receipt of consideration, whenever we are receiving it, actually we need to raise the debit note. That's why usually on receipt basis. Then credit note may issue. When credit note? Whenever there is a decrease in the invoice value. There is already some invoice value, but the actual value is less than invoice value, or already some tax is there as per invoice, but the actual tax is less than the tax as per invoice, or sales returns, or in case there is a deficiency in the quality. So in these 4 cases, supplier will be giving the tax, like credit note to the recipient, and here credit note cannot be issued in case of bad debts. And what is the time limit? 30th November of the succeeding financial or date of filing annual return, whichever is earlier. For single invoice, whether we need to give single debit note, credit note, not necessary. Cumulatively for 10 invoice also we can give a single credit note, single debit note, or for the same invoice we can give multiple debit notes and credit notes also, it is possible. So one or more credit note or debit note can be issued for multiple invoices. Then revise the tax invoice. When revised tax invoice comes into picture, a person is liable to get registered. And when he is liable to get registered and he is required to pay GST from the date he is liable to get registered on his outward supplies, but he cannot recover the GST from the recipient because he not got the registration certificate. So from the date he is liable to get registered till the date he get the registration certificate, during this period, so he cannot recover the GST for the outward supplies during this period. At a later point of time post registration, he can give the revised tax invoices to recover the GST. What is the time limit within which the revised tax invoice can be given? Within 1 month from the date of registration certificate. What is the period for which they can give? Effective date of registration till the date of certificate of registration. And what is the effective date of registration? If the application for registration is made within 30 days from the date they are liable to get registered, the date on which they are liable to get registered is the effective date of registration. If the application is not made within 30 days from the date they are liable to get registered, then the date on which they get the registration certificate, which means that if the application for registration is not made within 30 days from the date they are liable, they cannot issue revised tax invoice, because the effective date of registration also, certificate of registration also, same date, so they cannot give revised tax invoice. Every registered person has been granted registration with effect from a date earlier than the date of issuance of certificate of registration to him may issue. It is not mandatory, it is optional, because revised tax invoice is to recover the GST. You go and die in Bay of Bengal also, we don't bother, but like it is up to you. If you want to give, you give, but we cannot compel. And may issue revised tax invoice in respect of taxable supplies effected during the period starting from the effective date of registration till the date of issuance of certificate of registration. Who will be giving? Supplier will be giving it to recipient. What is the time limit? Within 1 month from the date of certificate of registration. And revised tax invoice cannot be issued if application for registration not made within 30 days from the date on which liability to register arises. And what will be taken as the effective date of registration? I told you, if applied within 30 days, the date on which they are liable to register, otherwise date on which registration is granted. And there are two consequences for not making application for registration within 30 days. This is consequence number 1, that revised tax invoice cannot be issued. And 18(1)(a), availment of ITC on closing stock also they cannot avail if the application is not made within 30 days. Then receipt voucher. Receipt voucher is mandatory, shall, that is whenever the advance is collected but invoice is not yet given. So when invoice is not given, if the payment is collected, then it is called as advance. In the case of advance, we need to prove that we have collected the advance and some confirmation should be given to recipient. That's why a receipt voucher shall be issued when advance is received by the supplier from the recipient. And who will give? Supplier will give. It is required only when the payment is received before issuance of invoice. Is there any time limit? No, it is not specified. So immediately upon receipt of advance it should be given. And payment voucher, again payment voucher also shall. Who will be making payment to whom? Recipient will make payment to supplier. Na? In case of RCM, whenever recipient is making payment to supplier, recipient shall issue a payment voucher to the supplier. Only in case of RCM. A registered person who is liable to pay tax under 9394 shall issue a payment voucher at the time of making payment to supplier. Who will be giving it to whom? Recipient to supplier. Is there any time limit? No. So immediately upon payment. Then refund voucher. Refund voucher is not shall, may. That is whenever the advance is collected. Our advance already receipt voucher is given. The time of supply in case of advance, in case of services is advance itself. So therefore already they would have paid GST, but the supply is cancelled. When the supply is cancelled, on that advance whatever GST paid they need to get as a refund. For that purpose they will be giving a refund voucher to the recipient. So refund voucher, refund of advance received and invoice is not yet generated. So who will be giving it to whom? Supplier. When it will be given, not specified, so immediately upon refund. What if the invoice is already prepared and thereafter the supply is cancelled? In that case anyhow they will give credit note, because a refund voucher will come into picture if the payment is refunded before invoice. Once the invoice is prepared, thereafter it is credit note only. If amount is refunded after issuance of tax invoice, then credit note may be issued by supplier to recipient. Then there is delivery challan. When delivery challan, whenever there is movement of goods, that movement of goods is not covered under supply, then in that case delivery challan will be given. For example, goods sent on job work, it is not supply now, so delivery challan. Head office to branch office in the same state for which they have not obtained separate registration, delivery challan. Goods sent on lots or installments, only on last installment we will send invoice. Until that point of time we will be giving delivery challan. So supply of liquid gas where the quantity at the time of removal is not known. That is, I am sending the gas, liquid gas. I don't know how much will be refilled there. So therefore delivery challan, depending upon the refilled quantity, I will raise the invoice. Transportation of goods for job work, transportation of goods for reasons other than by way of supply. So supplier will be giving the delivery challan to the recipient. Time limit not specified, so as and when the goods are moved. Then whether details of recipient to be mentioned in the invoice. Yes, definitely recipient details should be mentioned in invoice if it is B2B. So value of supply in the invoice, don't see value of supply in the invoice. If it is B2B, always details of recipient should be mentioned in the invoice. But if it is B2C, the value is greater than or equals to 50,000, then also you need to mention the details of the recipient. But if the value is less than 50,000, then you don't have to mention the details of recipient. If they ask only, we need to mention. However, there are three cases: service, that is supply through e-commerce operator, services through e-commerce operator, OIDR services, or OMG. In these three cases, we need to mention the recipient. At least the state of the recipient needs to be mentioned. Name of state of recipient. You remember it like 3 points. Point number 1, B2B, definitely recipient details required. B2C, greater than or equals to 50,000, recipient details required. Other cases, recipient details not required, only if they are asking we need to mention. However, in case of services through e-commerce operator, OIDR or OMG, name of state of recipient should be mentioned. Then invoice in special cases. So who will be giving invoice to whom? Supplier to recipient. For services, what is the time limit? In case of banking and insurance, 45 days from the date of completion. In case of others, 30 days from the date of completion. If it is transaction between distinct persons, who are those distinct persons? Either insurance company or banking company or telecom operator. In that there are transaction between distinct persons. Quarterly, if they give invoice, that is sufficient. At or before entry in the supplier books or before expiry of the quarter during which supply is made. In all other cases, normal, 30 days from the date of supply of service. Then GST implications on debit note and credit note, that is given in section 34. Debit note will be given by supplier to recipient, and whenever the recipient has to pay an amount beyond the invoice price, that is increase in invoice value. What is the consequence of this? And is there a time limit? No. What is the consequence of this to the supplier? Increase in liability. So the supplier should report it in GSTR1 and GSTR3B. What is the consequence of this to the recipient? For recipient, ITC will increase and he will avail the ITC in GSTR3B. Whereas credit note. So credit note, when it will be given, recipient has to pay an amount less than the invoice price, means decrease in invoice value. Who will be giving it to whom? Supplier to recipient. What is the time limit? 30th November of next financial year or date of filing annual return, whichever is earlier. What is the consequence of this to the supplier? There is a decrease in output tax liability. Will it be reported in GSTR1? Of course, reported in GSTR1 and 3B. What is the consequence of this to the recipient? The recipient will reverse the ITC or increase in output tax liability, and it will be reported in GSTR3B under reversal of ITC. If they have sufficient balance in ITC, they will reverse the ITC. If they don't have sufficient balance in ITC, then they need to make the payment. Then look into this receipt voucher versus refund voucher. First, before the date of invoice, if the payment is received, what is the name of that payment received? Advance. Whether supplier should issue receipt voucher to recipient? Yes, supplier shall issue receipt voucher to recipient. In case of goods, GST is not payable, but in case of services, GST is payable on advances. Suppose the invoice is issued. As invoice is issued, GST is payable based on time of supply. After issuance of invoice, if the payment is received, that is balance, is it mandatory for the supplier to give invoice? No. Is it mandatory for supplier to give receipt voucher? No. Supplier may issue receipt voucher to the recipient because invoice is already issued now. As invoice is already issued, so therefore supplier may issue, not mandatory, may issue receipt voucher to recipient. Same way, before the date of invoice, if the amount is refunded, then supplier shall issue refund voucher or may issue refund voucher? May issue refund voucher. It's not shall issue refund voucher. May issue refund voucher to recipient. And if it is goods, first of all, they have not paid any GST, so no question of refund. But in case of services, they paid GST, so refund they will claim. How much ever GST they paid, they will get as a refund. What if the supplier has not given refund voucher? Then in that case, the burden is on the recipient. That's what I told you, marriage hall example. So first booking advance collected 1 lakh. and they have given the receipt voucher. Thereafter, they cancelled the booking. When they cancelled the booking, they returned only 1 lakh. When they return only 1 lakh, but the burden is on the recipient, can the recipient claim refund with respect to that? Yes. Even though the recipient is unregistered, they can claim the refund with respect to that. You can see, if the supplier has not issued refund voucher, burden of GST on advance is on the recipient, and such recipient, even though unregistered, can claim refund. Then next, suppose if the amount is refunded or supply is cancelled after preparation of invoice. After preparation of invoice, if the supply is cancelled, then what is the consequence? In that case, supplier may issue a credit note. So 3 options are there. Option number 1, supplier may issue a credit note. When supplier issues credit note, what will happen? Supplier liability gets reduced. But supplier may not issue credit note because of the time limit issue. They could not issue the invoice, they could not issue the credit note because of the time limit got expired. Then what is the alternative? In that case, supplier will refund the full amount. That is, for example, 1,12,000 collected. For that invoice I prepared. Now I return entire 1,12,000. Option number 1 for me, I will give credit note for 1,12,000. So my 12,000 rupees liability gets reduced. But time limit is there. Time limit over. Then what can I do? It's okay. Already I returned to you 1,12,000. Nah? That 12,000 rupees I can get as a refund under excess payment of tax. See this. Refund can be claimed under excess payment of tax by the supplier. Suppose I feel, why should I give you 1,12,000? I refunded only 1 lakh. 12,000 rupees burden on you. Can you claim recipient as a refund? Yes. Alternatively, recipient also can claim refund even if unregistered. Then, as per section 32, an unregistered person is not supposed to collect GST from the recipient, and GST component should be shown separately in invoice as per section 33. Then, HSN code in invoice. HSN refers to harmonized system of nomenclature that should be mentioned in the invoice in case of goods, and SAC, service accounting code, in case of services. But for HSN there is a relaxation. If my aggregate turnover during previous year does not exceed 5 crores, for B2B supplies only I need to mention HSN, that to 4 digits. HSN is a 8-digit number, only 4 digits I need to enter. If my aggregate turnover during previous year exceeds 5 crores, for B2B or B2C, I have to enter 6 digits. For services, it is service accounting code and it is a 6 digit. All 6 digits we need to enter. Then you need to understand how the invoice will be given. Usually, invoice will be prepared in triplicate for goods. You just write down over there. So in the site, invoice in triplicate for goods. In that, original to the recipient, duplicate for transporter, triplicate to supplier. Okay. Invoice should be prepared, invoice in triplicate for goods. In that, original to recipient, duplicate to transporter, triplicate to supplier. Then, in case of services, how the invoice should be prepared? In case of services, the invoice should be prepared in duplicate, only 2. Original to recipient, customer, and duplicate to supplier. Okay, only 2 copies. So, this you have written now. Then next one, invoice in duplicate for services, original to recipient and duplicate to supplier. Okay, so that is about this. Then there is something called as e-invoice and dynamic QR code in invoice. What is the meaning of e-invoice? Obtaining 3 things from the invoice registration portal is known as e-invoice. That is IRN, invoice reference number, QR code and digital signature is known as e-invoice. Obtaining the following from invoice registration portal with respect to a normal tax invoice by uploading JS1 file in such IRP is known as e-invoice. So what are those 3 things? Invoice reference number, QR code and digital signature. You can see the e-invoice process. First, the taxpayer will prepare a normal invoice using his billing system or ERP system. Then he will convert that invoice into .js1 file. This invoice should be in a prescribed format. That format is given in form GST INV1, and then that should be converted into .js1 JavaScript object notation, which is a machine readable language, and thereafter it should be uploaded into invoice registration portal. And in the invoice registration portal, the portal will do deduplication check to check whether the same invoice has already been uploaded, because for the same invoice you cannot obtain again a e-invoice for that reason. And then the invoice registration portal will assign 3 things: that is invoice reference number, sign with digital signature and add the QR code, and thereafter it will be sent to GST system and e-way system. Okay, and so that in GST portal the seller's GSTR1 automatically the invoice gets added, and in the recipient's GSTR2B also ITC gets updated. So GSTR1 updated for the seller and GSTR2B updated for the buyer, and the buyer can view this invoice in his portal and check the authenticity of this invoice by verifying the QR code or by entering the invoice reference number, so that he will be pretty much sure that he made a purchase and that invoice is a genuine invoice, and seller also can view his liability. Now this is the e-invoice process. Here suppose if the supplier has to issue an e-invoice but instead gave a normal invoice, if the supplier is required to issue e-invoice but not issued e-invoice and issued a normal invoice, can the recipient avail ITC? No, recipient cannot avail ITC even though such invoice is reflected in GSTR 2A or 2B of the recipient. Okay, but they cannot take. So this is not considered as a valid invoice. So that is about e-invoice. To whom e-invoice is applicable? If my aggregate turnover in any previous year from 2017-18, so if it does not exceed any previous year, it is not just the immediately preceding previous year, any previous year from 17-18, if it does not exceed 5 crores, then e-invoice is not required, and if it exceeds 5 crores, then e-invoice is required. And there is a concept called as dynamic QR code in invoice. That dynamic QR code is applicable if my aggregate turnover in any previous year exceeds 500 crores. Remember, for B2B, that is sale to registered person, e-invoice. For sale to unregistered person, it will be dynamic QR code in invoice. So if it does not exceed 5 crores, for B2B invoice not required, for B2C dynamic QR code not required. If it exceeds 5 but does not exceed 500 crores, for B2B invoice, for B2C dynamic QR code invoice not required. If it exceeds 500, for B2B invoice, for B2C dynamic QR code invoice is required. And invoice should be prepared in prescribed form. What is that prescribed form? Form GST INV 1, and it is optional for the taxpayer whose aggregate turnover during any previous year does not exceed 5 crores. If I want to generate e-invoice, yes, I can generate e-invoice, and e-invoice gets auto populated in GSTR1 and e-way bill. And whenever we are maintaining e-invoice, the physical copy of the invoice is not required. That's why I told you that we will maintain copies of invoice, triplicate and duplicate. That is not required when e-invoice is generated. Then, so when the officer during the transit want to verify the invoice, how he can verify? In e-invoice there will be a QR code. That QR code can be shown to the officer so that he can verify the QR code. QR code can be produced before the proper officer for verification when required. What are the types of transactions for which e-invoice is required? I told you B2B. B2B, let it be FCM or let it be RCM. Means I am making sale to a registered person. Whether I pay GST or my recipient pay GST, e-invoice to be generated, and even zero rated supplies always e-invoice required. What are zero rated supplies? Export of goods or services, supply of goods or services to SEZ. Then credit notes and debit notes B2B. So these are the transactions for which e-invoice is required. And taxpayers with aggregate turnover greater than or equals to 100 crores shall report invoices, debit notes or credit notes within 30 days from invoice date. So what is the time limit within which e-invoice should be generated? 30 days. That too for whom? Whose turnover greater than or equals to 100 crores. But sir, e-invoice is applicable when they cross 5 crores na sir? Yes. So it should be like, if my aggregate turnover exceeds 5 crores, e-invoice is applicable, but there is no time limit for generating e-invoice, leisurely also. So after 6 months, 7 months, 1 year also I can generate, but the problem is I should generate it by end of this year. Otherwise the recipient cannot enjoy the ITC. He will be required to reverse the ITC. Is it clear or not? And next, suppose if it is greater than or equals to 100 crores, then within 30 days from the invoice date I need to prepare the e-invoice. And this 100 crores limit has been reduced to 10 crores, but that is not applicable for you. So you remember only 100 crores for your exam. Then next, 2 more points you try to add there. E-invoice cannot be amended. Once e-invoice is generated, that cannot be amended. At any cost, it cannot be amended. And e-invoice can be cancelled. What is the time limit within which it should be cancelled? Within 24 hours. E-way bill also same. E-way bill also can be cancelled within 24 hours of its generation. E-invoice also can be cancelled within 24 hours of its generation. Understood? Then next, dynamic QR code. What is dynamic QR code means? Dynamic QR code means, like in the invoice, we need to put the QR code and we need to collect the money only by scanning the QR code. That is known as dynamic QR code. It may or may not be mentioned in invoice, but the payment should be collected by scanning dynamic QR code. The opposite of dynamic QR code is static QR code. That is, whenever you scan, you need to enter the amount, that is static QR code, but whenever you scan, automatically amount will come, that is called as dynamic QR code in invoice. What are the entries that should be made in order to create a dynamic QR code, and who will create dynamic QR code? Dynamic QR code is not created by portal. Dynamic QR code is created by the taxpayer using his POS device, point of sale device. But in e-invoice, one QR code is there na, that will be prepared by the portal. So while creating the QR code, that is dynamic QR code, what entries he need to make? First, he need to enter the GSTN of the supplier, then UPI ID of the supplier. Means the moment you scan, all those details should be reflected. So therefore, next time when you are buying anything in Amazon, so just select pay on delivery and scan it. So you will tell paying to Amazon Seller Services Limited, like that one name will come. So GSTN of supplier. Then UPI ID of supplier, their bank details, UPI, then bank account and IFSC code. Then these three are actually static, like it will be constant. Whereas invoice number and date will be changing, invoice amount with breakup of value and tax will be changing. So embedding these 5 fields, they need to prepare a dynamic QR code. And suppose if the payment is already collected, then in that case, so that is advance is collected, invoice is not yet prepared, advance is already collected. In that case, whether it is required to give dynamic QR code? No. If the payment is already collected before generating invoice, dynamic QR code is not required. You can see exception to mentioning dynamic QR code in invoice. Point number 1. If payment is received before at the time of generating invoice, payment is already received before at the time of generating invoice, and the cross reference of such payment received is mentioned. So in case of cash receipt, that the date on which cash is received. So we are mentioning in the invoice itself mode of payment, card, ending 4 digits, or cash, like that we mention. So dynamic QR code is not applicable. So therefore, if some amount is collected before invoice and some amount is collected after invoice, then in that case, dynamic QR code should be for what amount? Only that part which is collected after invoice. You can see here, part received before invoice and remaining after invoice, then only for the balance due should be mentioned. Then what is the exception to this UPI ID of supplier? Generally, UPI ID of supplier should be embedded in the dynamic QR code, but sometimes in case of e-commerce transactions, so the e-commerce operator will collect the amount. So e-commerce operators UPI ID or delivery agents UPI ID should be mentioned. Bank account and IFSC of the supplier, so not required if UPI ID is linked with the bank account. Almost every UPI ID is linked with bank account, not necessary. Sometimes a UPI ID will be provided by some other bank with which you are not having account. So then UPI ID is not linked to bank account. Invoice number and date. So practically in case of retail outlets, it is not possible. So one unique number, because 10 outlets will be there and all the 10 counters will be parallelly preparing the invoice. So in that case, some unique number if they put, that is sufficient. Then suppose if the recipient is located outside India, so means it is export of service, na sir, not necessary. When the recipient is located outside India, it is not necessary export of services, because if all the conditions are satisfied, then only it is export of service. Suppose if the consideration is in Indian rupees or the place of supply is in India, but the recipient is outside India, it is not an export of service. Then in that case, e-invoice not applicable. If it is export of service, definitely e-invoice is applicable, but otherwise e-invoice not applicable. So can we apply dynamic QR code in invoice? Remember, whenever the recipient is outside India, they cannot scan and make the payment because they are still somewhere in Stone Age only. They are using cards only outside India. We have advanced to a greater level where we will scan and we will make the payment through mobile, etc. and all. They don't know how the payment will be made like that also. So if they don't have card, they can't do anything with respect to that. So, but we are not like that. So therefore, UPI system is not there outside India due to that reason. So the payment cannot be made by them. Okay, ignorant people. So location of supplier India, recipient outside India, place of supply India, and payment in convertible foreign exchange. It is not an export of service, and dynamic QR code not required, as recipient outside India cannot make payment through QR code. Already this is tested in November 24 exam. One place of supply provision is connected with this, already they have asked. Then, so there are few exceptions for e-invoice and dynamic QR code, that is, even though your aggregate turnover during any previous year exceeds 5 crores, in these cases e-invoice not applicable. What is that? Biggest. So always remember, don't write the mnemonics in the exam. I told you this. Okay. Suppose if you get a theory question like this, don't write biggest and B for what, I for what, like that. No. See, anything other than what you have learned, don't write. One line also don't write. Because of writing that, unnecessarily you will be losing 2 marks or 3 marks. No, waste, that is. Effort is waste. You will think, okay, I will write one line. What is there like that? No, no, nothing. If you know something, if it is there in the law, that alone you write. Otherwise, no, don't write anything extra. Okay. So visualizing there, creator inside me will come and that creator will write something. No, you are not going there for story writing. You are going there for writing the exam. Got it? And so irrelevant information is there. So I don't know why, but usually I have seen many answer sheets. If irrelevant information is there, they will cut. While giving marks and all, they will see and give, but while deducting and all, happily they will deduct. They will not consider also. So this mnemonic don't write. B for banking company, then or financial institution, NBFC. I, biggest is the mnemonic for not required to generate e-invoice. B for banking company, financial institution, NBFC. I for insurance company. G for GTA, and next G for government department, local authority. E for exhibition of film in a multiplex theatre. S for SEZ unit, but SEZ developer is required to give an e-invoice. And T for transportation of passengers through which mode? Any mode. Transportation of passengers through any mode. So these are the cases, biggest, in which we need to prepare e-invoice or not required to give invoice. Not required to give invoice. One important point to remember, not only for their services, if these people provide any other service also, e-invoice not applicable. For example, banking company not required to give e-invoice, not only for banking operations. If there is a bank which is giving immobile property on rent, for that immobile property service also they are not required to give e-invoice. So that is the clarification. Whether exemption for mandatory generation of e-invoices is available for entity as a whole or only in respect of certain supplies made by the entity as a whole. So which means any service provided by these people. For example, exhibition of film in a multiplex theatre. Multiplex theatre will be selling food and beverages. Then in that case, whether they need to give invoice? No. If they provide any other service, e-invoice is not required. Is it clear? Next, irrespective of aggregate turnover, QR code is not required in the following cases. What is that? Remember, big two. B for banking company, I for insurance company, same. G for GTA, okay, same. This is same. Then TOE, T also same. Transportation of passengers by any mode, and only O is extra. OIDR supplier located outside India and making supply to NTOR in India, and E for exhibition of film in a multiplex theatre. So this is the list that we have. Whether government department is required to give dynamic QR code? Yes, because government department, local authority is not there in this list. So for them dynamic QR code will be applicable. So this is about tax invoice, debit notes, credit notes, then e-invoice, dynamic QR code. These are the aspects we have. Then look into the next segment that we are moving on to, registration, segment 12. In this registration, total we have these 9 sections, and section 22, 23, 24 talks about the legality of registration. When a person is required to get registered is 22. When a person is exempted from registration, 23. Compulsory registration is given in section 24. And 25, 26, 27 are the procedural aspects. 25 procedure for registration, 26 deemed registration, 27 special provision for CTP and NRTP. Then special cases, 28 amendment to registration, 29 cancellation of registration, 30 revocation of cancellation of registration. So mostly the questions will be important in these areas 22, 23 and 24. So what is the threshold limit for registration? Section 22 subsection 1 says a person as and when aggregate turnover during a financial year exceed threshold limit, then the person is required to get registered. So what is that threshold limit? If they are doing business only in single state, they are doing business only in one state, and that one state is in MTN, Manipur, Mizoram, Tripura, Nagaland, then the limit will be 10 lakhs. Let it be goods or services. If they are doing business in U-stamp states, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, then it will be 20 lakhs, let it be goods or services. And for all other states, if they are exclusively engaged in supply of goods, then it will be 40 lakhs, otherwise it will be 20 lakhs. And next one you need to see, if there is a person who is engaged in business in multiple states, and in that, so one of the state is in MMTN and taxable supplies are made from that state, then the limit will be 10 lakhs. Two conditions, one of the state, for example Tamil Nadu, Nagaland and we have Andhra Pradesh. So one of the state is in MMTN and taxable supplies are made from that state, then the limit will be 10 lakhs. Second point, none of the states, out of the given states, none of the states is in MMTN U-stamp and they are engaged in supply of goods, only supply of goods, then the limit will be 40 lakhs. Balancing figure will be 20 lakhs. So that is these 3 points. Next, we need to see aggregate turnover compute on all India basis and not state wise. The limit of 40 lakhs is applicable only in case of exclusive supply of goods. However, interest income is allowed. For example, say I am doing business in Tamil Nadu. Say I am doing business in Tamil Nadu, and in Tamil Nadu, what is the applicable limit? Applicable limit. So we need to see first. So what is the business I am doing? I am engaged in sale of goods. In Tamil Nadu, I am engaged in sale of goods. So what is the value of sale of goods? Say the goods is 36 lakhs and I am providing some delivery services, and this delivery services is 3 lakhs. Okay. So what is my aggregate turnover? My aggregate turnover is 39 lakhs. Now you tell me what is the applicable limit? Is it 40 lakhs or 20 lakhs? What should be taken as the applicable limit? Definitely 20 lakhs. Why 20 lakhs? Why not 40 lakhs? Because I am not exclusively engaged in supply of goods. So due to that reason, therefore liable to register or not liable to register? Liable to register. Suppose if in the same Tamil Nadu I am engaged in, okay, in the same Tamil Nadu I am engaged in sale of goods. And the value of this sale of goods is say 35 lakhs, and I have interest income. That interest income is somewhere like 4 lakhs and I have 39 lakhs. And you tell me what is my applicable threshold limit? This is aggregate turnover. What is my applicable threshold limit? Come on. Applicable threshold limit is 40 lakhs. Why? If I have only interest income, it's okay, fine. I will be considered as, that is purely goods plus interest income. Still I will be considered as exclusively engaged in supply of goods. Therefore, not liable to get registered. Okay, not liable to get registered. That is with respect to this. So if a person is engaged exclusively in supply of goods, but however interest income is allowed. If a person is exclusively engaged in supply of service or both goods and services, then the limit will be 20 lakhs or 10 lakhs. The 40 lakhs limit is not applicable in the following cases. If I voluntarily get registered, 40 lakhs limit is not applicable. If I am compulsorily registered also, this 40 lakhs is not applicable. Person making exclusive supply of ice cream, edibilized, pan masala, tobacco and tobacco products, bricks and roofing tiles. Remember, exclusive. Okay. For example, there is a small shop and in that small shop, they are selling all commodities. They are selling tobacco and tobacco products, and can they go for 40 lakhs limit? Yes. Even though they are engaged in sale of tobacco and tobacco products, they can go. And there is one small shop which is engaged in sale of ice cream and other goods. Can they go for 40 lakhs? Yes. So, but an ice cream shop like Ibaco cannot go for 40 lakhs limit, or a pan shop which is selling pan masala, tobacco products cannot go for 40 lakhs. So, 20 lakhs limit is only applicable to them. Okay. And in this list of goods, there is a difference between composition scheme and here. So, in composition scheme, in the list of goods, we have ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. But here that aerated waters is missing here. And there composition scheme, only manufacturer cannot opt for composition scheme. Here they did not tell manufacturer. Any person, trader or manufacturer will not get the higher threshold limit of 40 lakhs. So that is about this threshold limits. Now whenever my aggregate turnover exceeds the threshold limit, I need to register. Then exempted from registration, section 23. Who are exempted from registration? 4 people. That is, if I am making exclusively non-taxable supplies, or exclusively exempted supplies, or exclusively RCM supplies, I am exempted from registration. One more, agriculturist. Okay. However, in case of that RCM supplies, they have brought in one point. That is, if I am an unregistered person, carefully listen. If I am an unregistered person, I am making sale of metal scrap to a registered person. It is covered under RCM. Then indefinitely I will be making sale to unregistered person only, then always it will be coming under RCM, means I am exempted from registration. No. So as and when my aggregate turnover exceeds threshold limit, I need to register. So generally when my outward supply is fully covered under RCM, I am exempted from registration, except for a person engaged in sale of metal scrap. That is this. So exclusively engaged in making exempted supplies, including non-taxable supplies. Agriculturist to the extent out of cultivation of land. Exclusively engaged in RCM supplies other than supplier engaged in supply of metal scrap. If a person is making both exempted and taxable supplies, then the above exemption is not available. Then, so this point already we have seen, if I am making supply of goods through e-commerce operator, I am compulsorily required to get registered. However, if I am making if I am not making interstate supplies, or if I am not making supply through e-commerce operator in more than one state, and if I have obtained unique enrollment number, then I don't have to register. I can still make supply through e-commerce operator, supply of goods. But what will happen? As and when my aggregate turnover exceeds threshold limit, I need to register. And this unique enrollment number cease to be valid. Then section 22 itself, there are few compulsory registrations. That is, if I am registered under earlier law, I should also be registered under GST. And suppose if there is any transfer of business, the transferee should compulsorily get registered. And in case of transfer pursuant to a scheme of amalgamation, merger or demerger also, there is compulsory registration. But in these 3 cases in compulsory registration, they need to register, but they can make application for cancellation of registration if they are no longer liable to be registered. However, in case of compulsory registration under section 24, it's not like that. Irrespective of aggregate turnover, they need to register, and if their turnover falls below threshold limit and all, they cannot make application for cancellation of registration. What is that? Number 1. So you need to remember this I creations. I for interstate supply of taxable goods, not services. So only interstate supply of goods is compulsorily required to get registered other than handicrafts. C for casual taxable person other than handicrafts. Then recipient who is liable to pay GST under RCM 9.3, not 9.4, 9.3. Then every e-commerce operator who is liable to pay GST under 9.5 and liable to deduct TCS under section 52. Then A for agent making supplies on behalf of principal. T for TDS deductor. I for input service distributor. O for 2O, that is OMG and OIDR. OMG located outside India, OIDR located outside India. N for NRTP, non-resident taxable person. Yes, supplier of goods through e-commerce operator, but other than those who are making only intrastate supplies. So irrespective of threshold limit, a person is liable to get registered. Then section 23 is an independent section, so it will override all other sections. And section 24 compulsory registration will override only section 22 subsection 1, that is if they cross the threshold limit, they need to register is what 22 subsection 1 says, but 24 says irrespective of threshold limit you need to register. So these are the points that we have related to liability to get registered. Now we are moving on to procedure for registration. In this procedure for registration, see there are 6 forms, REG 1 to REG 6. REG 1 application for registration, REG 2 acknowledgement, REG 3 notice for discrepancy, REG 4 reply to notice, REG 5 rejection of application, REG 6 certificate of registration. As and when you make application for registration, immediately you will get an acknowledgement, and within 7 working days either you will get a notice or you will get a certificate of registration. Suppose if you are getting a certificate of registration, no issue. If you are getting a notice, then you need to give a reply to the notice. What is the time limit within which you need to give reply to notice? Again 7 days, 7 working days. Once you make reply to the notice, thereafter they have received the reply, within 7 working days they will either decide to give registration certificate or will reject the application. So application for registration, what is the time limit within which we need to submit? 30 days. To be submitted within 30 days from the date on which person become liable for registration. So REG 1 to REG 2 immediate, that is application to acknowledgement, application to notice or application to certificate of registration 7 working days. Say we got a notice, then we gave a reply, that is 7 working days. After we give reply within 7 working days, we need to either get the certificate or rejection of application. And should we give the bank details at the time of making application for registration? No, we don't have to give the bank details, it's not mandatory. If you have, you can give, otherwise at a later point of time you can update the bank details. What is the time limit within which we need to update the bank details? Within 30 days from the date we got the registration certificate or the date, not due date, date on which we file the first return, that is GSTR 1, whichever is earlier, not later, whichever is earlier. So therefore bank details can be furnished within 30 days from the date of registration or date of filing GSTR 1, whichever is earlier. But this provision is not applicable in case of TDS TCS deductor. So they have to give the bank details at the time of making application for registration. Okay, then this procedure for registration is there now. Now whatever we have discussed, this procedure for registration, this procedure for registration is not applicable to these people. Okay, this procedure for registration is not applicable to not you. Okay, not you. So see the procedure until not you. Who are they? NRTP, OIDR supplier or OMG supplier, and TDS TCS deductor, and U for unique identification number holder. Okay. So procedure for registration not applicable to N, NRTP, O for OIDR or OMG supplier, T, TDS, TCS deductor, U for unique identification number holder. So to them this procedure for registration is not applicable. Okay. Then there are few cases where a person's registration is granted subject to physical verification. What are the cases where physical verification is mandatory? Only after physical verification the registration will be granted. 3 cases pa. Number 1, you made the application without selecting other authentication. Number 2, or you made the application by selecting the other authentication but you have not completed the authentication within 15 days. Number 3, you made application with authentication, completed authentication, but based on risk parameters the department wanted to carry out the physical verification. So very important for short note. There are 3 cases where physical verification will be required. So application without other authentication, application with authentication but it is not completed within 15 days, or application with authentication it is completed but officer requires physical verification on risk parameter basis. Now whenever they are doing physical verification, what is the time limit within which they need to complete the physical verification? 30 days from the date of application. So once we are making application, within 30 days they need to complete physical verification. Okay, now so that is the time limit, but officer has to upload the physical verification report. So when he need to upload the physical verification report, the 30 days is there na, at least 5 days before the 30 days they need to upload the physical verification report, where the physical verification of place of business of a person is required before grant of registration. The proper officer shall get such verification done, and the verification report along with the other documents including photographs shall be uploaded at least 5 working days. 5 working days, okay, 5 working days prior to the completion of the time period specified. What is the time period specified? That is 30 days from the date of application. And where the proper officer, sometimes the physical verification will be conducted after grant of registration. In that case, so whenever the officer comes and verifies within 15 working days, within 15 working days following the date of such verification, they need to upload the report. You see this? So where the proper officer is satisfied that the physical verification of place of business is required after the grant of registration, he may get such verification of place of business done, and the verification report along with the other documents including photographs shall be uploaded within a period of 15 working days following the date of such verification. Then other authentication, you can see here option 1, other authentication. After submission of part B of RAG1, an authentication link will be sent to registered mobile number and email, and we need to complete the Aadhaar OTP and the registration to be granted, registration certificate to be granted within 7 working days of the authentication. Means the date on which you completed authentication will be taken as the date of application, and if fails to authenticate within 15 days, application is deemed to be submitted on expiry of 15 days without authentication. Then suppose if you submit application without authentication, after submission of application you need to visit the nearest facilitation center where verification of photograph and verification of original copy of documents are completed, because you need to do the KYC. Reason being, so there is no authentication opted. Then based on risk parameters also sometimes the officer will take up the physical verification. These are the 3 things I told you. First, you have made the application without authentication, physical verification, or you made the application with authentication but based on risk parameters they are taking it for physical verification, or you made the application with authentication, completed authentication or not completed within 15 days, so then also they will do physical verification. What is the time limit within which they need to complete physical verification? 30 days. And after physical verification of place of business, registration certificate will be granted. What if they are unable to complete the physical verification within 30 days? At least they will be giving a notice. Okay. So therefore you see this. If show cause notice is received within specified period, then applicant need to file clarification, and after filing clarification, officer should grant registration within 7 working days, else deemed registration. Then so there is concept of deemed registration. So in 3-4 places deemed registration will be coming. So all these deemed registrations you can see in the next page. So in this chart itself you can remember, first you have opted for Aadhaar authentication or not? No. Then what is the time limit within which they need to conduct the physical verification? 30 days from the date of application. If they have not completed, then registration deemed to be granted. Now you made the application with authentication, yes. Authentication completed within 15 days, no. Then what is the time limit within which they need to conduct physical verification? 30 days after expiry of that 15 days. If they have not granted registration within that time, then registration deemed to be granted. Suppose Aadhaar authentication opted, they completed within 15 days and they gave a notice, and you have replied to that notice within 7 working days. After that, within 7 working days, if they have not given registration, then registration deemed to be granted. Or you completed the authentication based on risk parameters, they are taking it for physical verification. Then 30 days from the date of application, they need to grant, otherwise it will be registration deemed to be granted. Based on risk parameters, they need to grant, but they have based on risk parameters, they have not taken it. Means normal case. Normal case, from the date you complete the authentication, within 7 working days, they need to grant, otherwise registration deemed to be granted. These are the 5 cases where there is deemed registration, that is only this point. Then Aadhaar authentication, if opted, is mandatory and can be completed within 15 days from submission of part B, and date of authentication or 15 days, whichever is earlier is taken, whichever is earlier shall be deemed to be the date of submission of application. Physical verification shall be conducted within 30 days of submission of application, that is 15 days from that if authentication is not done. And there is one amendment, that is now they have brought in biometric Aadhaar authentication. So this was old, like OTP verification etc. and all, but now they have brought in biometric Aadhaar authentication for all states and union territories for the purpose of completion of registration application, which means, so this OTP verification and all is gone. You need to go to the enrollment center or you need to visit the nearest place wherever this biometric is accepted. So there you need to put the thumb impression and you need to complete the authentication, that is this. Then to whom Aadhaar authentication is applicable? If you are an individual or sole proprietor, definitely, so citizen of India means Aadhaar authentication applicable. What if you are not a citizen of India, foreign citizen? For foreigners there is no Aadhaar number, na? So therefore Aadhaar authentication is not applicable. Then next, HUF. In HUF, who should undergo authentication? Karta. What about other members of the HUF? They are not required. In case of partnership firm, only the working partners are required to undergo authentication, other partners not required. Then in case of company, body corporate etc., authorized signatory required to undergo, so others are not required. So you may get a theory question, who are not required to undergo authentication? First point, not a citizen of India. Number 2, members other than Karta of HUF. Number 3, that is partners other than managing partners. And number 4, members other than authorized signatory. Then government and its family members, we have already seen 4, central government, state government, local authority, statutory body or PSUs. Then others, UIN holder, unique identification number holder, also not required to undergo authentication. And sir, at the time of making application I have not undergone authentication, should I complete the authentication at a later point of time? Yes. So even though at the time of making application I did not select authentication, but at a later point of time I need to get the Aadhaar card and I need to complete the Aadhaar authentication, because literally Aadhaar authentication is mandatory even after registration. But for these people, at the time of registration also Aadhaar authentication not required, at a later point of time also Aadhaar authentication not required. What is the time limit for making application for registration? So usual time limit will be 30 days from the date they are liable to get registered. However, in case of CTP and NRTP, at least 5 days before commencement of business, they need to make application for registration. And in all other cases, 30 days from the date they are liable to register. So when they are liable to register, in case of section 24, whenever they commence a business, in case of registered under arrear law 17, transfer of business whenever there is a transfer, or so certificate of incorporation by ROC, any other case whenever aggregate turnover exceed threshold limit. Then deemed registration, section 26. What does it mean? If a person is registered under CGST Act, they are deemed to be registered under SGST Act and vice versa. And same way, if their application for registration is cancelled under CGST Act, their application is cancelled under SGST Act also. Then special provisions relating to CTP NRTP, section 27. So what are those cases? First, every casual taxable person and non-resident taxable person is compulsorily required to get registered CTP other than handicrafts, okay? And whether the type of registration given to them is temporary registration or permanent registration. Temporary registration. What is the maximum period for which they can be registered? 90 days. It can be extended for a further period of 90 days, that is not exceeding 90 days. And on sufficient cause being shown by the said taxable person, proper officer extended the said period of 90 days by a further period not exceeding 90 days. And advance tax to be paid at the time of registration plus extra amount for extension period, okay? So this is what generally you are making, application for CTP NRTP. you have to estimate your tax liability. What is that estimated tax liability? Gross liability or net liability? Net liability. At the time of submission of application for registration, make an advance deposit of tax for an amount equal to the estimated net tax liability. What is net tax liability? Gross liability minus ITC, okay, for the period for which registration is sought. Suppose where any extension is sought, for that extended period also again you need to deposit. The problem is that these people don't have physical place of business. They may run away. So then how to recover the GST? That's why they need to deposit the advance tax. This advance tax will be deposited in the cash ledger. So depending upon their actual liability, it will be adjusted. What if there is some excess balance in cash ledger? They can get it as a refund. Suppose if there is any shortfall, they need to pay that. So advance tax shall be credited to cash ledger, which shall be adjusted against final liability determined. Excess balance in cash ledger can be claimed by filing application for refund. In RFD 1, there is no time limit to claim such refund. Already we know. So for balance in cash ledger, we can claim any time. Also in this case, refund is not subject to unjust enrichment. Then look into the distinguishing points. CTP means what? Who? A person who occasionally, regularly if they are coming and going, they are not called as CTP. Occasionally undertakes transaction involving supply of goods or services in the course or furtherance of business, whether as a principal or agent. And do they have any fixed place of business here? No. In this state, they don't have fixed place of business. Whereas NRTP also comes occasionally from outside India to India. And do they have any fixed place of business or residence in India? No. So they are called as NRTP. And casual taxable person undertakes transaction in the course or furtherance of business. Why they gave that? Otherwise, every time we go to another state to visit our relatives, then CTP registration is required for that, okay. So that's why in the course or furtherance of business. But NRTP, no such requirement. If they are visiting India and if they are coming on, purpose to make the supply of goods, no. So that may be in the course or furtherance of business or not in the course or furtherance of business, no such requirement is there. And CTP has a permanent account number. Using that permanent account number, they will be registering. Whereas NRTP don't have a permanent account number, then how can they register? In that case, so they can take registration using passport. And casual taxable person, regular registration. But NRTP, so special registration, GST REG 9. And CTP will file the regular returns, that is GSTR1 and GSTR3B. But NRTP will file GSTR5 as the return. Then Section 28 deals with amendment in registration. What is amendment in registration? Initially, I have submitted some details, and if there is any change in those details, I need to make an application for amendment in registration. If I am not submitting application for amendment in registration, so my ITC may be suspended under Rule 86A. Also, my recipient's ITC also may be suspended under Rule 86A, correct? If supplier is not in existence or not doing business from the place where registration is obtained, or recipient not in existence or not doing business from the place where they have obtained registration. So amendment in registration is very, very important. But in this case of amendment in registration, remember one point: if there is any change in permanent account number, then there is no amendment in registration. Get a new registration and cancel the old registration. Whether we need to cancel old and get new, or get new and then cancel old. Get new, transfer the ITC and then cancel the old registration. You can see that if there is any change in constitution of business that requires change in permanent account number, amendment in registration is not applicable and they need to obtain fresh registration, okay. Now, how the amendment will be? Either it can be core fields or non-core fields. Core fields means change in name, change in address, change in top management, including partners or managing committee, board, karta, etc. So in this case, amendment is taking place subject to approval by the proper officer. Whereas non-core field, whenever you make application for amendment, immediately it will be taking place, okay. And the type of amendment is prospective or retrospective. Retrospective amendment in registration is possible only with the order of the commissioner. Means usually it will be prospective. If we need a retrospective amendment, then commissioner should approve. Then look into procedure for amendment in registration. So what is the procedure? First, an application should be made for amendment in registration, and the time limit is within a period of 15 days of such change. That is, whenever there is a change, from there within 15 days we need to make application for amendment, and after making application for amendment 15 days, not 15 working days, 15 days, then the officer will verify whether this amendment to be done or not. 3 fields: change in name, change in address, change in top management. If they need any clarification, they will give a notice. What is the time limit within which notice will be given? 15 working days. Okay, 15 working days. Here 15 days, here 15 working days, and thereafter we need to give the reply. We need to give the reply. What is the time limit within which we need to give reply? 7 working days. And thereafter, within 7 working days, either they will accept the application or reject the application. Correct or not? So within 7 working days of receipt of submission, they may reject the application or order of amendment. What is the time limit within which they will order for amendment? Carefully listen. First we made application. From there 15 working days. If they are not giving notice, they need to order, or they gave a notice within 15 working days, thereafter reply within 7 working days, thereafter within 7 working days they need to give the order. See there, within 15 working days from the date of application or 7 working days from the date of reply, else deemed to be amended. And in case of amendment in non-core field, after submission of application, non-core field, no approval, just OTP verification shall take place in the portal subject to OTP verification. Then next one, you see cancellation of registration. So what are the situations that leads to cancellation of registration? So I have given one mnemonic. So look into the next page. Frantic violation of bailer. All the situations that leads to cancellation of registration, I just listed out in this. So these are the cases where registration can be cancelled. Frantic violation of bailer. Frantic, F for fraudulently obtaining registration. So registration obtained by fraud. Okay. Then R, returns not filed within 6 months or 2 quarters. So therefore continuous 6 months or continuous 2 quarters if you are not filing return. Then A, annual return. By whom? By a person opting for composition scheme. Not filed within 3 months after due date. So what is the due date? 30th June. Not 30th April. Now 30th June. So 30th June, within 3 months if they are not filing annual return. Then N, no longer liable to be registered. If they are no longer liable to be registered, then also they are not required to be in registration. No longer when maybe their aggregate turnover falls below threshold limit, or they stopped making interstate supplies, etc. and all. Next, T, transfer or discontinuance of business. I, invoice without supply or incorrect invoice. Or C, change in constitution of business. So these are the cases where their registration will be cancelled. See, that cancellation can be either by them or by the officer, but you remember these are the reasons for cancellation of registration. So what is frantic? F for fraudulently obtaining registration. Then R, returns not filed for continuous 6 months or 2 quarters. A, annual return composition scheme not filed within 3 months after due date. FRAN, no longer liable to be registered. T, transfer or discontinuance of business. I, invoice without supply or supply without invoice or incorrect invoice. Next, C, change in constitution. Change in constitution means what? Proprietorship to partnership or partnership to company, etc. Okay. Then violation of bailer. This violation of bailer, violation of is common. Violation of is common for each and every point. What is B? Bank details to be furnished. So violation of furnishing bank details. Okay. So they have to submit the bank details within 30 days or date of filing, first return, whichever is earlier. If they are not doing, that leads to cancellation of registration. Then anti-profiteering. So anti-profiteering order will be passed on to them to pay the penalty or to pay the profited amount. If they violate it, that will lead to cancellation of registration. Then violation of ITC. So they have excess availed ITC, means they have availed ITC in 3B more than their 2B. Then liability, L for liability in GSTR 1 greater than GSTR 3B, or they have violated payment of 1% through cash ledger, electronic cash ledger 1% payment. Or last one is the amendment, that is they have not filed the returns. Carefully listen. They have not filed the returns. When they are consecutive 6 months not filing the returns, their registration will be cancelled. After their registration is cancelled, they will request for revocation of cancellation, and the revocation order has been passed. After revocation order, for the period of cancellation, they should file the returns within 30 days. If they are not filing that returns, again this will lead to cancellation of registration. So returns not filed within 30 days of revocation order. Okay. So that is the amendment which you can see previous. That is, registration of a person is cancelled and such person made revocation application and proper officer passed revocation order, but the returns during the period of cancellation to revocation not filed within 30 days from revocation order. Got it? So all those points which I have given here, I just converted into a mnemonic here. Okay. Now these are the three cases. Out of this, there are three cases where the registered person can make application for cancellation. What is that? Transfer or discontinuance of business, change in constitution, no longer liable to be registered. And in all those cases, proper officer can initiate cancellation of registration. Then whether other authentication is mandatory for registered person filing application for cancellation of registration? Yes. Otherwise what will happen? Suppose because you are not getting exam leave, you will also log in the client name and you will make application for cancellation. So then the client will take a principal on the fifth gear. You understood? So for that reason, other authentication is mandatory. Whenever you apply for a cancellation, so he will get the message successfully for initiating cancellation of registration. You enter this OTP like that. So he will call the principal. You understood or not? So other authentication is mandatory for making application for cancellation. Even a TDS TCS deductor also can make application for cancellation of registration, no restriction. Then look into the next page, suspension of registration. So that is, once a registered person has made application for cancellation of registration, or the proper officer seeks to cancel the registration, the proper officer may suspend his registration. See, suspension of registration is mandatory, suspension is optional. Suspension is like a stage before cancellation. So they will just make your registration like inactive. They are not making inactive, like inactive. Like inactive means what? You cannot file returns and you cannot issue invoices, you cannot generate e-waybill like that. Okay. But officially you are not called as unregistered. Only you will behave like unregistered person. That is what suspension of registration. So once a registered person has applied for cancellation of registration, or proper officer seeks to cancel his registration, the proper officer may suspend his registration during the pendency of proceeding relating to cancellation of registration filed by such registered person. And suspension of registration can be without affording reasonable opportunity of being heard. Now what is the procedure for cancellation of registration? Two cases. Either you can make application or officer can initiate cancellation. If you make application for cancellation of registration, the proper officer has to decide within 30 days from application whether the cancellation to be given or not. If he is satisfied, he will order the cancellation, otherwise he will reject the application. But mostly it is number two. They will initiate cancellation of registration, so they will give a notice and you need to give reply. Usually what is the time limit within which reply to be given? 7 working days. And if they are satisfied with your reply, then they will drop the proceedings. If not, they will order for cancellation. What is the time limit within which they need to decide that? 30 days. But unfortunately that 30 days is not mandated. It is only given to them as a direction. So time limit not prescribed in rules, but as per CBIC direction, it should be completed within 30 days from the show cause notice date. Then you can see in the next page, suspension. What is the period for which their registration will be suspended? First, suppose if you make application for cancellation, you will select one date from when your registration needs to be cancelled. That date, or you will apply whichever is later. Okay, whichever is later. This is another place where we were coming across whichever is later. The registration shall be deemed to be suspended from the date of submission of application or the date from which the cancellation is sought, whichever is later, pending the completion of proceedings for cancellation. So till the time they conclude the proceedings, your registration will be suspended. For example, you make application on 1st of March and you selected 25th of April. So from 1st of March, 25th of April. So 25th of April only your registration will be cancelled. You made application on 1st of March by selecting somewhere like 20th of February. Then from 1st of March, whichever is later, it starts till the conclusion of cancellation proceedings. Where the registration has been cancelled by department, they will specify one date. From that date till the conclusion of cancellation proceedings, your registration will be cancelled. Now you tell me, during the time when your registration is suspended for your outward supplies, can you give tax invoice? No, you cannot give tax invoice, means you cannot, like make taxable supplies, in the sense you cannot give tax invoice and recover the GST, but you can make sales like an unregistered person. And on your inward supplies, you cannot avail ITC, means you cannot file the returns. A registered person whose registration has been suspended as above shall not make any taxable supplies, that is, can make taxable supplies but cannot issue tax invoice during the period of suspension, and shall not be required to furnish any return under section 39, that is GSTR 3B. And the suspension of registration shall be deemed to be revoked upon completion of cancellation proceedings. So as and when the cancellation proceedings is completed, so it will be deemed to be revoked. Okay, suspension is deemed to be revoked. Now, during the suspension period, can I file the returns? Yes, you can file the returns, not for the suspended period, but for the period before suspension of registration. So, for the suspended period only, you cannot file the returns. For example, you have not filed returns for consecutive 6 months. So, they gave a notice and they initiated suspension. So, till the conclusion of cancellation proceedings, at this stage, you can file the returns. So when you file the returns, but these returns are pertaining to which period? For the period before suspension, automatic revocation of suspension, and there won't be any cancellation of registration. That facility is there. Then what is the procedure? Suppose if the cancellation order is passed. So at the conclusion of cancellation proceedings, they decided that your registration should be cancelled. So they have cancelled your registration. What's next? Then you need to make an application for revocation of cancellation. What is the time limit within which you need to make application? Within 90 days. It can be extended for a further period of 180 days, and by either joint commissioner or additional commissioner or commissioner. But ensure that all the pending returns before the date of cancellation, all the pending returns before the date of cancellation, you are filing before making application for revocation of cancellation. Then once you make application for revocation, proper officer satisfied, within 30 days, they will revoke the cancellation order. Otherwise, they will give a notice. As usual, what is the time limit for reply to notice? Within 7 working days. Thereafter, within 30 days, if they are satisfied, they will revoke the cancellation order or they will reject the application. Is Aadhaar authentication mandatory for making application for revocation of cancellation? Yes. Now, remember, up to the date of order of cancellation, whatever returns you have not filed, you should file it before making revocation application. Is it clear? Then from the date of order of cancellation till the date of revocation order, got it? From the date of order of cancellation till the date of revocation order, you have not filed returns. Those returns you need to file within 30 days from revocation order. If you are not filing, that will again lead to cancellation of registration. Is it clear? So that is about registration. So all these small points, if you remember, in this sufficient, because mostly you will not get big questions. Only in MCQs etc. and all they will be testing this. Then we are now discussing returns under GST. Look into returns under GST, page number 148. Purely this is for MCQ only, nothing else. And in this returns under GST, so carefully listen. There is one surprise also for you. Okay, nothing here. Okay, if I tell like that, you will sit. That's why. So, time limit for various returns. Surprise is that we are completing. That's why. I mean, We are completing the major portion. Only one first chapter and second chapter is left, which already I have uploaded in my YouTube. You can see that later also. Okay. So see this time limits for various returns. First return is GSTR1, and GSTR1. First we need to understand what are the returns and who is required to file that return and what is the time limit for filing that return. GSTR1 is to be filed by every registered person. What does it contains? Details of outward supplies. And what is the time limit by which GSTR1 needs to be filed? Monthly means 11th of the month following every month. Quarterly 13th of the month following every quarter. And who is required to file GSTR1 quarterly? A person who opted for QRMP, quarterly return monthly payment. And they have brought in GSTR1A. GSTR1A is for amending the details furnished in GSTR1, and when it should be filed? Before filing GSTR3B of the respective month. For example, for July month, by 11th August, we are filing GSTR1, and the 3B needs to be filed by 20th of August. Between this 11th August to 20th August, 9 days. If I want to rectify the GSTR1, can I rectify it? Yes, of course I can rectify it. That will be done in GSTR1A. Suppose if I rectify that in GSTR1A in 2 days, that is 12th and 13th, it will be reflected in 2B of the recipient. If that crosses, then gone. In 2B of this month it will not come, in 2B of the next month it will come. Is it clear or not? So GSTR1A, it can be filed even after filing GSTR1. But anyhow I can do amendment in the next month GSTR1, sir. Yes, but why to wait for next month? This month itself I can do the amendment. That's why they brought in this 1A for amending the details furnished in GSTR1 before filing 3B of the respective month. Simple here. Next month means I will add the liability next month, I will discharge the liability next month. Why should I pay next month? 1 month itself before I can pay now. If I add the details and add extra liability, so in the 3B itself I can pay 1 month before they are getting money means, so like a money lender they are behaving here. Okay. Then in case of QRMP scheme, for first 2 months in a quarter, they need to file IFF, invoice furnishing facility, by 13th of the month following every month. Then GSTR3B. GSTR3B is a summary return that contains all the liabilities, ITC, etc. and all, and even late fee interest. And when the 3B needs to be filed, so every registered person is required to file. Monthly means by 20th of the month following every month, and quarterly it is by 22nd or 24th of the month following every quarter. And in which case it will be 22nd. So for GMCA and states below, just visualize India map: Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh, and states below that, including Telangana, Maharashtra, then Tamil Nadu, Kerala, etc. It will be 22nd. For all other states above, Orissa, then Punjab, etc. and all, it will be 24th. 24th of the month following every quarter. So notified states, you remember, underline this: GMCA. GMCA. Okay. So what is that? Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh, and states below that. Next, how the details will be reported in GSTR1. Outward supplies in GSTR1. So there is an amendment in this place. So B2B, B2C. B2B always invoice wise. B2B always invoice wise. Let it be intrastate or interstate. Always B2B will be invoice wise. Whereas B2C, previously large invoices means 2,50,000. Now they have reduced it to 1 lakh. Means B2C intrastate always consolidated, but B2C interstate, if the value of invoice exceeds 1 lakh per invoice, then invoice wise details to be uploaded. If the value of invoice does not exceed 1 lakh per invoice, state wise consolidation. You need to remember just 3 points. Point number 1. So B2B always invoice wise. B2C intrastate always consolidated. B2C interstate state wise consolidation if the invoice value does not exceed 1 lakh per invoice. If it exceeds, invoice wise. Okay. Then next, CMP 8. CMP 8 is required to be filed by whom? That is composition scheme dealer. What is the time limit? 18th of the month following every quarter. I think this has been rectified. In your book it is there. So corrected. It's already corrected in your book, no? Invoice greater than 1 lakh. Invoice does not exceed 1 lakh. That is already proper only. Then look into this. So CMP 8, 18th of the month following every quarter. GSTR 4 is annual return. Who will file that annual return? By composition scheme dealer. Time limit 30th June of the succeeding financial year. GSTR 5 is a return to be filed by NRTP, non-resident taxable person. So non-resident taxable person needs to file GSTR 5, but their registration is only temporary. So 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier. GSTR 5A, OIDR and OMG supplier. Please add there OIDR supplier outside India and OMG supplier outside India. Both of them will file GSTR 5A. What is the time limit by which they will file GSTR 5A? 20th of the month following every month. GSTR 6 is ISD return. ISD return time limit is what? 13. Then 13th of the month following every month. Then GSTR 7, GSTR 8 already we know. TDS, TCS time limit 10th of the month following every month. GSTR 9 and 9B to be filed by annual return. Every registered person, 9B by e-commerce operator. 9 series always remember the time limit will be 31st December of the succeeding financial year. But who is required to file annual return? GSTR 9, a person whose aggregate turnover exceeds 2 crores. Who is required to file GSTR 9C reconciliation statement? A person whose aggregate turnover exceeds 5 crores. So aggregate turnover exceeds 2 crores and 5 crores, 9C 9. Then GSTR 10, final return. Final return to be filed by a taxpayer whose registration has been cancelled. What is the time limit for filing final return? 3 months from the date of cancellation or date of cancellation order, whichever is later. But remember, this 3 months is common for both. Okay. So this 3 months from date of cancellation or order of cancellation, because while reading you may get confused, you write that. So 3 months from date of cancellation or 3 months from order of cancellation. This 3 months is common. So date of cancellation is the date on which your registration is cancelled. Order of cancellation is the date on which you got the order copy. So whichever is later, the 3 months will be constant. Okay. Then GSTR 11. Who is required to file GSTR 11? GSTR 11 is to be filed by UIN holder that contains the details of inward supplies. And this is whichever is later. So please make note that is whichever is later. Then look into the special points on returns. Sequential filing of returns. What is that? That is, first without filing GSTR 1 of this month, I cannot file the GSTR 3B of this month. And without filing GSTR 3B of previous month, I cannot file the GSTR 1 of this month. So like that we have sequential filing of returns. Then government on the recommendations of GST Council may allow a person to file GSTR 1 even if GSTR 1 is not filed for prior periods. That is, usually without filing GSTR 1 for previous periods, you cannot file the GSTR 1 of this period. But in some special cases, government may allow a person. Then this already we saw section 38. Then this is rule 88C and 88D. 88C will come into picture when liability in GSTR 1 is greater than liability in GSTR 3B. 88D will come when ITC in GSTR 3B is greater than ITC in GSTR 2B. But in both the cases, notice will come. Here 1B, here 1C, DRC 1B, DRC 1C. Upload in portal, email, 7 days, everything same. Pay the difference, explain the difference, partial payment, that is also same. But this place where there is a difference. So in 88C what will happen? They will do direct recovery. They will do direct recovery under section 79. Whereas in case of 88D, if you have taken the ITC, first they gave a notice now. You have to reply to that notice. If no proper action has been taken by you, then they will initiate 73-74, means another notice will come. Now the 73-74 notice will come and thereafter it will go as per 73-74. And till the time you are doing that, that is till the time you are paying the difference or explaining the difference, what will happen? So this is common, these 4 points are common. Your GSTR 1 will be blocked. Because of GSTR 1, your 3B gets blocked. Because of not filing 1 and 3B for consecutive 2 tax periods, e-way bill gets blocked. and this will also lead to suspension of registration. Okay, because in suspension of registration, frantic violation of bailer, you see that, turn the pages and see, in that frantic violation of bailer, in that bailer L, liability in GSTR 1 greater than liability in GSTR 3B, and ITC, excess ITC availment. Can you see that ITC default is there in that? So that will lead to suspension of registration or cancellation of registration. Then who are not required to file GSTR 1 or GSTR 3B? Remember tonic in the T square, T for TDS TCS deductor, O for OIDR supplier, then N for non-resident. See, OIDR includes OMG also. Okay. Then N for non-resident taxable person, I for input service distributor, C for composition scheme. Because all these people anyhow they are filing some other return. That's the reason why GSTR 1 or 3B not required. Whereas annual return is not required to be filed by CAG tonic, CAG. That is a person whose books of accounts are subject to audit by Comptroller Auditor General. T for TDS deductor, but TCS deductor is required to file GSTR 9B annual return. Then O, same OIDR supplier, includes OMG. Then N, NRTP. I, input service distributor. C is not composition scheme, casual taxable person, because composition scheme dealer will file annual return in GSTR 4 na. Then late fee for delay in filing return, section 47. So what is the late fee? Remember, if it is GSTR 1 or GSTR 3B, mostly the questions will be on this only. GSTR 1 or GSTR 3B, nil return means 25 rupees, nil return means 10 rupees per day. Other than nil return only 25 rupees per day. Okay, nil return 10 rupees per day, other than nil return 25 rupees per day. What is the maximum? Nil return 250 rupees. Other than nil return, if my turnover exceeds 5 crores, 5,000, exceed 1.5 but does not exceed 5, 2,000, does not exceed 1.5 crores, 1,000. Okay, but this is under CGST Act. The same will be payable under SGST Act. Then GSTR 5, 5A and 6. In all these cases also nil return same 10 rupees per day, other than return 25 rupees per day. But maximum we don't have any other number, only 5,000, 5,000. Then GSTR 7, so 25 rupees already we know, 25 rupees per day subject to maximum 1,000, 8 is 100 rupees per day subject to maximum 5,000. GSTR 9, 9C, 9B etc. See there, first if it is per day, aggregate turnover during previous year does not exceed 5 crores, 25. Exceed 5 but does not exceed 20, double 50. Exceed 20, double 100. Okay, and what will be the maximum? First two cases 0.02% of turnover, next it will be 0.25% of turnover. Any other return, it will be 100 rupees per day subject to maximum 5,000. But GSTR 4 is there na. GSTR 4, who will file GSTR 4? A person who is opting for composition scheme will file GSTR 4, and so GSTR 4 limit, composition scheme means 1.5 crores. So just remember this as the limit, GSTR 4. Okay, that is nil return 10 rupees per day, other than nil return 25 rupees per day, maximum 250 and 1,000. This is GSTR 4 late fee. Then next, an equal amount of late fee is payable under SGST Act also, and 3 cases they can file the nil return through SMS. Who are they? GSTR 1, 3B and CMP 8. But remember, all the entries in the return should be nil. Notice to return defaulters. There is a GSTR 3A notice in assessment we have discussed. Whenever you are not filing returns, one notice will be given, and in pursuance to that notice we need to file return within 15 days. If you are not filing return within 15 days, that will lead to best judgment assessment under section 62. Then rectification of returns, GSTR 1 and 3B can be rectified by 30th November of next financial year or date of filing annual return, whichever is earlier, but the rectification should not be on account of any audit inspection. Means voluntarily you should identify and you need to do the rectification, not because of audit objections raised by the department. Then GSTR 1 or IFF shall be blocked or restricted in the following cases. So when your GSTR 1 will be blocked, just now 2 cases we completed. What is that? 88C, 88D. What is 88C? When my liability in GSTR 1 greater than liability in 3B or ITC in 3B greater than ITC in 2B, these two, plus if I am not filing GSTR 1 of the previous tax period, I cannot, okay. So either previous month or previous quarter. Then one more point you remember, not furnished bank details. If you are not furnishing the bank details within time, these are the 5 cases where our GSTR 1 will be blocked. This can be asked as a theory question. Then this is the new GST return structure involving GSTR 1A and IMS. See this. So between first month to between first to 11th of the month, that is say July month over, August 1st to August 11th, they will be, supplier will be adding the invoice in GSTR 1 and they will file GSTR 1 by 11th, correct? When they file GSTR 1 by 11th, then between 11th to 20th, they can file the GSTR 1A to do the amendment to this GSTR 1. So by 14th, if they file GSTR 1A, so amendment effect in 2B of the recipient. If they are, that is immediately the same month. If they do it after this date, then amendment effect will be there in 2B of the recipient in the subsequent month, okay, not in this month but in the subsequent month. Then so but GSTR 3B of the supplier will get affected, yes. Amendment effect in 3B of the supplier. You understood these points here, again I am repeating. So between 1st to 11, we will add the invoices, that is supplier, from supplier point of view I am discussing. So we will add the invoices. As soon as we add the invoices, we will file the return by GSTR 1 by 11th. Thereafter we can amend. What is the time limit for amendment? By 20th we can amend. But if you amend it by 13, that is before 14, the advantage is that it will be reflected in the 2B of the recipient. If you do it beyond that, in your 3B only effect will be there, but in the recipient 2B it is going to have effect in the next tax period. Is it clear? Now, sir, what happens between 1st to 11th? 1st to 11th, what will happen to the recipient? So 1st to 11th, they have created a new portal called as IMS. That is invoice management system. In that invoice management system, the recipient, you are the recipient. What you should do is that you will get all the invoices raised by your supplier. You need to do 3 actions. Either accept. If you accept, it will go to 2B. Reject. It will not be coming in 2B. Why will you reject? Block the credits. Invert supply used for non-business purpose. Invert supply used for exempted. You reject. It will not come in 2B. Pending. You neither accept nor reject, it will be pending. So that will be carried forward to next month to be. You know why? Because you don't want to avail ITC because you have not received the goods. Only invoice is there, keep it pending. So next month you can take. So like that there are some condition for availment of ITC, you keep it pending. So you can take it in the next month. Suppose if you have not done any action in IMS, automatically all the invoices will come in 2B. So see this. Invoice management system, action either rejected, pending or accepted. If it is accepted, it will go to 2B. No action also deemed accepted, it will go to 2B. Rejected, it will not come. Pending, transfer to next month IMS. So whenever it goes to 2B, so now what will happen? So how much you can take ITC in 3B, recomputed 2B, that is draft 2B. Whatever is the draft 2B minus rejected invoices. Rejected invoices will be gone, pending invoice also will be gone. So remaining only will be able to take ITC. Is it clear? Next. This is the new GST return structure that we are having now. So not all invoices will come now in 2B because you need to do this action. When you are doing this action, accordingly only this accepted will come. So this pending and rejected will be gone. And thereafter, suppose lot of people are not doing this action actually. So deemed to be accepted, all the invoices will be coming. And all returns, including annual return, except CMP8, whatever returns that we have seen above, everything can be filed belatedly, but before 3 years from its due date. Okay. Next, look into next section, section 48, role of certified GST practitioner. So what a GST practitioner can do, they can make application for registration, they can file the returns, and they can file intimation to pay tax under composition scheme or withdrawal from composition scheme, or they can make application for refund. They can act as authorized representative. They will furnish the details for generation of e-way bill. They will furnish the details of challan in ITZ4, and they can make an application for amendment of unique enrollment number. These are the only activities that can be done by GST practitioner. And who can become a GST practitioner? They should be citizen of India, person of sound mind, not adjudged as insolvent, and not been convicted by a competent court for an offence with imprisonment not less than 2 years. Means greater than 2 years. Up to 2 years if they are imprisoned, okay, they can become GST practitioner. Responsibility for correctness of particulars. Who is responsible for correctness of the particulars? Not GST practitioner, registered person only. So every written file should be made available to the registered person. Registered person should agree to that. Then only it will be filed by the GST practitioner. So therefore, if the registered person is not agreed, deemed acceptance. So GST practitioner can file. But if there is any mistake, that registered person's head only will roll. Then next, you can see the next area, QRMP scheme. To whom QRMP scheme is applicable? If my aggregate turnover during the previous year does not exceed 5 crores, and I will be filing GSTR1 on a quarterly basis by 13th of the month following every quarter, and 3B by 22nd or 24th of the month following every quarter. But how I will pay tax? Monthly. By which date? 25th of the month following every month in the first month and second month of the quarter. What about third month? Anyhow, all these 3 months I will be filing 3B by 22nd or 24th. So monthly payment of tax through PMT6 using fixed sum method or self-assessment method by 25th of the next month for 2 months in a quarter. And B2B invoices. So B2B invoices, if I am filing GSTR1 on a quarterly basis, my recipient will take ITC also on a quarterly basis. So due to that reason, B2B invoices, I will be reporting in IFF, invoice furnishing facility, and which will be reflected in 2A or 2B of the recipient. It is not mandatory, it is optional, but because of the recipient pressure, I will definitely do it. So it is mandatory only. And QRMP scheme is GST and wise, not like composition scheme all in all out, which means I have 4 registrations. For each registration, I can decide whether to go for QRMP or for normal scheme. And what is the time frame to opt in? 1 month after commencement of the quarter and 2 months before commencement of the quarter. For example, April 1st, April to June I want to go for QRMP. 1 month after means by April end I need to decide. And 2 months before commencement of the quarter, that is February 1st. Between February 1st and 30th April, I need to decide for going into QRMP. And condition to opt in, last return should have been filed. GSTR1 or IFF facility, that is IFF is optional, and if I go for IFF, the advantage is that first month and second month I will file IFF, the details will come in GSTR1, otherwise all 3 months I have to add GSTR1. And one stupid point is there in that, that is monthly I can add invoices only up to 50 lakhs. This may be tested as MCQ. The said details of outward supply not exceed 50 lakhs in each month. What are the methods I have? So 2 methods I have, fixed sum method and self-assessment method. In fixed sum method, what I will do, I will see last 3B file. Last 3B file is quarterly. In that quarterly, net liability into 35%, I will take as this month liability and pay for first month and second month. If the last 3B is monthly, net liability into 100%, I will take and I will pay for the first month and second month. What if there is some differential amount? In case of a differential amount, that is for example, I paid under, for example, last quarter it was 1 lakh. 1 lakh into 35%, 35,000 I paid. And my actual liability is 40. Whether I need to pay interest on that 5,000 rupees? No, I don't have to pay any interest on that 5,000 rupees if that 5,000 rupees is paid by the due date of 3B. And there is another method, that is first system computed method, that is whatever method they are telling I need to follow, that is fixed sum method. Another method is there, self-assessment method. I can do it on my own. That is self-assessment method. I can compute actually how much is the liability, how much is the ITC, etc. So that is self-assessment method. But if I go for self-assessment method and if there is any difference in tax, say I deposited 35,000 assuming that 35,000 is my liability, ITC is not in my control because my 2B may be properly reflected or not reflected. It is not in my control. I thought this is ITC and I have paid, but my actual liability gone for 40,000 rupees. Now on that 5,000 should I pay interest? Yes, that is this. Fixed sum method, so you need to follow whatever they are telling. Quarterly filer of 3B, 35% of tax liability in the preceding quarter. Monthly filer, 100% of tax liability in the preceding month. Then self-assessment, you need to pay whatever is the actual amount. Any change in 3B? No. Compulsory opt-out, whenever your aggregate turnover exceeds 5 crores. Whether late fee is applicable in this case, of course late fee is applicable for delay in filing GSTR1 or 3B, but not for payment of tax. For delay in payment of tax, there is only interest. See this interest may be tested in exam. Interest on account of short payment or non-payment under QRMP. First, fixed sum method. Tax with respect to first month or second month not paid by 25th of next month. So first month, for example April and May, you need to pay by 25th of May, 25th of June. If you have not paid by that time, interest will be payable at the rate of 18% per annum for everyday delay. This is common between fixed sum method and self-assessment method. Whereas differential tax means, I told you, actual liability minus whatever money that you have already paid. If it is fixed sum method, on differential amount you don't have to pay any interest if the differential amount is paid by the due date of 3B. Whereas in self-assessment method, on the differential amount from 26th of next month till the time you pay the differential amount, you need to pay the interest. This is the only place where there is a difference. Then suppose if 3B filed late, if 3B filed late, normally interest will come, let it be FSM or SAM, from the due date till the actual date of filing 3B, you have to pay the interest. Interest not payable on differential tax under fixed sum method if such differential tax is deposited by the due date of 3B. Then there is something called as first return, section 40. What is first return? Every registered person who has made the outward supply from the date they are liable to get registered till the date they are getting registration certificate, all those details you need to pay GST now. From the date you are liable to get registered till the date you are getting registration certificate, you need to pay GST on those outward supplies. So those details also you need to include in the first return. That is this: every registered person has made outward supplies in the period between the date on which he become liable to registration till the date on which registration has been granted shall declare the same in the first return furnished by him after grant of registration. So with this we completed returns also. So almost all chapters got over except for two, that is introduction to GST, basic concepts, and supply under GST. So for that also it is already there in my YouTube channel. Now what you need to do is that just you need to revise this, whatever I have discussed, that is sufficient. And for the sake of convenience, what I am planning is that as I completed all these chapters, so like small videos I will put it in my channel as a playlist. So because you need to go to the video and you need to go to the timeline and you need to search, that may be difficult for you. So anyhow I am not earning anything out of it. So if I am earning, I would have made you to go there and see, etc. so that I get the views, etc. Not required, no views, nothing. So you be successful, that is sufficient. Sometime in future somewhere you will clear CA and you will be going somewhere. At that time remember this ladder, don't forget, okay? And therefore I will put the video separately, you can watch that. So what I feel is that, whenever you are like eating food, anyhow you watch reels or YouTube and you eat, at the time watch this video and eat. So traveling or wasteful time, so night sleeping, you keep mobile like this, now you keep mobile like this and watch and sleep, you understood? So all these unproductive times you should remember indirect tax, got it? Productive times you should spend on other subjects. So DT, other subjects you need to spend on productive time. Unproductive time and all you will have. That unproductive time, maybe bathroom, etc. and all. So if you have the habit of taking mobile to bathroom, don't watch anything else. Only watch this YouTube video of indirect tax, got it? So that in that times you can complete the revision of this and you can be into touch with the subject, got it? And so this is not a full stop. So because anyhow we are going to continue our journey till the time exams are there. So whatever tips required, all those things I will put it. So already major questions I have discussed, but some more questions also I will be discussing and I will be posting it in my YouTube channel, like Mighty 50 I will be posting it. And then even RTP discussion also I will post, and even if time permits we will do some MCQ also, live MCQ also we will plan something, and I'll ensure that you are getting the benefit and I am there with you till the time you are going for exam. Don't worry about my subject, I'll take care, okay? And so I need one request from you. So that is, can you take one paper? In that paper, you fill in, so okay, fine, let's conclude YouTube.